Good morning and thanks so much for tuning in to India Market Open with me, Neeraj Shah and Alex Matthew. And well, it seems to be a day wherein Donald Trump, Elon Musk and the Fed, all three are in focus, Alex.
Yeah, no doubt. And from our perspective, of course, Elon Musk, the idea of Tesla Wise being made available at an affordable price, and affordable being relative, of course, is a big question.
That plus just because everybody is on X, will X see another fundraise? So that could be interesting. But the other piece is also that how the Russia-Ukraine conflict settlement is shaping up in a completely different fashion every different day. Classic Donald Trump, yeah?
So basically his strategy seems to be to approach the table, to talk to people and then overturn it completely. So get rid of the table completely and then we'll see what happens.
Yeah.
So let's talk about some of what has occurred overnight, because some of that is going to have a bearing on our markets as well. First of all, US equities marched to a new all-time high, and this is despite what came through in the minutes of the Fed's last meeting, which took place on the 28th and 29th of January. The S&P 500 ended with narrow gains of about 0.25%, and the Dow ended higher by about 0.2%. The Nasdaq Composite ended just about flat with a positive bias. The early rises in the Asia-Pacific region started in the red, and in fact, let's see how they're trading right now. Onshore markets in China, there's a lot happening in China that could change the course of those markets. But as things stand, they're all in the red. And early indications are that India will also start in the red. But what transpired in those Fed minutes? They were released, of course, yesterday overnight. And policymakers at the Fed are worried about inflation impact of Trump's policies. Fed officials, in fact, worried more about Trump impact on inflation than the job market and the cooling job market. The participants noted that some measures of inflation expectation had already risen recently, and uncertainty about Trump's policies and the implications added to the reluctance to cut rates. Fed officials are also considering pausing the ongoing shrinking of the balance sheet. The context, of course, is that this is quantitative tightening that has been taking place. But what they're worried about is the March 14 deadline for the raising of the debt ceiling. And this would require Republicans and Democrats to see eye to eye, something that has not happened in the recent past. And they don't want there to be any questions about liquidity in the weeks leading up to that date. So for now, there is a pause, or there is a consideration of a pause in the quantitative tightening. What are the implications of what was said in the Fed minutes? The rapid-fire rate cuts are not in the offing. The current assumption is that the next and only rate cut of 2025 will be in July, and the pause in the balance sheet reduction could cap the dollar strength going forward. Already you've seen it cool off a tad bit from the highs that we saw. It's at 107 or so for the dollar index, which of course measures the strength of the dollar against a basket of currencies. In the Trump watch that we have for you, President Trump has called Ukrainian President Volodymyr Zelensky a dictator. And he said that Zelensky had to move quickly to secure peace or risk losing his country altogether. Just a day before that, Trump had claimed that Ukraine was to blame for Russia's invasion. And Trump has already, as Neeraj pointed out, reversed the efforts to isolate Russia in that call that we spoke to you about earlier on in the week with Putin. It was quite a long call at that. In fact, there's been a response from the Ukrainian administration, with the foreign minister saying that no one could force his country to give in. And he posted on X saying, and I quote, "We will defend our right to exist," unquote. The German Chancellor Olaf Scholz has also said, reportedly, that Trump's dictator comment was false and dangerous. And that is according to the newspaper Der Spiegel.
Yeah. In fact, let's hear out what you have to say when it comes to all the moves that are happening in Alex on Doge or otherwise.
Yeah.
We're ending trillions of dollars in waste, and it'll mean much lower inflation, lower interest rates, lower payments on mortgages, credit cards, car loans, and much higher stock markets. I think the stock market's going to be great. In other words, we will rapidly grow our economy by dramatically shrinking the federal government, and we have to do it.
All right. And by the way, this is also going to be something that will be tracked going forward, because the layoffs that are happening for the government services there are certainly going to have a bearing on the overall job picture in the US, and that's something that is still being figured out. Let's talk about what happened in trade for us yesterday. As we've already pointed out to you, the setup at the start may be a little bit negative for the benchmark. You had foreign institutions that net sold yesterday to the extent of 1,881 crore. And by the way, what we told you yesterday, it was an aberration the day before yesterday because of that Bharti Airtel deal. So they're back to selling again. Domestic institutions have net bought to the tune of about 1,950 crore rupees. The Nifty 50 once again bounced back from very close to those 22,800 levels, but they shuttled between a range of about 235 points or thereabouts. The real action was in the broader markets, because at open itself, or just shortly after that, you had the mid-cap as well as the small-cap index that bounced very smartly from the low point of the day and recovered quite a bit of ground. In fact, steamed past that and ended with gains of about 1.5% for the Nifty mid-cap and 2.2% for the small-cap index. Realty, PSU stocks, PSU banking stocks, metals ruled the roost yesterday, and IT and pharma underperformed. The market breadth was tilted very strongly in favor of the gainers, nearly 4 stocks gaining for every stock that declined in trade.
Yeah, so I mean, I don't know, yesterday was, you can argue, actually a slightly different day. So, okay, one, it was a similar day in that 22,830. And you can argue whether it's 22,800, 22,830, whatever, but that zone is consistently finding respect. So, I mean, I think that's the key litmus test for the week at large. In fact, Dr. C.K. Nara in his piece on Saturday wrote that if this zone is respected for the week, then that becomes a really crucial support, and very likely that the markets will not break it. So I think this remains great. The difference was that it was the first instance of the broader market outperformance in a meaningful outperformance. Mid caps were up 1.46%. The small cap index was up 2.4%. The market breadth yesterday was actually fairly decent, with the small cap index gaining about 2.4% as well. The BSE small cap index, for example. So that was actually a really good thing. And I use the first instance term in a more definitive way, or a more relative way, simply because we've had enough instances, I'm sure, in the last 30 days when maybe the small caps may have done better. But yesterday was this definitive outperformance, right? Small cap, we should bring up the BSE small cap index just to show you the kind of move that index made. 2.4%, while the Sensex and the Nifty actually ended in the red. Nifty 50 was, as you see, ended flat or marginally in the red, but the BSE small cap index, or the Nifty small cap 250, 2.25%. That was the kind of outperformance. So very good to get these charts together. Sumit will talk a lot about cement, so I won't speak too much, but there is some talk of pricing downticks in South India. And therefore, you might want to watch out for southern cement stocks, Andhra, Ramco, KCP, maybe some others as well, India Cements, which all could be in focus and primed for maybe a corrective move as opposed to an uptick. So please bear that in mind. And there are other reasons for cement too, by the way, but I'm essentially talking about hearing about some price downticks in South India. So bear that in mind. And Alex, just as we and we'll hear out Ridham Desai as well, but I just wanted to make this point because it came from an observation of select stocks. Now, you can accuse me of slicing and dicing data, but all I'm saying is that if you're not into the passive Nifty ETFs or passive index funds, and if you're a DIY investor into mutual funds or actually into stocks more importantly, then it's very important to have very active portfolio management skills, because stocks can have a brutally long period of underperformance. And here's some very interesting data, Alex. It is so important to have this. Bajaj Consumer, 14 years on a trot now, 0 return. Mahindra Logistics, 6+ years, negative return. In fact, it's below its IPO price.
Wow.
Listed in 2017, it's below the IPO price. Natco Pharma, 8+ years, negative performance. MGL, 7+ years, zero return. NCC, 17+ years. It's gone all over the place and has zero return. Relaxo, 6+ years, zero return. Shoppers Stop, 10+ years, zero return. And then you think of high quality MNC names, 3M India, we all dwell and rave about the products. 6+ years, zero return. Bosch, 10+ years of zero return. VST Industries, Whirlpool, 8+ years of zero returns. These are blue chip names. They will be great dividend plays. And you can then tell me, if you strip off dividend, then the returns are okay. But, leave that minutiae out. The stocks have given nearly zero returns, and which shows that if you are passively sitting into stocks because they are high quality names and thinking that mera paisa kabhi na kabhi to banega, in a lot of cases, it has been proven that paisa nahi ban raha hai. Not 1 year, 2 years, 3 years out, 5+ years, in some cases 10+ years. So very important that if you are investing into stocks yourself, then you need to be on the top of the story and need to be very, very active as a money manager.
No doubt. And a few more names as well you can throw in. Of course, shorter time frames, right? You're talking about people. Why were we talking about Asian Paints so clearly? A couple of months back, people who had invested in it 4 years back, 5 years back, and had said, okay, this is the stock that I want to bet on. Building materials doing well. Your real estate cycle is on, booming post COVID-19. It hasn't taken off.
Yeah, the last 3 years, virtually no returns. I mean, a 5-year period, 21% return. But, yep, that's the market for you. As before we move into some of the specific stocks, as we've been talking about, the first ever conclave that we did, Ritam Desai of Morgan Stanley made a case of why it might be the best time to invest in the Sensex. Let's hear it.
I like to measure the Sensex in gold ounces. I've been doing that for 30 years. This is the cheapest the Sensex has been in gold ounces since November 2020.
Sorry, can you explain that?
How much Sensex can you buy with an ounce of gold?
Achha, okay, fine.
Okay. So this is the cheapest since November 20. It's like COVID.
Oh, okay. Okay.
So people like to measure the Sensex in earnings term, in INR terms, in dollar terms. I like to also measure it in terms of gold ounces. So
interesting.
This is the cheapest it has been in 4.5 years.
Okay, interesting. Interesting particularly because of the run that gold has had since the start of 2023, right? You're talking about what? 12-13% gains in 2024 alone, and that is building on a stellar return, possibly the best return of any asset class in 2024 as well. All right, let's talk about the stocks that you should watch out for today. And on my list, I've got Cyient Limited. And this is a thumbs up because there is a key management change that you should watch out for. They have appointed Sukamal Banerjee as a Chief Executive Officer and ED, Executive Director, for a period of 5 years. Let me tell you what this is about in just a bit. But before that, Banerjee, in case you didn't know, spent 3 decades at HCL Tech. So he's a veteran of the space. And prior to his appointment, Banerjee was the CEO of digital engineering company Sorient. Now, the appointment is important because it follows the departure of CEO Karthikeyan Natarajan in January. And some of you may remember this, particularly those that invested in Cyient. The stock slid over 20% on the day after that exit was announced. And since then, it is down about 16% or thereabouts. This was 23rd of January or something like that. And so somebody with the kind of experience that they bring to the table, Mr. Banerjee, is going to be a significant development as well. So that's a thumbs up. And you could see a knee-jerk reaction, of course, but see some bit of those erosions maybe wiped out. Let's talk about the next one. And this is something of a play that a lot of people have gotten into. India Glycols has gotten a 1,264 crore order from BPCL for ethanol supply. Of course, these oil marketing companies are doing tie-ups to have increased blending of ethanol in their fuel. The question is whether or not the ambitious targets of the government are going to be met. And for that to take place, a lot of other factors also have to come into play, not least to which the auto OEMs themselves are going to have to tweak their technology to facilitate a higher blended fuel. Let's see how that pans out. But for now, that order is a big one and certainly is a thumbs up. Bharat Forge, and this is an interesting one. The companies ARM and AM General have signed a letter of intent to supply artillery cannons to the US at a time when the Indian government is talking about bringing in technology from the US and fighter jets and defense technology. This is a company that is manufacturing and selling guns in the defense space to the US. And this is fantastic from a Make in India perspective. It's maybe not the degree of technology that we're talking about bringing in from the US, Neeraj, but certainly a step up for Indian companies. And I think a lot of defense companies have spoken about the potential not just of growing their order books in India, which has taken place, but catering to the world as well.
Yeah, and now having the bandwidth and the capacity to be able to do that, which wasn't the case earlier, certainly interesting. Let's see. I mean, for Bharat Forge, this is all great news. They need to figure out something about the European operations and the restructuring.
Aluminium.
Yeah, and a clutch of other acquisitions that they've done, which Amit Kalyani was on record saying that we've given 6 months to our businesses to see how they perform, else we'll have to restructure
You
them.
spoke to him after
the results. We
Yeah.
spoke to them, yes. So that could be interesting. But yeah, this is a very interesting announcement. Alex is dead right there. The quick 3 stocks on my radar. I will watch out for Credit Access Grameen. Now, Sumit earlier sent this note from Goldman Sachs on banks. Now, I've picked out specifically for Credit Access Grameen. The note is on not this one, but I'm highlighting that stock because Goldman Sachs in the note says that channel checks suggest that collection efficiencies have dropped in Karnataka. Karnataka ordinance is potentially a precursor to a BULA, which is the draft bill by the central government, and portfolio stress and uncertain outlook, according to Goldman, are not adequately priced in. Apparently, Credit Access Grameen is one of the most impacted. Now, the stock was down 7% yesterday. The other piece and the other reason why this is important is what I picked up from one of the market participants who's quoted one of the points mentioned in terms of data. MFI borrowers have 1.5 trillion of non-MFI loans. So the total loan exposure of the MFI customer is way higher, about 6 to 6.5 trillion.
I'm sorry, so what you mean is that lending institutions are giving money to MFI lenders to on-lend? Is that what it means?
It's not just an MFI loan. It is also the non-MFI loan that is going into the MFI customer who is already leveraged, right? We spoke about this earlier, that one customer arguably at times has about 8 or 9 loans as well.
Yeah.
So there is problem in the system out there on the MFI side. And if that customer is not able to pay the loan at a point of time when we have these welfare schemes by states, it behooves me to think that a state will go after an MFI borrower because he's being delinquent on the loans, right? Very likely there'll be amnesties, etc., or whatever, reliefs given on that front as opposed to actions being taken. Sure, there could be compensation mechanisms, but this principally might spell bad news. So watch out for the MFI borrowers.
No, certainly.
I think there is a problem there. So that is part one. That's the first stock on my radar. I'll watch out for Mahindra and Mahindra. It's for more reasons than one. One, it is in pact with Anduril Industries to develop autonomous maritime systems. So that is one. But also keep in mind, there's a lot of talk about the price points at which Tesla might come into India. And does that essentially hit M&M? The management has been confident that they will stand up to any kind of competition. But in the minds of the market, there might be some bit of pullbacks that could happen, even if M&M were to stand competition. Just one quick point here. Citi yesterday mentioned that it is not about whether Asian Paints has lost market share because there are paint companies that have come in, but the price has gotten derated because there is fragmentation of the market. And that alone may hit all car companies. So it is not necessarily about they being able to stand up to competition, more about how fragmentation hits the incumbent heavily, and that might be the reason why M&M, despite very strong numbers, is getting hit. So that's part two. But the last piece out here, and that's again on an auto name, MK has come out with a note on TVS Motors. They maintain a target price of 2,800. They say that EPS CAGR will remain robust at about 27% over FY25 to 27, and the stock trades at about 27 times, which according to them gives value. watch out for TVS Motors. A lot of smart money logging into it.
Credit Access, couple of things, observations there. Credit Access Grameen, we spoke about it post their results, and because their investor presentation was horrendous in the way that they guided for a worsening of asset quality for the full year, worsening of the credit growth, and all of their other metrics as well. And by the way, Andural, in case you didn't know, is actually a name that is generated from Lord of the Rings. It was the name of the sword that Aragorn has, and it's a nod to J.R.R. Tolkien. On that note, let's move to cement stocks. They're in focus as pet coke prices have actually now risen to an 11-month high with persisting concerns around global economy. We've got Somit joining in to walk you through the implications of that on the space. Somit?
Well, yes, cement companies would remain in focus given the fact that pet coke, which is one of the key raw materials for them, now the prices of this raw material is at an 11-month high. To be precise, from the third quarter average prices, they have increased nearly 17%. In third quarter, the prices were averaging around $98 per ton, but now the prices are averaging around $115 per ton, which is a 17% jump. Now, what has led to this jump in prices? It's because of the spike in Chinese demand coming in for the US pet coke prices. We are seeing such kind of a move in the international prices. Apart from that, for Indian companies specifically, it's the currency depreciation also which will add to their woes going forward. Now, do remember that cement companies generally have an inventory of around 2 to 3 months. So the impact of this increase in prices and currency depreciation will largely be affected from the first quarter of FY26. Now, what would be the impact on the cement companies? Now, generally, pet coke forms nearly 55% of the total raw material cost. For some companies, it could be higher. For northern region companies, it is usually higher compared to what it is for central region, but on pan-India basis, it's around 55%. And on pan-India basis, this increase in prices and currency depreciation would lead to an increase of around 75 rupees per ton for the pet coke prices for Indian cement companies. Now, of this 75 rupees, 60 rupees is because of the alone of the price movement, while the remaining 15 rupees is purely because of the currency depreciation that we have seen. Now, to negate this impact of cost increase, they'll have to take a price hike. Now, generally if a cost is increasing by around 100 rupees per ton, then the price hike required by the cement companies is of around 5 rupees. So around 3 to 4 rupees of price hike is required to negate this 75 rupees increase in cost for the cement company. So we'll have to wait and watch whether they go ahead and take a price hike or whether there's impact of higher raw material costs will come on their margins from the first quarter of FY26.
Somit, just a quick follow-up. In what you have seen and witnessed over the last couple of months and indeed over the last couple of quarters, have cement companies been able to pass on prices effectively?
Well, price hikes have been difficult for cement companies, not a major price hike that we have seen. In fact, for the last 1 year, price hikes have been quite difficult for cement companies. But yes, somewhat around 1.5 to 2% of a price hike is what we have seen so far in the fourth quarter by the cement companies.
But so, Samit, sorry, just this is in which geography? Because channel check suggests that South has actually seen a price dip of about 8 to 10 rupees.
On pan-India basis, the price hike has been around 1.5 to 2%. Southern region could have seen a lower impact of price decline, but on pan-India basis for fourth quarter compared to what the prices were in the third quarter, price hikes have been around 1.5 to 2%.
Okay, interesting. You know, this is to be watched out for, because Somit has pointed out a very important thing. And therefore, Alex, think of this. If South Indian companies, Somit, thank you so much for this, by the way. And if the southern companies have seen a price cut, as my channel checks suggest, right? And please, people should do their own due diligence, of course. I haven't verified it from the companies per se. But if this has to happen, and then if pet coke prices have gone up, then you're actually bracing for not a very strong quarter four from South India. Doubt that volumes have really shot up out there too. So very important to keep in mind some of these.
I'm trying to recollect, maybe you will, if I remember correctly, you saw margin contraction for a lot of these companies, right, in the third quarter? I can't remember exactly. Maybe we should check and get back. But then if that is the case, what Neeraj is saying is absolutely true. You could see further erosion in margins for these companies in the fourth quarter. All right, let's also put the spotlight on the chemical space. And Morgan Stanley has a note out. It remains cautious on the Indian chemical space, and Varsha is joining in to tell you why. Varsha, I guess this is par for the course based on the kind of results that we witnessed in the space, and we've been talking about it. There's no corner or there's no turn in sight for these companies.
Yes, absolutely. First of all, thank you for that. But just let's see what all stocks Morgan Stanley has covered. So they've maintained overweight on Deepak Nitrite, but they've cut target price, and they've maintained equal weight for PI Industries, and they've maintained underweight for SRF, Navin and Tata Chemicals. What they say is that Q3 was a contrasting trend. Fluorine and diversified companies did post a good numbers, but when it comes to agrochemical companies, they actually struggled. And for FY26 outlook, increased production and capacity should improve operating leverage, but the AgChem, that is agrochemical recovery, is uncertain due to competition, and so that's the reason they've maintained cautious outlook on India chemicals. What they're saying is that the FY26 recovery won't be smooth for many companies. China and EU demand is weak, and India faces dynamic customer behavior like short-term purchases and Chinese competition as well. Indian companies will likely increase production to gain market share, but the prices increase will be limited according to Morgan Stanley. And the unit EBITDA is expected to improve 5 to 10% in FY26 due to operating leverage, but still below mid-cycle levels, and lower returns are actually expected. And they've changed their estimates. The for SRF, the earning estimates have slightly raised, and for Navin so they've raised the estimates for earnings for SRF and Navin Fluorine, but significantly cut for Deepak Nitrite and Tata Chemicals.
Okay, so that's the Morgan Stanley view, and clearly the fluorination companies, SRF and Navin Fluorine. SRF is not technically a pure play fluorination, but has got some aspects of that, I reckon. But the fluorination space, Navin Fluorine clearly is one on which there is an uptick of target prices, if you will. Target has been hiked, is the point I'm making on these. On the others, the targets have been cut. Deepak Nitrite in particular, amongst others, in which the targets have been cut. Okay, I'll tell you where people are giving high targets. That's Bajaj Finance, because yesterday, for example, the two guests who were there on the opening show gave a thumbs up to Bajaj Finance. The stock is flat. Maybe it still gives you an opportunity from a trading side, but UBS maintains a sell rating on the stock. So why is it? And they've hiked the target price, I believe. Mahima is joining in to talk about that note. Mahima, it's very interesting when the world is constructive on Bajaj Finance. Why is UBS bearish?
Right, absolutely. So they've mentioned a couple of reasons as to why they are bearish, and as you rightly mentioned, they've maintained sell, but they've hiked the target price from 6,500 to 6,800. Now what they're saying is that the incremental unsecured underwriting for NBFCs has been inferior. They also say that margins and ROA will continue to keep falling structurally going ahead as well, and the market pricing in 23% EPS CAGR in the next 10 years is what they're expecting, and they think too much optimism is already baked into the kind of consensus EPS. And lastly, they're saying that they remain cautious as they expect credit costs to remain cyclically high overall for this particular counter. So, these are the main reasons as to why they have, maintained sell on something like a Bajaj Finance, but they've, slightly hiked the target price from 6,500 to 6,800.
Thanks, Mahima, for getting us those details. Let's very quickly take a look at implied open, just to see where it is. At the start, we were looking at a downtick of about 90 points. It has eased up just a tad bit, implying a downside of about 50-55 points at the start. Let's take a very quick break and talk more stocks on the other side. Do stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome. This is India Market Open. I'm going to take you through all the cues that we have lined up for that indicate, well, what the markets want to do based on futures and options. So let's start by taking a look at the futures. Now, as far as the Nifty is concerned, yesterday was a day of trade where we didn't see too much movement in the underlying, and as was the case for the open interest as well. So futures didn't see as much traction, even though on an intraday basis there was plenty of turnover. But moving on to the Bank Nifty, again, this was a day of outperformance for this particular index. So as you can imagine, a lot of banks perhaps holding the Nifty where it was and providing that little bit of support coming through. A little bit of short covering as far as the Nifty Bank futures go, even as we see the open interest decline by around 3%. Now let's talk about the options market. And do remember that tomorrow is the weekly, today is the weekly options expiry. And along with that, what we are seeing is 23,000, which remains in focus in today's day of trade. Sure enough, we have about 23,500 calls being written on the higher end, 22,500 puts being written on the lower end. But considering we are quite far off from either of these levels, we are not going to expect too much traction. I reckon that today will be a day where we likely will see, well, at least volatility in place. And this from the long-term standpoint, because today is the expiry, don't forget that there could be intraday volatility coming through. But let's talk about stocks then after that. And with that, we have longs for BSC. What are strong run for BSE. It just hasn't corrected, even though a lot of the peers in the broader markets have come off substantially. A lot of slabs, prestigious states are also looking at some amount of longs building in. Dr. Reddy's, on the other hand, in fact, which was also your top loser on the index yesterday, saw shorts building up. And among stocks which saw unwinding, short covering for GSPL, Atul and Abbott, and Naveen Fluorine looking at a little bit of a long unwinding. But I reckon that the focus will stay with those which are looking at fresh positions at this point in time. And of course, we continue to keep an eye on the benchmarks, especially the Nifty, considering we are looking at the weekly options expiry today.
You said it. Thanks so much, Agam, for that. Now, this week has also seen several large deals. We've spoken about one in particular, Bharti Airtel, and of course, that got the headlines. But there's a lot more in the way of block deals that you should watch out for. And Mika is joining in to tell you about the list of companies and some of those details as well. Morning, Mika.
Good morning. So we have one bulk deal and many insider trading that's in focus. In terms of the bulk deal, it's BSE, Goldman Sachs Singapore. PT has bought 0.53% stake in the company, and they've together bought 7.28 lakh shares for 5,504 rupees a piece. The total bulk deal size is at 401 crores. And then we have multiple insider trades that are taking place amid the market fall. In terms of promoter and promoter groups and directors that have bought shares, well, up for your Maharashtra Seamless, the promoter group has bought 5.49 lakh shares, which is 0.4% of the company. NCC, 3.06 lakh shares have been bought by the promoter. We also have Godrej Properties, where 75,580 odd shares were bought by the promoter group, and JSPL, 44,300 shares bought. For Deepak Nitrite, the promoter group has bought 27,100 shares, and Usha Martin, a buy of 25,000 shares by the group. We also have BL Kashyap and Sons in focus. The promoter and director have brought 20,000 shares of the company, and for Keval Kiran Clothing, 10,000 shares have been bought. And lastly, we have Sagar Cements, for 7,566 shares have been brought by the promoter. And lastly, we have shares that have been sold, and that's Star Cement in focus. 6,000 shares were sold by the promoter group.
Okay. Mahima, thanks for that. By the way, calling this, Mika, thanks for that, excuse me. We're calling this insider transactions. Technically, this is a related party transaction. This is officially released on the exchanges, so there's no, it's not a negative connotation that we're giving lest it come out that way. Okay, the profit watch list for today. A thumbs up to a few companies. BCL Industries wins a supply tender for 135 crores for the company of its size, not a bad one. India Glycols has gotten an order worth 1,264 crores again in the same system, so could be interesting. JBM Auto has gotten an order worth 5,500 crores. That's a large one, and we didn't discuss about it in the 6 stocks between Alex and me, but clearly this one kind of takes the top draw, if you will. Servotech has entered into a contract with a global company to make EV charger parts. Certainly something you ought to keep an eye out for. NHPC, from amongst the brokerage names, NHPC, CLSA has given it an upgrade and sees about 57% upside, so do keep an eye out for this one.
A few more on the list, in fact. Let's turn the page. Cyient is one that was on my list. It's certainly a positive development simply because you have clarity for the next 5 years. You have Sukamal Banerjee that has now been named and appointed as Chief Executive Officer and Executive Director. Takes over after the exit of the previous Chief Executive Officer. Tata Power, HSBC has upgraded the stock and hiked the target. Certainly something to watch out for. A lot of people talking about Tata Power, in fact, and indeed the power generation space. BSE, Goldman Sachs has bought a 0.5% stake in the company. And you have Orchid Pharma, which is a negative that you should watch out for. 7 observations come through in Tamil Nadu. I'm not sure about the degree of these observations though. And in fact, let's talk about some of these stocks with our guests. We've got Nirav Ashar, who's the head of equity research at Latin Manhala. Apologies, at Latin Manhallar. I struggle with this, and forgive me for that, Nirav. I'll get this right eventually.
Latin Manharlal. I'm a Guju, so I can pronounce it easily. Right?
Okay, so I will practice Latin Manharlal. Yeah. And this is one, and the other that I struggle with is Narayana Hridayalaya. There you go. See, okay, anyway. Nirav, so what have you made of the latest developments, right? You've seen quite a few of them. One, we were talking about cement companies and the implications of a potential increase in the cost with regard to pet coke prices and maybe inability to pass that forward in the way of price increases. Do you have any insight on this as well as on what is happening in the South market, which is something seemingly that is different from the other markets?
Yeah, good morning and thank you for the invite and very good parallels between Narayana Ridalaya and Lakshmi Mannalalal. So yeah, coming to the cement sector, yeah, we have seen the pet coke prices which have been moving up, and they are currently at an 11-month high. But I think what tends to happen is that in the case of cement companies, they tend to make their procurements well ahead in advance. Because from what we understand, the pet coke is generally it is procured from the US markets. It is imported from the US markets, and there's a time lag which is involved in this. So from what we have read from the commentary which has been coming in from Ultratech Cement also, is that generally companies tend to stock up for a period of 3 months with respect to their pet coke supplies. So I think at this point of time, we are not going to see any major impact of the pet coke price hike. We may not see an immediate impact, but yes, if there is some forward booking which is done, definitely it will come with a lag effect. So there is one part. And the second part is that we generally tend to, there can be a substitution which could be involved. Either you use pet coke or you can use coal. So if coal is a better alternative at this point of time and imported coal is available, or if domestic coal is also available, which we understand it is available at this point of time, then it can be used as a healthy alternative. So I think likely to see limited impact at this point of time, because what the prices which are being quoted for pet coke are the spot prices. And typically the contracted prices could be quite different from what is being quoted on the screen at this point.
Very interesting insight. Very interesting insight. We'll cycle back to that in just a bit, because I do want to get your opinion on the top picks that you have in the space. But speaking of top picks, one of the factors that you've been watching for, of course, is valuations and the fact that you've seen a lot of stock price movement on the downside. In fact, a number of companies have corrected price-wise despite earnings upgrades. My colleague Somit is here to tell you about this. In this kind of a market, Somit, where even a small miss is punished, in this case, even upgrades are getting punished. Why is that?
Well, could be most likely because of the macro reasons that we are seeing. If you look at in the last 5 months, Nifty has corrected by nearly 12%, while the correction has been much sharper when it comes to mid and small cap. Mid cap has corrected by nearly 19%, and small cap is technically in the bear territory. It has corrected by nearly 22%. Now, what were the reasons? Most likely macro FIS sell-off is firstly the main reason. Then there is uncertainty around the Trump tariff, relatively higher valuations, weakening global and domestic macros, and currency depreciation. The only reason that was much specific to India was the cut in Indian companies' earnings. In fact, if you look at the Nifty 50 companies, FY25, we started the year with an earnings growth expectation of around 13%, and now we are expected to see an earnings growth of just 5%. So that is largely one of the major reasons. And we look at the BSE stocks that are listed on the BSE. Nearly 5,684 stocks are listed on the BSE, and of this, 3,446 stocks have seen a decline in the last 5 months. And if you look at the NSE 500 number, 458 stocks out of the 500 stocks have seen a decline. But all these stocks that have seen a decline, not all of them have seen a decline just because of the cut in earnings or a slowdown in earnings that is expected. In fact, most of the stocks have seen a PE derating because of macro reasons, despite the fact that their earnings have been upgraded not only for FY25 but for FY26 as well. To start off with, Nalco, 73% upgrade in the FY25 EPS and 43% upgrade in their FY26 EPS. Despite that, we have seen their valuations fall by nearly 43%. Now, the reasons behind the EPS upgrade is largely given the fact that prices were higher, volumes are expected to be on the higher side, and also their new plant is going to come up, which will aid to more volumes. For Avalon Tech, it's the new clients that the company has been getting, their excellent performance, and in fact, the company also upgraded their guidance, and hence we are seeing their FY25 and FY26 EPS get upgraded by around 10 to 25%, and despite that the P has derated by around 21%. For VRL Logistics, the EPS has been upgraded by around 32% for FY25. FY26 not much of an upgrade, just 2%, but despite that a 32% drop in the valuations of VRL Logistics. For Arvind Smart, it is the huge land bank that the company has and a huge potential going forward, which has led to this upgrade in FY25 and FY26 EPS, but despite that a 43% downtick when it comes to valuations. For GNTD, 28% and a 15% upgrade in their FY25 and FY26 EPS, but 37% drop when it comes to valuations. Apart from that, there are stocks like Brigade, MCX, PG Electroplast, Lupin and Nuvama Wealth, which have seen an EPS upgrade for FY26 and FY25 anywhere between 7 to 19, 41% in fact, and despite that their valuations have come down by nearly 23 to 44%. So it's difficult to say, or I can confirmly say whether these stocks are safe haven, but as and when the macro situation improves, these stocks could be looked upon given the fact that their EPS have been upgraded, so there is no disappointment at least from the earnings side for these companies.
Just to follow up on that, arithmetically, what you're saying is that the decline in the price to earnings multiple is on account of a combination of the increase in the EPS projection for the next year, that is 1 year forward, as well as a potential but not necessary erosion in the price, right? So it's possible that in certain cases the price has fallen less than 10% or less than 5% and still you've seen a major erosion or a drop in the price.
Right, the price fall could be less than 10% as well, but given the fact that the EPS upgrades for these companies are much higher, the valuations have derated in a bigger way. So that could be looked upon given the fact that earnings are at least stable for these companies.
It's a fair point. And it's an interesting one, Neeraj.
Very interesting. Good to know that while Q3 was a bit of a recovery, nothing dramatic, there are some in which actually FY25 and 26 both numbers have seen an upgrade, and that is actually a really interesting thing. In fact, just before we get to Nilesh Jain, Alex, would love to get in Nirav Asher on this list of companies, Nirav, wherein there has been actually a serious earnings upgrade that has come in into some names. You probably heard Somit speak about these. Anything that stands out for you from this list?
Well, I think I would be very cautious at this point of time because we've seen some companies, it's been such a fluctuating fortunes that suddenly the guidance has gone upside down. So I think I would like to quote one company called Aircon International, where the commentary has been so disturbing that you are making a 7.2% net profit margin, and suddenly the company talks about a 1.5% to 2% fall in the margins, decline in the margins going forward, and no confirmation whether there is going to be an improvement in the margin also. They are hinting at a continuous decline in margins going forward. So we've seen quite a few instances of this sort. So I think while there have been upgrades, but suddenly the whole picture has turned upside down. So we would be very cautious before going in for or believing in this kind of commentary, especially in this volatile scenario.
Okay, so having said that though, at least on the top of the list you have Nalco, and seemingly based on the EPS upgrade for FY25 and then 43% FY26, let's just pull up the last 3 months chart if we can on Nalco, just to see the kind of price action that you've had during a period where the Nifty 50 and indeed the broader markets have corrected anywhere between 12% and 19-20%. You have this stock that has also dropped about 22%. Just a follow up then, Nirav, on Nalco in particular, since this is the one that has the highest EPS upgrade in the current financial year and in the next, 43%. Does this not look attractive to you?
Well, I think as you rightly pointed out, there's been a 22% decline. Had this upgrade not come, I think we would be more than 50% at this point of time. So to my mind, the price damage has been restricted on account of this upgrade.
Fair point. All right. Let's bring in Nilesh Jain as well, who's head AVP Technical and Derivatives Research at Centrum. Nilesh, very good morning to you, and thanks as always for joining in. Let's talk about what you make of that base that seems to have formed very close to that 22,800 mark, which Neeraj also pointed out this morning. It seems like the market is looking at that and respecting it, but the question mark arises: today is likely to be a volatile day. does that happen today as well? And what if it doesn't?
Morning, Alex. Morning, everyone. So basically, we have seen Nifty has defended its 22,800 mark in the spot levels comfortably in last 4-5 sessions. Even in the month of January, we saw a free flow of 22,786, and soon after that, we have seen a strong rebound. But this time looks a little different, and we are witnessing a constant resistance, which is shifting at the lower side. So immediate resistance now is placed at 23,000 till the time Nifty unable to cross the same. There are high possibility that Nifty may break below 22,800 going forward. But as of now, from intraday point of view, looks like another day of consolidation, and a tight range could be 22,800 to 23,000. Whichever side it will break, we can expect another 200-point move immediately in that particular direction. So better to focus on stocks. On index front, if you talk about confidence that is coming in the Bank Nifty, so Bank Nifty structure looks more positive, and we have already seen an outperformance yesterday, so we can expect a follow-up move to continue towards 49,800 to 50,000. So any dip can be used as a buying opportunity, keeping a stop loss below 49,000.
Okay. So so if that's the view, Nilesh, and because yesterday was the first day of an outperformance of the small cap space, right? My question is, what is your trading strategy today on specific stocks? Are they small cap in nature, or are you sticking to large caps? Buy or sell, what have you?
So the focus should be on quality stocks. So sector specific is something that we are focusing. So power, energy, this space is looking attractive. Tata Power, NTPC, both the stocks are looking good. So NTPC is something that is looking attractive at current level, given the kind of formation that is formed on daily time frame chart. It looks like a double bottom, and we can expect a follow-up to continue towards 324. That's the immediate target, and stop loss can be placed below 309.5. Another space that is looking attractive is NBFC, and within that space, Cholamandalam Finance, particularly this counter looks like forming a rounding bottom formation. Looks good for a follow-up to continue towards 1430. So that's the immediate target in the Chola Finance, and stop loss can be placed below 1341.
Okay, all right, Chola. Okay, let me go across to Nirav on a couple of these developments, major developments that have come through, right? On my list, Nirav, I had Cyient Limited, particularly because you have the announcement of a new Chief Executive Officer and ED. And this is a gentleman who has been with HCL Tech for a period of 3 decades. So he brings a rich experience to the table. Would you say that this is a sentimentally positive impact? And the question mark remains on the earnings, right? Because ultimately part of the reason why the stock crashed was because of a very weak Q3.
Well, yes, I think leadership can definitely make all the difference, and of course it can navigate the company from the challenging times which it has been facing. So I think, but any progress which happens is definitely going to be a slow and steady one. So it will be a recovery is definitely going to be a work in progress. It might take some time.
Talk to me about this one. And Nilesh, I'll come to you on this one. Cyient, you've seen a stock getting beaten down. Of course, a wide variety of stocks have also gotten beaten down in the process. In the event that you have an upside today, would you suggest a short-term trade on this one?
Absolutely. So yesterday we have seen a good build-up on derivative front in this particular counter, and for the third consecutive session, we have seen a pullback. And interesting development on technical front was that this particular counter has crossed its 21-day short-term moving average. So structure-wise, it looks positive. If at all it crosses above 1480 today, then high possibility of moving towards 1520 to 1550. So a trade can be initiated at current level, keeping a stop loss below 1440. And buy and decline should be the approach till time it doesn't break below 1440. High possibility of counter moving towards 1520 to 1550.
Okay, now I want to put a bit of a focus on the MFI stocks and Credit Access Grameen in particular, because the stock was down yesterday. And we'll do a chart check as well. But Nirav Asher, I first want to come to you on the Goldman note. Goldman has put out a note for financials by and large, but they say that their channel checks suggest that the collection efficiencies have dropped in Karnataka, and their belief is that the portfolio stress and uncertain outlook is not adequately priced in, and therefore a stock like Credit Access Grameen could be significantly impacted. Now, The stock was already down 7.5% yesterday. And what holds true for credit access might hold true for other MFIs as well, right? Because the MFI loans are a sticky issue. How would you approach this pocket of stocks, and in particular credit access, Grameen?
Well, yes, I think typically all these issues tend to get magnified when when we start to see some signs of stress in the economy, and I think more or less it's related to the developments which we have seen in the economy slowing down in the last 3 quarters. And I think it could definitely, what we are beginning to see in credit access could have a spillover effect on the other MFIs as well. So I could see valuations move under a lot of stress going forward as far as this particular category of stocks is concerned.
Credit access individually, Nirav, do you track it?
No.
Oh, you don't. Okay. Nilesh, can I request you to do a chart check, because the stock was already down 7.5%. Now, is it, if the broader markets are showing outperformance and the stock is down 7%, that something is wrong there, right? How are the charts looking? Is it primed for more downside, or is it near some key supports?
So the stock is in a gradual decline since a year now, and constantly forming a lower top and lower top formation on the weekly time frame chart. In between, we saw some pullbacks, but those pullbacks are what sold into. The structure looks weak. The counter is trading well below all long-term and short-term moving averages. We have also seen a sell crossover on MACD. So structure-wise, looks like stock is heading towards 850, 820 on from a short-term point of view. So any pullback might get sold into. It's better to avoid taking any contra bet. There could be possibility of a dead cat bounce, but better stay away for the time being.
Okay, stay away from credit access for the timing and for the time being, and so that's on the technicals as well as on the fundamentals based on what we've been hearing over the past several weeks. We have to slip into a very quick break, just about 5 minutes away from opening though, and we'll be back before that to tell you about more stocks that you should keep on your radar. Do stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of
Back with India Market Open right here on NDTV Profit. Well, we might, it's difficult to predict how we will do during the day today, simply because we didn't quite factor in the kind of bounce that we had in the Indian markets, at least at the broader end of the spectrum yesterday. So bear that in mind. But we'll likely start off on a flattish note. The question only is, can broader markets outperform? That'll be the key thing. Also, viewers, just a sneak peek into the conversations that we will have today, though I'm sure on the right hand side of the screen or the left hand side of the screen you can see some of those. But at 9:25 we'll have a conversation with Aditya Khemka of Incred on pharmaceuticals, because pharma was such a big deal yesterday. Somewhere around 10:10 we'll have a conversation with Trin Nguyen, who is a global economist but also looks at markets, and will be and she was very bullish on India earlier. Will be interesting to understand from her if she still remains constructive or no. But for now, in conversation with Nilesh Jain and Nirav Asher, we've discussed a few stocks with them. Time to discuss a few other newsmakers in the session today. Nilesh, Bharat Forge, there is a fundamental news flow to it, but technically, after seeing that bit of a sideways move and a corrective move, do the charts show any promise?
So could be possible that we may see a pullback, but the major trend looks weak. The counter has been in a downtrend since last 8 to 10 months now, constantly forming a lower top and lower bottom formation. If you just pull up last 8 months chart, you can clearly see the formation of a lower top and low bottom. So that basically indicates that there could be possibility of a pullback from current level towards 1100 to 1120, but very unlikely to be a sustainable till the time it doesn't crosses above 1140. I won't advise taking any contra bet. I won't advise taking any aggressive contra bet, I would say. But a contra bet can be taken with a strict stop loss below 1040 if somebody wants to take it. Otherwise, it's an avoid.
Okay. So technically not looking very strong. The question is whether the latest development is something to pay attention to. Nirav, purely from the perspective of the company looking to increase its footprint and presence in the defense space, would you say that this is a significant development to sell and to supply artillery guns to the US?
Well, yes. I think for Bharat Forge, it's been that all the divisions have been under pressure. If one were to take into account the automotive business, then the Europe market has shown kind of anemic growth. As far as the domestic defense business is concerned, they were very close to bagging the order for advanced towed artillery gun systems, which is into this artillery space. That was a fairly big order, 4,500 crore orders, which were expected. The government has already issued an acceptance of necessity for 307 such guns. And that is expected anytime next month. Now that has got delayed. It was expected since last August. That got delayed, and I think that could be one of the reasons why we have seen this underperformance in the stock price also. And the third important factor is that they are now looking at aerospace business to drive the growth going forward. So I think it's kind of being stuck up as far as all the divisions are concerned, and that is the prime reason for the underperformance in the stock. This development which has taken place yesterday of supplying artillery to the US could provide a small relief to the stock. But to my mind, I think it will require more than this for the stock to really come back out of its problems. And the real trigger could be the advanced towed artillery gun system order, which is expected from the Indian Defence Forces.
Okay. Okay. Well, let's see if this is just the first 1 minute. So I think some of these rates obviously will change. But let's wait and watch if indeed there is a large reaction on this one or no. It'll be interesting to see that. Now, the other aspect, Nirav Asher, is a piece that we did on chemicals earlier in the day. So Morgan Stanley, for example, has come out with a note wherein they are saying that a lot of chemical companies might be still undergoing pressure, but the corrective moves have been very large, and therefore they've upped the targets on some of them. SRF and Naveen in particular, even though they are underweight on that. They've cut the target price of Deepak Nitrite, for example, but it's substantially higher than the current price as well. you track this space closely because I know you had given us calls earlier on some of the chemical names as well. Is there a con call or an earnings sprint within the specialty chemical space that you liked and you would be comfortable starting to buy or nibble into that business as a house?
Yes, as you rightly pointed out, I think we had covered SRF, and we did make a mention about Navin Fluorine also. And I think as far as the sector goes, there was an expectation that there will be a recovery from the second half of FY25 as far as the chemical space is concerned. But this has not happened. There is a phase where most of the players are going through an inventory destocking cycle. And that inventory destocking cycle is now coming to an end. A lot of companies have acknowledged this also. Companies like Deepak Nitrite, when they spoke about their performance, they have said that agrochemicals, intermediates, and phenolics are rarely they go through a down cycle at the same time. But this is one point of time where we are seeing both these businesses going through a down cycle. And in a way, I think the intermediates generally tend to react with a lag effect. So that lag effect is now coming in as far as the agrochemical space is concerned. So I think from what we have read, to sum up, I think we are likely to see a recovery from the first quarter, Q1 of FY26. And then I think going into the second quarter, things should start improving in a much better way.
Typically the market tends to discount these things 6 months earlier, right? Is this the time to buy into some of those names then?
Yes, definitely.
So which ones do you like as a house?
I think we like SRF and we like Navin Fluorine. We would like to look at Deepak Nitrite, but I think the stock has been on a downward trajectory, and I think it could slide to close to 1600 levels. That time we would like to have a look at the stock.
Okay, Nilesh, coming on these stocks, I mean, the slam dunks have been very swift, particularly for Deepak Nitrite or some of the others. But there's a lot of promise into some of the names, small caps as well. Do you like any of the chemical names on the charts?
See, clearly, out of all the names that you have just mentioned, Navin Fluorine and SRF, these are the two particular stocks that are in fact outperforming within the chemical basket. And structure-wise, Navin Fluorine has good support near about 3850 and 3900 zone. So can be looked at if at all we see any dip towards 4000. So this particular counter can be added with a stop loss below 3800. We might see 4200 to 4300 levels on the upside. SRF on the other hand, where we have seen a good consolidation breakout of multi-year breakout, I would say. It has given a good breakout from a falling channel as well. So structure-wise, SRF is looking positive a little from a position perspective, I would say. It has a potential to test 2900 to 3000. One can keep a stop loss below 2550. That's the 50-day moving average for this particular counter. So buy and decline should be the approach.
Okay, buy and declines is the approach for a few of these select chemical companies. On to the big brokerage call of the day, and we've discussed a few already, but this stands out because CLSA has upgraded NHPC to a high conviction outperform, but it has cut its target price to 117. It's still implying a considerable upside from the current market price of 76. Why are they saying what they're saying? Mihika is joining in to tell you. Mihika?
CLSA has, remained bullish, and it is, upped it up a notch. It's upgraded the rating to from outperform to high conviction outperform rating because of the 25% stock correction in the last 6 months, which has made the stock traded at inexpensive valuations of 12 times its FY27 price to earnings ratio. The target price has been cut, but the cut is minimal from 120 rupees to 117 rupees, and this is only to count and factor in higher capex, but it still offers a 57% upside potential. Now, in terms of the key catalysts for the company, CLSA has noted the start of the Parbati 2 hydro project, which is expected to boost the regulated equity of the company by 27% in Q1 2025. It also notes the entry of the company in shorter duration pump storage space, and it expects an increase in regulated equity by almost double over FY24-28. Just a note, regulated equity is the portion of NHPC's capital that regulators allow for a guaranteed profit on. Lastly, in terms of growth expectations, CLSA expects 79% higher EPS over FY25, FY27, and they also expect the company's return on equity to expand 512 basis points over the same period.
Okay. Thanks, Mika, for getting us those details, and certainly keep that on your radar. You've got the pre-open session that's just about winding up. Any interesting names that you're seeing, Nilesh, based on what you've seen so far? Early days, of course, early minutes, of course.
Right. As of now, I would rather wait for opening session to be settled down, because usually we have seen in last 4-5 sessions, the markets are not sustaining at high levels, and it is similar at the same point of time. We are witnessing a sharp rebound as well from the lower levels. So I would better wait for markets to open at 9:15, and then we'll take a call.
Okay. All right. Nilesh, Nirav, you want to come in on NHPC? Do you see potential here based on and I'm not specifically asking about the CLSA note, but then on your own reading on the stock, do you anticipate that what CLSA says will play out will indeed play out?
Well, it's like possible, but I think at this point of time we are not very comfortable with some of these hydropower names. At this point of time, we would like to stay away from these stocks.
Okay, then in the power space, does anything stand out? You said you don't like hydropower names. Does that mean that you would like some of the traditional players, maybe some of the renewable players? What stands out to you?
I think we would like to have a look at the thermal power majors, especially the likes of NTPC or JSW Energy or Torrent Power. But I think valuations will be the key factor to watch out for. Not at these prices. We'll wait for some more correction.
Okay. Nirav, then we've not really asked you about what stands out to you. What are those pockets where you are seeing at this juncture, and we've seen the earnings season play out? If it's not power, I asked you specifically about Bharat Forge, I asked you specifically about Cyient, but none of these have really caught your fancy. What, according to you, should you, and we asked you about the select chemical names as well. What is a high conviction buy in this market for you based on the fundamentals?
I think as we discussed, it's going to be very selective. As we discussed about the chemical names, as we spoke about certain auto ancillary players also. I think one sector which we can look at is the hotel space. And I think it's been buzzing with activity. Yesterday also we started to see good momentum. I think the entire sector is in a sweet spot. And I think some of the companies which we had identified at a very early stage, Taj GVK, Indian Hotels, they continue to perform quite well. Yesterday we've seen some very good momentum pick up in Lemon Tree Hotels, Chalet, East India Hotels. So I think this is one sector definitely to watch out for, because now I think even companies like Indian Hotels, they've started talking about medical tourism, they've started talking about spiritual tourism, etc. So I think it's kind of becoming a recession-proof industry, because you have an influx of tourists, the domestic travel has gone up substantially. So I think we would like to have a look at this space in greater detail. At the same time, as you spoke about the different stocks and different sectors, I think from FMCG we've pulled out Britannia Industries. I think it's got a very good set of numbers. On the paint side, we've started looking at Berger Paints, because they had a relatively a better set of numbers. So I think it's a whole selective stock picking which is happening. On the value side, I think some of the stocks which have broken down, we've started looking at Woodco, we've started looking at IGL, Indraprasth Gas Limited. So I think we've been working on those lines, very, very cautious, going very, very cautious, and being very selective in our picks.
Okay, let's look at some stocks which would be active. So, KSB Pumps is up, if I'm not wrong. Could be interesting. Marathon Next Gen has gained a bit. Okay, KSB is not necessarily, but Marathon Next Gen, no. Okay, no, BSE, some of these are up and active. India Glycols as well as BCL Industries. as well as Borosil Renewables. I think those are the few others that we should try and see. India Glycols 2% higher, BCL about 4% higher, so not bad for some of these. Borosil Renewables up about 5% as well. Nilesh, your top call for the morning?
Right, so I'm getting a feeling that we may see another similar session that we saw yesterday, where few handful of stocks were dragging the main indices like Nifty, and the broader markets have outperformed. So I believe that today again we may see an outperformance to continue in the broader market, and a few stocks that are still looking attractive within defense space. Mazgaon Dock yesterday has given a big spurt. So there could be possibility of a follow-up move to continue towards 2250 to 2300, but advisable to buy on decline if at all it comes near about 2100. That can be a good entry point, keeping a stop loss below 2050. We may see 2160, 2180 kind of levels on the upside. Another stock that is looking attractive is Bombay Stock Exchange, BSE. It was already up yesterday around 9%. But if at all, if we get this particular counter in the range of 5550 to 5600, then it can be added for the upside target of 5800 to 5900. One can keep a stop loss below 5450.
Okay. Nilesh, you named one, of course, but what about the other in the other couple of others in those defense and shipping counters that have maybe rebounded quite sharply? Anything else standing out to you that could see a spurt today as well?
Right. So another couple of stocks within railway space, RVNL is something where we have seen a big spurt. So usually you see a follow-up move after such kind of a spurt, but not advisable to chase these gap ups. If at all you see any dip towards 360, 365, use that opportunity to initiate a long position. Keep a stop loss below 355 in RVNL. Another stock is SCI Shipping Corporation of India. That is another stock where we have seen a big bullish candle yesterday. So these are the stocks where we may see a follow-up move, but advisable to buy on dips.
Advisable to buy on dips. That's good advice in this market scenario. Stay on, gentlemen. Here's how we're starting off. The question is, how will we end today? Will mid caps and small caps do better than large caps is the key question. For now, starting off with a fair degree of red, I must say. 0.5% off for the banking index. IT should come up on your screen, and let's try. Bank is down 0.5%. IT, well, 0.25%, and mid caps and small caps, which did better yesterday. Let's see how they are faring today. Can we get them on the screen? 0.3% for the mid cap index, small cap index 0.5%. Now remember, these days these indices are very choppy in the first 10 minutes itself. So we'll revisit this, of course. But let's get the heat map up on the screen and show you what's moving and what's not. Okay, a little bit of red today, which is good to see. The losers though first. ITC, 2 percentage points lower. I don't see too many other FMCG names out here, so ITC is a bit of a lone ranger. Maruti is down, M&M is down another 1%. So the two auto majors, I wonder if Hyundai would be down. We'll maybe look at that, but I wonder if this is the Tesla effect. Wipro down 1%, HDFC Bank heavyweight down 1%, TCS is down. So IT is a bit corrective in addition to HDFC Bank, which might be putting pressure today on the index. What's doing well? Shriram Finance up about 1%, Hindalco having some gains, JSW Steel is not doing too badly, Cipla, Adani Enterprises, Tata Steel, Adani Ports, Grasim. So that's the list of names. It's steady at about 1/3% in the first couple of minutes. More heavyweight losers, a few gainers if you will, but metals kind of standing out. Reliance marginally in the green, Alex.
So similar trends to what you saw yesterday as well, Neeraj. About a couple of these at least. The IT companies maybe underperforming a tad bit. You saw IT losing ground. Metals were doing okay yesterday. That seems to be the case at the start as well. In fact, let's pull up the sectoral breakup to see what is doing what at this juncture. And there you go, right on top of it. But no major gains, right? Metal pack as a whole gaining about 0.4%, and it's more red on the screen than green. And you have auto that is down about 0.8% at this point. The Nifty Bank also losing about 0.4%. Let's see whether this turns, and it did yesterday. So that's certainly something to watch out for. A few names that you should focus on at the start, and there are quite a few in the way of order wins that are in focus at the start. And let's pull up some of these names. The likes of Bharat Forge, we spoke about the fact that its arm has gotten that order or is going to be supplying artillery guns to the US. Not a very big move. So as Nirav was pointing out earlier today, the headwinds that have come through on the earnings front in the form of several other gaps that need to be fixed may be weighing on the stock. In fact, it's turning negative as we're speaking. Let's talk about India Glycols. It was up and about at the start, and so is BCL as well. Both of these ethanol plays, and they've gotten orders to supply ethanol. So there's something that you should watch out for. You have JBM Auto that has gotten an order worth 5,500 crore rupees. So this is also something that is reacting to the order and is up and about in trade. Let's talk about the management change. We were talking about Cyient and the appointment of Sukamal Banerjee. The stock is gaining about 1.7%, a measured response. Let's see if it builds through the day. We already pointed out that there is action in the derivative space for this particular counter, and watch out for the key numbers that we spoke about at the start today. A couple of brokerage calls that have come through. You have NHPC. We spoke about this in our big brokerage call of the day. CLSA has upgraded the stock to a conviction outperform, but it has cut its target price. It's still implying a significant upside. The stock is up about 1.8%. And Tata Power, HSBC has upgraded the stock and also hiked its target, but it's not doing too much in trade today. And finally, let's also take a look at the cement companies. I've listed out a few. Ultratech Cement not doing too much. Ambuja Cement not doing too much either. Shree Cement maybe also, let's pull that up, and ACC. So perhaps, as we've already discussed on the morning show, the implications of the increase in pet coke prices, which is of course a key raw material, it may not play out immediately in the fourth quarter because of some of those supply contracts. It may be something to worry about at the start of next year. Neeraj.
Okay, just trying to see what some other stocks might be, which we may not have necessarily marked. I wonder what Zentech is up to today after getting clobbered in the previous few sessions while the small cap index tries to make a comeback yet again. Zen Technologies up 4.5%, so not a bad start for that one today. It should bring up BCL, if Alex has not marked it already, I think about 5% higher. So that's not doing badly for itself either. Good move for BCL Industries as well. Clearly some stocks doing way better, especially at the broader end of the spectrum, doing way better than others. So keep that in mind. But opening thoughts, Nilesh, you want to revisit the call that you made, one, and any opening thoughts on anything else, the index or specific stocks?
Well, I think the index are likely to consolidate today, but we believe that the small cap, mid cap may witness some attraction, just like we saw yesterday. So stock specific move is something that we are expecting it to continue. You spoke about metal space. Within metal space, specifically aluminum space, Hindalco is looking good because the stock is making an attempt to cross its 200 exponential moving average. So looks attractive at current level for further upside momentum to continue towards 641 to 650, and stop loss can be placed below 618. Apart from that, we are also witnessing a strong rebound in Keynes Tech. So Keynes, we have seen a constant decline. The stock has gone into extremely oversold territory. Now it is making an attempt to witness a strong pullback. This pullback may extend towards 4,400 to 4,500. With the stop loss below 4,000, this particular stock can also be looked at. And I have one sell recommendation that is coming in the auto space. So auto, by and large, as a whole, is looking weak. Mahindra and Mahindra, this particular stock looks like heading towards 2,650 to 2,600 on the lower side. So it's a sell on rise. Keep a stop loss about 2,750. On the downside, target would be 2,650 to 2,610.
This is the Tesla effect for sure. And you know, we'll just go to we'll go to Nirav Asher on this as well. But okay, the flashes have just gone off, but I think some flashes from the Adani Group on the liquidity cover that they have as well. Interesting. Yeah. Trailing 12 months EBITDA of 86,000 crores. That's the group release. And of course, they're speaking about how One is the trailing 12-month EBITDA, of course, but also on the cash flows, etc. Core infrastructure business, 84% of EBITDA, sufficient liquidity to cover debt servicing for at least the next 12 months. Fund flow from operations or cash after tax at 58,908 crores as well. And independent of the fact that the Adani Group owns NDTV, I think I was looking at a Motilal Oswal note which saw of stocks which have on the Nifty 50, which have derated quite significantly. And Adani Ports and Hindalco are amongst the two names that they believe are amongst the top draws to be bought into post this corrective move in the large caps as well. So that's the other interesting piece, Alex.
Yeah, certainly. Just before you marked that, I was actually pointing out from the key movers today, and this is something that I spotted yesterday as well. Pull up Tata Investment, because this is a stock that is up 8.2% as I speak to you right now. And this is a stock that was gaining in trade yesterday as well. In fact, for the week, if you can pull up the weekly chart, it's up about 20+%. And I'm just wondering what is playing out here. Nilesh, anything that you're seeing on the charts that can explain this?
Well, Alex, if you just look at the volumes are very dry. So hardly 1,20,000 volumes so far. It looks like less of liquidity. That's why we are witnessing this kind of spurt. And historically, if you see, the stock used to trade on upper and lower circuits as well. So there are bits of movement we have seen in the past. So it is better to avoid taking any sort of bet at current level. We may see some profit taking at the high levels as well. And given the kind of fact that we have seen already a jump of 21% in last couple of sessions, so better avoid. It's a highly illiquid counter.
Okay, gentlemen, both of you, thank you so much for taking the time out and being with us in the opening piece. Lovely to get your opinion in the session today. Now, viewers, what we'll do is, the next 15 minutes, we are going to get somebody whose pharma stock picking abilities have made some of his funds the best performing funds in the past and currently as well. Earlier with DSP-MF, the DSP Healthcare Fund did really well. It's doing well probably even now. But when Aditya Khemka managed it, it did really well. He now manages Incred Asset PMS and the funds are doing well. And it's an opportune time to get somebody who can pick and choose pharma stocks well, because the sector is getting more and more diverse with all the noise around tariffs, reciprocal tariffs from the US. What will happen to Indian pharma is the key thing that everybody is grappling with. So Aditya, it's a great time to get you. Thank you so much for talking to us this morning. Wishing you a very good morning, of course.
Thanks, Neeraj. Good morning to you too.
Yep, thank you. Now, Aditya, I want to start off with, of course, the big elephant in the room, right? Tariffs. And if indeed there are reciprocal tariffs on pharmaceutical companies, then the various notes that were doing the rounds yesterday from the sell side, Aditya, pointed out to some fairly large impact being seen for Indian pharmaceutical companies exposed to the US, the likes of Aurobindo, Sun Pharma, Lupin, Cipla, etc. So I'm first bucketing this healthcare conversation into the pharma companies exposed to the US. How have you looked at the possibilities of what could happen and the impact thereof on these set of companies?
So look, a 25% tariff on pharmaceutical products coming from India has always been something that I have felt is slightly difficult for the US administration to implement, because at the end of the day, the cost majority part of the cost will get passed on to the consumers. And that will cause inflation in healthcare costs for the United States, which is something which the government will not, like, or the population will not like. Having said that, given we are living in very uncertain geopolitical times, if these guys do end up implementing 25% tariffs on the Indian pharma companies like Aurobindo, Cipla, Lupin, Sun, Zydus, Biocon, and Cadila, they will have a tough time in terms of the entire cost is very unlikely to get sort of passed on. You will have to possibly sort of cushion some of the blow. And given that their margins on the US generic market is already pretty thin, no matter how low of a blow they cushion, it will have a significant impact on their profitability. So, that is where we are coming from. We at Incred Healthcare PMS, we do not have any exposure to any of these companies that do this business. The business was already risky. There was US FDA regulations, low ROE, low margins. Now add to that this new sort of perspective on tariffs, sort of makes it a really poor risk return trade-off.
Now, Aditya, you've always told me that the US exposed businesses have an angle of FMCG to them, right? There is a bit of a cycle to it, etc., and stuff like that. So, if the tariffs don't come in, are they at the wrong end of the cycle still? I'm just trying to understand if you believe that if the reciprocal tariff situation is not as bad on April 2nd, would they become interesting companies to look at, or the cycle is still against them?
No, just let me correct you. The US focused companies are more like metal and commodity companies.
Okay, sorry. Excuse me for that. Yeah.
Yeah. So from that standpoint, I would say that these companies are probably at the peak of their profitability in the foreseeable future. Next 4-5 years, I think the profitability can only come down simply because these companies in 2023 or 2024, depending on which company we talk, they launched this product called Revlimid, which is a very, very significant contributor to their top line and bottom line. And these contributions will vanish beginning January 26. So you will not have earning growth in these companies for the next 4 to 6 quarters. And valuation multiples aren't really cheap compared to their own historical averages. So that tells me that we are probably at the peak of the cycle for these commodity type companies. And I would rather wait for the next cycle than to play maybe the last 1/10 of a leg on this cycle.
Okay, yeah, yeah, sorry. What I meant was not FMCG, but commodities, because they have cycles which are very pronounced. Okay, so you're saying that anyways at the wrong end of the cycle, and yeah, the Revlimid thing, I think we saw it with Natco, if I'm not wrong, Aditya, and could be interesting to see what happens to Reddy's or some of the others as well. Okay, the question, I mean, you're not a sell-side analyst, but Aditya, I'm just trying to incline to ask you, in case you believe that you believe that valuation wise there could be more downsides to this. The last question on this, and then we'll move on to the other aspects of healthcare, because I definitely want to talk about CDMO with you. But would you believe that fundamentally, either because of a valuation derating or an earnings downtick, could there be more downsides, possible downsides to these US exposed Indian pharmaceutical companies?
Absolutely. I think these stocks are still trading, depending on which stock you pick, 20 to 80% above their intrinsic values. If I just do a SOTP of their different arms and give them rational multiples, the target prices that I get are anywhere between 20 to 80% below what these stocks are trading today. So there is significant downside to many of these stocks, which will probably play out once the earnings take a dip and the real base business profitability and ROEs get exposed. I think that is where we will probably see some significant derating as well as an earning downgrade. So look, it's a double hit. Your earnings fall and your multiples fall. So if your earnings fall 10, your multiples fall 20, the stock is down 30. I think that is where we are coming from. I think there is a long way to go in terms of corrections into some of these US exposed pharma companies.
Okay, so viewers, here's the first verdict as we do this healthcare conversation, that the US exposed companies, Aditya Khemka believes that there might not be the best idea or the best pocket to be in. So therefore, let's try and figure out that within the healthcare space, if one of the verticals, which is this pharmaceutical companies or giants, if you will, are not the prime bucket, then what stands out? Now, Aditya, almost everybody is talking about CDMO. Yesterday, there was a Macquarie note which was very constructive there. The commentary from some of the pharmaceutical companies which have got a CDMO business, even chemical companies, I mean, Ami Organics has a CDMO division, and they give some very roaring commentary out there. Would love to understand, do you think the time of Indian CDMO has finally come?
So I do. See, basically, during the COVID period, I think India gave a message to the world that we are your friends. You can come to us when you are in need. And today, the global landscape is that 80% of the drugs that are available in the world have one way or the other dependence on China. So the Western leaders are basically thinking whether such a dependence on one geography, that to a geopolitical adversary, if that is that basically wise to save a few dollars or a few pennies on the dollar. And I think that is where they have decided to sort of push the industry to look for an alternative. Now, when you look for an alternative in the CDMO space, you want the 3 Cs. You want cost, You want capacity, you want capability. So barring China, the only other geography which can give you similar cost, similar capacity, similar capability is India. So which is why, many of those order flows from China are coming to India. Customers who are really buying from China are now looking to buy from India. Remember, China even today sells $40 billion worth of API and services to the world, and India sells around $4 billion. So we are 1/10 their size. So no matter how much China loses, 10%, 20% is going to be a very significant number for us. So clearly, that roadmap is there. CDMO is going to be a great story over the next 5 to 10 years. It will have its own cycles also, because remember, we are smaller pharma companies today doing these CDMOs. So one or two clients may dictate what happened to the entire earning cycle in a quarter or over a year also sometimes, because sometimes clients a year worth of goods in one quarter. So, there will be volatility, quarterly, annual volatility in numbers. But if you're taking a 5 or 10 year view, I think that's pretty clear to me that, CDMO will be a space to reckon with.
Hi, Aditya. This is Hiral on this side. Taking the consideration with regards to the opportunity that you're seeing, one is we've already probably taken on the bandwagon with regards to the China Plus One strategy, right? And that's where India has a competitive advantage. With all of this said and done, where do you see India in terms of utilizations versus the capacities that we already have?
So that's a very company-specific situation. To be honest, a few companies which have already expanded capacity are currently running at 50-60% capacity utilization. And some companies which are currently in the phase of capacity utilization are actually running at 80-90% capacity utilization, which tends to be peak utilization in this setup. So I think, broadly speaking, you would believe that CDMO companies, all of them are doing capex. Some of them have just finished doing their capex. Some of them are currently undergoing a capex cycle, and that is basically happening because the order book is swelling, and the current capacity just isn't enough to service the order book that these companies have got. So, I will be very, very interested in CDMO companies for the next 5 to 10 years. But obviously, valuations is something we have to keep in mind. Earnings cycle, as I said, because of the customer or product concentration, there may be earning cycles in individual stocks. So you have to be mindful of that.
Right. So, Aditya, between, say, Dr. Reddy's, it's one of their subsidiaries which is already developing a new biological facility, if I'm not mistaken, in Hyderabad. You have Laurus Laboratories, which is already spending a lot in terms of the APIs. Divi's and a Jubilant, all of them pretty much on their journey with regards to expansion of capacity. Where would your bets be if you have to look at these 4 companies?
So look, some of the companies that you mentioned, Laurus, Divi's, etc., or Dr. Reddy's, they are essentially conglomerates. They are not just CDMO companies. They have other businesses. And what happens to their CDMO piece may not dictate what happens to the entire stock, because the other businesses are significantly larger. And therefore, what happens to those businesses will dictate what happens to the stock rather than what happens to the CDMO business. But companies like Jubilant, companies like Newland, companies like Hykel, companies, these kind of companies, their CDMO business is their largest piece. So for these companies, what happens to their CDMO business dictates what happens to the entire stock. So when we look at from a stock perspective, we'll be more interested in companies like Jubilant Pharmova, Hykel, etc., where CDMO is a very large piece. Newland Laboratories, where their CDMO is a very large piece, rather than the other names where CDMO is there, but it's a very small piece of the overall share that we buy or the overall company that we buy.
So, Aditya, if you see some weakish performances from CDMO companies, I mean, Laurus has been guilty of that for maybe 24 months on a trot. Newland, the last couple of quarters have been very, very patchy. And the quarter gone by also looked very weak at a point of time when some of the other CDMO companies have actually done well, right? Would you use, and it will be company specific, I'm not asking you to name specific stocks, but would you use weak quarters as an opportunity to analyze and add more, because the future of over the next 3-5 years or maybe longer for Indian CDMO or CRDMO could be very bright?
Absolutely. So, given that there are quarterly volatility in earnings, even yearly in CDMO at this space, given the concentration in clients and products, every bad quarter, every significant dip becomes a buying opportunity in these stocks. And, every good quarter or every significant rally may become a trigger to trim some positions. Because that not every quarter is going to be like, it's not going to be a straight line. There will be volatility at some point, there will be a J curve. So I wouldn't really, hold these stocks at the same amount throughout the cycle. cycle, I would do my positioning and sizing depending on how good or how bad a quarter do we have in the base, and try to sort of maximize my returns and alpha from the stock.
Okay. Okay, so that's on CDMO. Aditya, wondering, are you on what aspects of healthcare now are you the most constructive on? Is it CDMO or because I know that you're not constructive those US exposed pharma companies, maybe Indian exposed pharma companies might be it, but is it CDMO, is it that kind of pharma, or is it the hospital/diagnostics or hospitals or diagnostics as the case may be?
So we are most constructive on hospitals and diagnostics at this point, simply because, the geopolitics are something that we can't really forecast, and we don't want to forecast how, they will shape up. And even CDMO companies are to some extent vulnerable to some of the geopolitics, because end of the day, it's an export business. So, the currency, the geopolitics, these things will impact CDMO companies as well. Having said that, even though the runway for growth is long for CDMO, because there are certain sensitivities to the geopolitics and exchange rates, we are currently equal weight on CDMO. We are not overweight. And valuations are also, slightly steep in many names. So hence, we are sort of an equal weight situation. We are overweight on hospitals and diagnostics. Now, why these two? Simply because these are inward-looking businesses. They have nothing to do with the geopolitics per se. And these are businesses which are branded, working capital is minimal, cash flow is healthy, valuations are very, very reasonable depending on which stock you look at. And, the runway for growth is just amazing. So the under-penetration in the Indian economy is something we all know about. So these are very, very clear no-brainers at this point. So we are far more bullish on hospitals and diagnostics than we are on CDMO, and unbranded generics we absolutely do not own.
Right. Aditya, with regards to hospitals as well, how have you looked at in terms of the earnings momentum? Because past couple of years, we've not really seen, much happening from an earnings perspective. They have been investing in expansion. The clear mandate that we see over here is that probably there could be some bit of a derating that could be happening, probably a year down the line, taking into consideration the fructification of the investments that have happened. Do you think this is that inflection point where you could see re-ratings to start coming in for hospitals?
So look, individual hospital stocks are different. There are certain hospital stocks which are trading at 100 times enterprise value to operating cash flow. There are certain hospital stocks that do not have any operating cash flow. It's negative operating cash flow. And there are certain hospital stocks that are trading at 20 to 22 times operating cash flow. So valuation-wise, it's a very, very diverse picture. We would focus on the stocks which are trading more reasonable on EV to operating cash flow. So that's number one. Number two, on the earnings side, top line growth for majority hospitals has been between 8 to 20%, depending on which hospital name you want to pick. And that obviously gets translated to better EBITDA and better PAT because there is operating leverage in the business inherently. So yeah, I mean, as a sector, hospitals seem to be overpriced. Many of these stocks are extremely overpriced. As I said, 100 times EV to operating cash flow, or, the operating cash flow itself is negative, but the stock is very well owned. I think those stocks I will definitely not evaluate. Those stocks make us very, very uncomfortable. But then at the same time, we have stocks which are between 20 and 25 times EV to operating cash flow with mid-teen kind of top line growth and a much faster EBITDA and PAT growth. So I think those are the stocks we are much more interested in.
Okay. Well, Aditya, so good talking to you today. Thanks so much for being with us and just analyzing or breaking down the whole pharma chain for us under the current circumstances. Appreciate your time.
Thanks, Neeraj.
That's the view from InCred. Aditya Khemka telling us what might look attractive and what might not. Please do your own due diligence, of course. By the way, speaking of pharmaceuticals, Chairman and founder of Wockhardt, Habib Khorakiwala, said that reciprocal tariffs by the US would not hurt Indian industry. Here's why.
Basically, to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected. Okay. But long term, one doesn't know what happens after 3 to 5 years.
Yeah. Right, so that's Mr. Khorakiwala giving out his view in terms of how the costs could be a pass on as well, no impact that could be seen in terms of the tariffs that could be coming in. But moving on, a couple of counters that have been buzzing in trade today. Barsha joins us with a list. Barsha, what do you have once the markets have opened? Where are you seeing action?
Yes, Cyril. So let me start with BCL Industries, wherein company and its subsidiaries won ethanol supply tender from OMCs, the company to supply 23,000 kiloliter of ethanol for rupees 135 crore, and this is to be produced from FCI rice. So BCL is actually buzzing on the back of this news. Then India Glycols is buzzing because it has received 1,264 crore order from OMCs and oil companies, and the company will supply 18 crore liters of ethanol. Now the order received is under ethanol blended petrol program, which needs to be executed in ethanol supply year 2024-2025. Last on my list is JBM Auto, actually huge order for this company. If you see, their subsidiary gets tender for execution of almost 1,000 electric buses and civil infra. Now the tender received is of rupees 5,500 crore. Now the e-buses will be deployed in around 19 cities across Gujarat, Maharashtra and Haryana, and this needs to be executed in next 12 to 18 months.
Right. Thanks, Varsha, for getting us the details. So in fact, JBM Auto, that stock has been trading under pressure. And I think, Neeraj, JBM Auto, clearly, I mean, in terms of auto and auto Ank as well, I mean, you don't have a clear picture right now as to what direction they are taking. There is some bit of positivity in terms of two-wheelers, but some bit of ambiguity is still there.
Yeah, which is probably why the stock is hurting, but started off well and then has just completely cooled off despite a very large order. So, yep, point well noted, Hiral. Well, let's move on to conversations and corporate conversations. Goldium International is in focus. What does the road ahead look like for the company? But before we head across to the management, let's bring in Mahima to set up the conversation for us. Mahima.
Right. So, a couple of things happening with respect to the company. Just to give a context as to what the company does, it's engaged basically in business of manufacturing and exporting gold and diamond jewelry, both in lab-grown as well as natural diamonds. In terms of the recent updates for the company, it is mulling over setting up a facility in the US. It has also recently won a 60 crore order for lab-grown diamonds, and it has launched a dedicated website for its retail brand called Origem. In terms of the product mix, it is completely transitioned from pure natural diamonds from pure natural diamonds in store to a major supply of lab-grown diamonds. Lab-grown diamonds exports contributed around 80% of their total export, which is up from 58% in Q3 FY24, and online revenues accounted for 28%. Their order book as of 31st December, excluding the 60 crore order I mentioned, stands at around 175 crore. In terms of retail expansion, they have launched Origem, and right now they have around 3 to 4 odd stores. They're saying that the future expansion, they plan to go to Delhi as well. They plan to open 3 new stores in Mumbai as well. In terms of the market outlook, management is optimistic about maintaining growth despite the stagnant US jewelry market, and plan to double stores to around 150 to 200 over 3 to 5 years. And they're aiming approx 20 stores in FY25 itself. In terms of lab-grown diamonds and natural diamond commentary, management anticipates no further decline in the lab-grown diamond prices. Natural diamond segment is experiencing a decline, is what the management has said in the recent con call, and there's a conscious shift towards lab-grown diamonds, and there's increased customer inquiries for larger carat sizes of lab-grown diamond as well. So this is the overall view and context with respect to the company, as well as what's happening with respect to the diamond space and lab-grown diamond space.
All right. Thanks, Mahima, for getting us the details. The stock seeing marginal gains of 0.6% as we speak. But also, let's welcome in Anmol Bansali, MD at Goldium International. Anmol, firstly, good morning and welcome to the show. My first question coming to you is the rationale with regards to setting up a factory in the US, because clearly, if you see in terms of the US jewelry market, across what we are hearing is that it's slightly stagnant. So why the step? What's the capex behind it? And I mean, what's the strategy?
Well, thank you so much for having me here, Neeraj. So just to share, at Goldium, we are predominant jewelry suppliers to some of the US and American largest retailers of fine jewelry all across various price points. So the idea is that there is currently a duty differential of 6% between polished diamonds and finished jewelry on all imports of jewelry to the US. So at the moment, we're still under evaluation and we're considering setting up a center stone setting facility in New York. Now, this is not a very large capex or very large investment in facilities. It will primarily be driven to set just the center stone of a bridal ring, which, as you know, drives the bulk of the value of a ring. So it is under evaluation and final decisions will be taken with the board after a clear understanding of what the duty differential and duty structures will be once we also get a clear idea of it.
Okay, so basically, are you saying that the step is mainly with regards to saving costs and taxes or tariffs, as you may call it?
Yes, so primarily it's of course to enhance the business that we do to the US retailers by giving duty-free or low tariff access to jewelry produced from India. Predominantly, this is related to the center stone setting of a bridal ring. And of course, it also helps to get closer to the customer.
Okay. Anmol, Neeraj, good morning. Been a while that we've spoken, but good to be talking to you again. And congratulations, you've kind of become the brand to reckon with when it comes to conversation around lab-grown diamonds. Now, I would love to talk about two pieces with you, Anmol. One is, of course, LGDs, because when I look at your Q3 numbers as well, exports surging and lab-grown diamond share within your total exports surging. Talk to us a bit about how that piece is unraveling.
Absolutely, Neeraj. Thank you so much. We've constantly been in focus and at the forefront of lab-grown diamond jewelry exports to the US. Today, Goldiam would be amongst the largest purchasers of loose lab-grown diamonds, fueling our export demand of finished jewelry. For us, what we see in the customer base we have, which is effectively middle to premium income retailers in the US, they seem to have their end customer seems to have wholeheartedly adopted lab-grown diamond jewelry, and you can clearly see that in our Q3 results and the trend of Goldiam as a vendor to the supply chain over the last 2-3 years, where our lab-grown diamond exports as a percentage of our sales have gone from perhaps single digits to, at the latest quarter, north of 80%. And that is coming with significant revenue growth as well. So I think we've been very excited to deliver our Q3 results and our 9-month results. And the trend is well within that J curve of adoption, where to our end customers at least, it's been unstoppable.
Okay. And we saw this. I saw this post from somebody which said that even the certification requirements are now being done away with. And correct me if I'm wrong here, of course. So just wanted to understand from a low base, the uptick in the adoption of lab-grown diamonds has been very swift. But in an industry in its nascency, the numbers can look surprising for a number of years, right? So from where we are right now, if we consider this as the base, Anmol, to your mind, what's the kind of growth that you envisage in the adoption and the sales or whichever metric you can tell us as a benchmark for lab-grown diamonds in the next, let's say, 5 to 10 years?
So addressing your first question first, regarding certification, it's truly a retailer-dependent strategy. So each retailer decides what type and what company of certificate they want to have, and us as a vendor, we have to just execute the same. For us at Goldiam, it's a pass-through cost. Of course, there are some retailers on the larger size where lab-grown initially used to be 10-15% of their sales. It's now crossed majority. They're looking to save costs and downtrend maybe type of certificate or evaluate whether they need to have a certificate at all, since inventory is now majority of what's in their store. And coming to your second part of the question, looking at today as a base, where do we see lab-grown diamonds going? I mean, personally, I think there's still tons of room ahead to grow. On an industry level, the US retail industry, I believe the last I read, something like 20% of sales on a value basis was accounted for by lab-grown diamond jewelry. So especially in the middle to premium income segment. I think there is a long runway of growth still left ahead of us.
Anmol, one question I have with you is with regards to the pricing and the impact in terms of your revenues, because clearly, I mean, they are known and popular for the versatility as well as if you talk about the affordability. I mean, an example, a carrot which would probably cost you 7 to 8 lakhs, in a lab grown is somewhere in that range of 60 to 70,000. Do you think in terms of volumes, to match that number, companies might see a hit in terms of the top line initially. That's number one. And the second aspect is the pricing, because clearly we've already seen a 25 to 30% drop in terms of lab-grown diamond pricing in the last couple of months. What do you have to say on it?
So, thank you, Viral. So actually a funny misconception, just given the way Goldiam has been structured, and we share these numbers as well in our quarterly deck. Our average selling price of lab-grown diamond jewelry, because we employ larger diamonds, larger sizes, larger caratage jewelry, is actually more than 30 to 45% higher than our average selling price has historically been for natural diamond jewelry. It's around $400 to $450 for natural diamond jewelry versus lab-grown is north of $650. So funnily enough, any volume growth in lab-grown diamond jewelry is coming with a value advantage to Goldiam as well. That is because we look at our business on a per jewelry piece basis, and the product sort of allows us to upsell the end customer from a cluster mixed stone sort of design in natural diamonds to large solitaire single stone jewelry designs in lab-grown diamond jewelry. And coming to your second point regarding price declines, we firmly believe at Goldiam that lab-grown diamond prices have stabilized. They found a strong base. From here, we don't see a lot of any price decline coming ahead in the future. The focus is wholly and solely on growing volumes and growing the number of pieces of jewelry we can now sell. Directly, that will result and flow into both revenues and then, of course, PBT and PATs.
Anmol, one point I want to come in over here is when you talk about the pricing is stabilized. In the previous conversation as well, you mentioned about the cost with setting up a lab-grown diamond production unit or a setting unit is absolutely low, so the capex is very low, right? So notably, there is going to be oversupply that is going to come in because the space is not 100% explored. If that is the situation, and if there is oversupply that comes in, why will it not put pressure in terms of pricing?
No, so I believe that phase is already past us. The oversupply has come in, especially if you see in the last 2 to 3 years, capacity of growing lab-grown diamonds in India, particularly Surat, Jaipur, and other such regions, have had a multi-fold growth. That, of course, as demand hadn't picked up to the same level, resulted in a decline in lab-grown diamond prices. Today, where we stand, the cost of growing is very similar to the actual cost of procuring loose polished diamonds in the wholesale B2B trade of BDB and SDB. We don't see any extra normal or abnormal profits from growing diamonds, just the segment of growing diamonds, which gives us supreme confidence to say that prices of lab-grown diamonds have truly found their base, especially in all diamond sizes up to 5 carat. That accounts for more than 95% of everything that we sell.
Just to clarify this, you believe that volume uptick and higher acceptability will make up for the quote-unquote revenue loss that you get in from natural diamond, because the price differential is just so high. So just trying to understand if the volume uptick can be so large. Actually, conversely, I wonder if the volume uptick can be even higher than what the revenues that you would otherwise have gotten from normal diamond sales.
So absolutely, thank you, Neeraj. As I mentioned, our ASP of jewelry products of natural diamonds is $400, $450. The average caratage in that ring is about half a carat of diamonds. Our ASP of lab-grown diamond jewelry is $600 to $650, over 40% higher, and the average caratage of diamonds that we put in those in that ring is about 1.25 carats of diamonds. So you can clearly see the customers trending larger in terms of the diamonds that they use. And for us, which is a unique thing at Goldiam, because we are a jewelry dominant, we are a company focused on jewelry production, not diamond cutting, diamond polishing, diamond trading. The ASP in lab-grown diamond jewelry is even higher.
Okay, okay. So you are saying people are not down trading. If anything, people are actually taking a higher cost jewelry because they're getting the larger stone on their finger ring or in their ears. Interesting. Okay, interesting.
More bang for your buck. Yes.
Okay, and could that happen in India too is the question really. But fair call. Okay, Anmol, I have one final set of questions, and that is around your expansion plans. Because correct me if I'm wrong here, but have you said on the calls that you will move from 20 stores by the end of FY25 to nearly 200 in the next 3 years?
Sure. Thank you for the question, Neeraj. So Goldiam has a very unique proposition where we have a B2B business in the US, cash flow generating, stable, and free cash flow dominant, which is stable and growing. And the benefit of that is allowing us to invest in a brand and a retail story in India. So we have launched Origem. We have 4 stores in Mumbai itself and Mumbai Metro, which already today makes us the largest single lab-grown retailer in the Mumbai region. We have plans, as we have mentioned, to open 20 to 25 stores in calendar year 2025, not FY 2025, calendar year 2025. Which is dominant and focused in all 3-4 metro regions of India. Post that, yes, we have plans to enhance this store fleet to 150 to 200 stores within 3 to 5 years. Again, that will be pulled in and a result of course, increasing COCO stores, but down the road in the next couple of calendar years, opening up to franchisees as well. Today, 100% of all our plans are COCO stores, and every fleet expansion that we are currently looking at will be undertaken by equity at Goldiam itself.
Well, sorry, just one last question because slightly running out of time, but you would do all of this with internal accruals, or would you raise capital for the same?
Great. So at the moment, there are no decisions. For this calendar year, we will most likely be looking at internal accruals, unless we have an outstanding opportunity available to us. And it's, of course, dependent on what the board sees value being available in, and then the performance of Origem and how we want to fuel its growth and how fast we want to fuel its growth to take it further.
The street seems to be liking what Anmol is saying. His stock is inched up from the red into the green, or maybe it's the market as well. But Anmol, I mean, great understanding the plans if you have, and thank you so much for speaking to us today and giving us your thoughts. All the best with all the plans.
Thank you so much, Neeraj. Thank you for having me.
The pleasure was entirely ours. Goldiam International. And great to talk to him. I mean, understand lab-grown diamonds as a space. I think you don't need to go any further. The only question, though, Hiral, obviously we can't ask him, is that if there were to be a transaction between one of the largest retailers, wherein they go out and acquire a brand and then use that for lab-grown diamonds, what's the competition that adds up for Goldiam or other players, and what does that do to margin metrics or return ratios?
The problem over here is there are a lot of unorganized players as well in the lab-grown space, right, Neeraj? And a lot of smaller players. So I think that consolidation to actually happen is going to be important for an acquisition like that, because the space is still small. The bigger players are still not betting that big in terms of CDMO. I mean, if you hear the likes of a Kalyan or a Titan, they are not that convinced with regards to CDMO for the clientele they have.
For the lab-grown diamonds, you mean?
Absolutely.
Not CDMO. But okay, yeah. We take a break on that. When we come back, try and get you some more market commentary, and then a conversation with Trin Nguyen of Natixis. Stay tuned.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में ही ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable.
Welcome back. You're watching India Market Open. 75,650 is what you're tracking in terms of the Sensex, and little below the 22,900 mark on Nifty 50. So no major moves. That somber mood does continue as well. But moving on, you have the Adani Group. They've gone ahead and announced their financial performance for the third quarter of FY25, which reported a record-breaking trailing 12-month EBITDA of more than 86,000 crores. My colleague Mika joins in with details. Mika, what are the details that you're picking up?
Yeah, so the Adani portfolio as a whole has achieved its highest ever trailing 12-month EBITDA, which stands at 86,789 crores, and this marks a 10.1% year-on-year growth for the total portfolio EBITDA. Now, the core infrastructure business accounted for 84% of this total EBITDA, and this business includes your utility, transport and incubating infra businesses, which comes under Adani Enterprises. When you look at the company-wise performance, Adani Enterprises, there was a year-on-year growth of 23% in their Q3 EBITDA. Adani Green Energy Q3 EBITDA stood at 2,247 crores and marked a 10% annual growth. Adani Energy Solutions EBITDA stood at 1,813 crores as of Q3 FY25, which is marked a 15.9% growth. Adani Total Gas saw EBITDA to 73 crores, Adani Ports at 5,000, and the Adani Cement, which includes your ACC as well as Ambuja Cement, marks 3,000 odd crores of EBITDA, which posed a 13.2% growth. As a whole, the Adani total portfolio saw 10.1% growth. In terms of your update on liquidity, there was sufficient liquidity to cover debt servicing for at least next 12 months. Cash reserves as a percentage of borrowing stands over 20%, and this 20.53% of gross debt and cash balance provides a liquidity cover for the next 28 months of debt servicing. The company has also been maintaining its minimum 5% cash balance required for at least 6 years now, and the fund flow operations or cash after tax stood at 58,908 crores as of September 30th, 2024. Lastly, in terms of company borrowings, well, net debt to EBITDA stood at 2.46 as of September 30th, which is below the benchmark of 2.5 to 3.5x.
Right. Thank you, Mika, for getting us the details. So that's the Adani Group of companies in terms of the numbers that we are picking up so far. But apart from that, a whole host of companies, they've actually corrected, and this is despite the earnings upgrades. In fact, my colleague Somit is here with the details. Somit, what are you picking up? In fact, we will get Somit shortly, but let's just quickly do a quick market check in terms of what's happening with the broader markets. You have the mid-cap and the small-cap index that is in focus. Let's pull up that one on the screens. If you can just have the mid-cap index, there you go. Some positivity over there, but negative, clearly outperforming the benchmark indices in trade, Neeraj.
Yeah, indeed, Hiral. So, I just want to, the interesting piece, the small cap index is up 0.4%, and that's a really strong move for that one, and this is despite the Nifty Bank being down 0.65%. Now, is this the classic reversal that we were thinking of as to when will it happen, because the small caps have been smashed out of shape. Well, 2 days on a trot we've had this. Let's wait and watch if this were to last. But it's very important to try and hear from global voices about what do they think about what's happening in world markets. Also because if you look at a clutch of world markets, they are hugging new highs, whereas the Indian markets, save for what's happened in the last couple of days, have gotten sold off quite significantly. Trin Nguyen, she's senior economist covering emerging Asia at Natixis, and spoke very well about what was happening in the Indian policy, growth and markets until around September, October, wherein she expressed some skepticism around slowdown. And the markets have played out that way. And which is why I think it's very important at this current juncture to try and understand how does Trin see both the sentiment, the kind of work that the country is doing around attracting global FDI, and the mood around emerging markets by and large. Trin, great having you. Thank you for taking the time out. It's been a while, but good talking to you.
Well, thank you very much for having us.
The pleasure is entirely ours. Now, I saw, Trin, something that you posted on X, wherein you mentioned that it is up to each country to try and make the most in terms of attracting money, and not all economies are doing that. The shifting global supply chain, of course, from the trade war thereof. And you named 3 or 4 countries which were doing that, including India. Could you elaborate on that first, and then we'll move on to other matters?
Absolutely. I think, there is every day there's news of the tariffs regarding Trump. But if you look closer, it's much more targeted than people think. Whether it's 25% on aluminum and steel, or his promise on certain sectors, autos, pharma, etc. But what's very clear is that there's higher friction to trade with China, which is 10% higher, and that's already on top of pretty high tariffs, right? And given the role of China in global manufacturing and this deterioration of U.S.-China relationship, there is a fracturing of global supply chains. There's great disruption. With great disruption, there is great opportunity. But not every country is viewing this as an opportunity that they want to grab, right? It's not every country in Southeast Asia or in emerging Asia see that as an opportunity. A good example is Indonesia. Indonesia sees metals and mining, moving up metal mining, as a much more bigger opportunity than manufacturing itself. As a result, there's not significant incentives to try to attract this. A country that's much more aggressive is really Vietnam, and to a lesser extent India, with the Make in India and the PLI. Within the PLI for India, it's really they're focused mostly on the on ICT, semiconductors, so mobiles and components of. If you look at the budget, it's exactly it. What they target, it's a lithium battery. So it's a very targeted way to do it. So my argument here is that India can broaden that further. India, if you look at the cyclical slowdown that's happening and the disappointment towards earnings, it's really this really elevated expectations for where India would go, right? It's not 6% is not enough for a country like India. People want 8%. To achieve 8% out to growth, you have not just consumption, but investment, right? Historically, in the past 10 years, it's really the public sector investment. So we really need this private sector engine to be roaring. So the big question is, how is that going to move forward, right? So the RBI is cutting rates, is trying to ease some liquidities, but fundamentally, it's really putting the animal spirit into India's private sector. And I think the way to do that is to emphasize areas in which it can support sectors to prioritize beyond just ICT. I do think that's a more significant support extend beyond high tech into labor intensive. There's a little bit of focus on toys and textile, but the amount is still too small. And the second thing is not so much the money amount, but it's more the policy focus. And I think that's a policy narrative that needs to be driven much more aggressively by the policymakers in India.
Okay. Now, Trin, the Prime Minister Modi, Donald Trump bonhomie notwithstanding, people thought that the meeting and then the subsequent comments by Donald Trump around reciprocal tariffs on April 2nd, etc., meant that it left a lot of people on tenterhooks about what could possibly come in, because a lot of Indian sectors might be vulnerable to reciprocal tariffs in the eyes of a few people. I would love to understand, if you've given this some thought, what do you think of it?
Well, first, I think average effective tariffs, because when you talk about reciprocal, it's going to be too cumbersome to go into every single item, right? So let's just paint broad strokes. The average effective tariffs between the US and India, they're very different. India, as you know, is a much more protective country because it's an emerging country. And the idea within India has always been that we need to protect our market from the floods of foreign goods because we need them to allow them to develop to a certain level before we can lower tariffs. And if we lower, it must be much more targeted in sectors that we want, right? And so as a result, India has had one of the highest tariffs in the world for imports, right? And I think in my opinion, and I think the Modi administration has targeted that well, is that it should target on sectors that the U.S. wants to protect and it's important. The U.S. is an economy that's capital intensive, labor is very expensive. It is not in India's interest or even President Trump's interest to really, and as you can see his actions so far, he's not going to impose tariffs on everything, right? It doesn't want to become self-sufficient at everything. There are just some areas where they want to grow their market access further, right? So I do think from that point of view, there's room to be done. For example, if you look at Modi and Trump trying to raise bilateral trade, not just in economics to 500 billion in the future, not just in oil and gas and importing Harley Davidsons, but also on the security side. So I think there's a lot of room for further improvement, and it's really not really against what India is trying to do. We're just trying to grow ties with the US. I do think that this is a great opportunity for India to start to think about diversifying trades and growing out its exports further, right? The key idea here is that while India does have a trade surplus with the US, I do think that there's much more aggressive growth that India can do in terms of exporting elsewhere, and also even to the US. That growth could be much higher. And the reality here is that for what's happening in India, it's really about growing the middle class and growing jobs and all these different ideas of trade, investment, private sector investment within India. It's really tied to that narrative. Is that frankly, at the end of the day, India does need to attract much more investment. And while it's a difficult juncture, it is a very attractive market. It does have huge labor forces. It does have a lot of domestic demand. Even the domestic demand is slowing. It is still growing in its imports, right? You can see that in the trade deficit, it's rising, right? Particularly its trade deficit with China. And so what that means is that there's still a very large domestic demand market that Indian companies can tap into to serve. And that can be two birds with one stone, which is ability to kind of grow outward this kind of difficult problem of high informal employment and growing outward. And how do you go about doing that really? To continue to focus on what it needs to work on, which is infrastructure building, liberalization of trade, improving competitiveness for not just foreign firms operating in India, but particularly for Indian firms themselves. They have to face a lot of hurdles regarding land, labor reform, red tape, and I think that's an area of significant opportunities. And perhaps the trade war is a way in which that India can do so. And I'll give you an example. I also look at other countries like Vietnam, right? So while Vietnam is facing the threats of Trump tariffs as well, given its high trade deficit with the US, the government just passed a significant budget to improve infrastructure. Because, one of the ways to compete in global trade is, of course, lower cost and higher productivity. And the way to lower cost isn't just via tariffs, to avoid tariffs and to have access in terms of liberalization of trade, but also to lower costs of doing business, right? Whether it's regulations, whether it's infrastructure, whether it's things are getting in the way of people manufacturing things and going about in commerce. So I do think that this is something that the government should continue to press ahead and not being so dispirited by the ongoing spirits of trade war.
Okay, Trin, now the other aspect is, I don't know how much you look at EM as an asset class and flows thereof, but in case you guys at Natixis have some view, we've seen significant outflows from EM ex-China, ex-Japan, presumably towards the US. At the same time, we've also seen FIIs taking a liking to China post DeepSeek. And in the last 3 weeks, there have been significant inflows into China as well. India has seen dramatic outflows, and the FII weightage or FII view on India is the highest underweight since the last 15-16 years. Now my question to you is, and not directly connected, but if you have a sense of the appetite for India, which is so low right now, does it come back with growth being shown, or is there some global event that can bring back the appetite for India?
Well, you can say the appetite for India is huge, right? Given the high valuations. So I would say that we're going through a cyclical slowdown in India. And that cyclical slowdown, there's a big uncertainty, I think, for a lot of people is how long it's going to last, right? Obviously, there are rate cuts happening, but and of course, if you look at India valuations from the market cap, it went from 1-something trillion to 5 trillion, now declined to about 4 trillion. So it's still a huge market cap, particularly also relative to GDP. So I wouldn't say just because that there are outflows at the moment that investors are completely turning, and this is a cyclical reshuffling. The Fed is cutting rates. In a Fed cutting rates environment, a lot of high yielders are not doing really well. High yielders tend to do well in a Fed hike cycle. In the past that happened because why India was growing really fast, rates were really high. In a low yielder, so there's an adjustment, right? In terms of, they people have overshot China, for example, so there's a bit of a reshuffling that's going back. Valuations in China continues to be quite depressed. It is getting a lot better, particularly because now people are seeing that perhaps we should look at some of this value play, given that. And I think there's always been that idea. So I do think it's a healthy correction. The fact is we want to make sure that this is not going to be prolonged too long, right? And I think that is why I think for the Modi government, there's needs to be more significant reform to bring attractiveness to basically to make sure that this cyclical slowdown is only a short-term blip, and that it will be rebounding to a higher level. And to rebound to a high level in a fiscal consolidation phase, what that means is that the government is taking a step back in fiscal spending. It is still spending, but much less. Then you really need private sector capex. And to get private sector capex to get really excited is for them to get much more support from the government. In terms of streamlining the business, the government is doing that regarding rate cuts, but I think more could be done.
Okay, I have one final question, Trin. What did you think of the recent moves? I mean, we had a NDTV Profit conclave wherein various people came in and said that while India was in this growth slowdown, we probably passed that, and the government and the authorities at large have taken some moves. The budget put in some money in the hands of the consumer. Maybe that helps fiscal consolidation on track. The Reserve Bank of India, in addition to all the liquidity measures, have also gone ahead and cut the rates by 25 basis points. And capex has picked up since December in India. Do you think the powers to be have played their cards, and will it show up maybe in the numbers in the months to come?
Well, I think there will be more rate cuts. I reckon that there could be still another 75 basis points of cuts coming for the RBI. I do
even if the Fed were to be hawkish, you think RBI will still cut rates?
Yeah, I think in the short term they might pause, but I do think that they will continue to support liquidity conditions. And the dollar itself is on a softening path, so that would provide some support in space. In terms of fiscal policy, of course, the income tax cuts were pretty helpful, but I think the share of them is too small. And I think the fundamental idea here is that I do think that there needs to be much more aggressive focus of the government to grow beyond the ICT sector. I think the ICT sector is an area that will continue to grow. There's this big coverage that talks about how increasingly Apple is going to produce more phones in India. But I think India needs to also expand to other sectors, right? It's just a huge population. And I think the key concern here is that we're going to miss the boat if India doesn't do much more to attract investment within the country. And I think an area of a missed opportunity is in the labor incentive sectors, where it's much less sexy to develop, right? So I do think that there's much more space for the next budget to refocus less on the agrarian sector, but more on manufacturing.
Okay. Trin Nguyen, always great talking to you to get a sense of how somebody perched at where you are thinks of India and the surrounding regions. Thanks so much for speaking to us today.
Okay, thank you for having us.
The pleasure was ours. That's Natix's view. Believes that there will be a series of rate cuts even if there is a near-term pause in India, and growth rates could pick up as well. On rate cuts, she was a lot more sure, if you will. Okay, now before we wrap up the show, I think it's important to highlight some of the key factors or key things to watch out for. Now, first is Maruti, right? And the auto industry gets up for tough terrains. Maruti's come with a new 5-year plan, with the company planning to reach more than 2.5 million vehicles in sales by 2030. Tushar joins in with details of this one. Tushar, good morning.
Good morning, Neeraj. So essentially, the new 5-year plan is sort of reinstating what the company had stated earlier, that will aim to make 40 lakh cars or 4 million cars in India by 2030. But the sales figure that the company has stated at 2.54 million units in India, that's about 25 lakh odd units in India, stands out, because that means the company is looking to export 15 lakh cars annually by FY30. So exports is going to be a major component of what the company's future looks like. The company wants to become the largest EV maker in India in terms of production, exports, as well as sales in the country. The company's investment, the parent company, Suzuki, is investing about 7,000 crore rupees into India. That's about 1,1200 billion yen. About 2,000 crores will go towards stepping up production capacity. About an equal amount of money will be invested in developing new models. The company believes about 75% of its volumes, incremental volumes, will come from new fuel types, actually, hybrids, electric vehicles, as well as CNG. Most of these volumes will be likely be concentrated, except for the EVs, where the company is set to become the manufacturing hub for Suzuki for electric vehicles globally.
Wow. Okay, thanks a lot for that, Tushar. But you know what? Unfortunately, today the auto companies are sulking, and I think it's the fear of, in the minds of the investor, the fear of what market fragmentation could do to the fortunes of these names. Maruti is down. I wonder if has M&M moved into the green. Sorry, can we just pull up the M&M intraday chart, because M&M started off a couple of percentage points in the red. Now it's up 2%. So okay, I stand corrected. Not every auto company is doing this, by the way. M&M, having corrected quite a bit, is actually recovering in trade today, which is very interesting. What is also done very well today intraday is NHPC. CLSA has upgraded the stock, I reckon. Mihika joins in to tell us about this note. Now, Mihika, you spoke briefly about it at 9:05, but tell us a bit about this note, because it's gotten the stock excited.
Yeah. CLSA has become more bullish on NHPC for sure. Now, what they've done is they've increased the stock's rating. They've upgraded it from outperform to a higher conviction outperform rating, and this rating was upgraded due to inexpensive valuations that the stock is currently trading at after the 25% stock correction in the last 6 months. Valuations now stand at 12 times. That's FY27 P ratio. The target price has been cut slightly from 120 rupees to 170 rupees, but this is due to factors factor in higher capex, but it still offers a 57% upside potential. Now, in terms of the key catalysts for the company, well, CLSA has stated that the start of the Parvati 2 hydro project is expected to boost the regulated equity of the company by 27%. The company's entry into shorter duration pump storage space also stands as a catalyst. And lastly, it expects a 2x increase in the regulated equity over FY24 to FY28. And just for context, regulated equity is the portion of the company's capital that the regulator allows the company to generate guaranteed profit on. Lastly, in terms of growth expectations, they do expect a 79% higher EPS over FY25 and FY27, and CLSA also expects the return on equity of the company to expand 512 basis points over the same period.
Okay, interesting. Thanks a lot for that, Mihika. Now, a number of companies, these are stocks which have done well, but over the last few days, weeks, a number of companies have corrected, and some of them have corrected despite earnings upgrades. Now, Sumit Johnson with the details of some of these. Sumit, I found this fascinating when you spoke about it in the morning, about the fact that multiples have come off despite earnings seeing upgrades.
Yes, and that is largely because of the fall that we have seen broadly in the market. If you look at the Nifty, it is down around 12% in the last 5 months, but the correction has been much sharper when it comes to mid and small cap. They have corrected around 19 to 22%, and there have been multiple reasons, mostly macro. Firstly, is the FII selling that has led to this sell-off. Apart from that, it's uncertainty around the Trump tariff, relatively higher valuations, weakening global and domestic macro, INR depreciation. And one thing that was specific when it comes to Indian companies was the cut in their earnings estimate. Now, for Nifty 50, if you look at, we started FY25 with an expectation of a 13% earnings growth, but right now we are expecting an earnings growth of just 5%. But and because of this, nearly 3,446 stocks out of the 5,600-700 that are broadly listed on the BSE have declined in the last 5 months, and nearly 458 stocks out of the 500 stocks in the NSE 500 have seen a decline in the last 5 months. But not all these stocks have seen a decline because of an earnings downgrade. In fact, most of the stocks that we have gone through have seen an earnings upgrade, at least for FY25 or for FY26. And despite that, there has been a sharp downgrade when it comes to their valuations. There is a 12-month forward PE that we are looking at. However, here we are bringing you the stocks that have seen not only an upgrade in their FY25 EPS, but also an upgrade when it comes to their FY26 EPS. Now, for example, if you look at Nalco, it has seen a 73% upgrade in its FY25 EPS. FY26 EPS has gone up by nearly 43% in the last 5 months. Despite this, we have seen a sharp 40% decline in its valuations, and post that, the 12-month forward PE for Nalco stands at around 9 times. Now, this earnings upgrade was largely on the back of higher volumes, higher prices, and given the fact that analysts are expecting volumes to increase in FY26 as well. For Avalon Tech, it was the higher number of customers that the company is getting, their upgrade in guidance and higher margins that has led to this FY25 and FY26 EPS upgrades. Despite that, the valuations have come down by nearly 21%, and after that, the 12-month forward PE stands at 47 times. Now, 47 might look expensive on an absolute number, but the entire EMS space always has been trading at a higher valuation. Now, when it comes to VRL Logistics, not much of an upgrade when it comes to FY26 EPS, but FY25 EPS was upgraded by 32%, and despite that, we have seen a fall in their valuations, and after that, the valuation stands at close to 23 times. For Arvind Smart, the EPS have been upgraded by 22 to 32%, a fall in valuation that we have seen of 43%, and now the current valuation stands at 23 times. For GE and TD, the EPS has been upgraded by around 15 to 28%. Valuations have come down by 37%, and post that, the valuation of GE and TD stands at around 48 times. Apart from that, there are companies like Brigade, MCX, PG Electroplast, Lupin, and Nuvama Wealth, which have seen their EPS gone up anywhere between 7 to 41% for FY25 and FY26. Despite that, their valuations have come off by around 25 to 44%, and now their valuations for Brigade stands at 29 times, MCX at 41 times, PG Electroplast, as I mentioned, EMS company trading at a valuation of 59 times, Lupin trading at a valuation of 24 times, and Nuvama Wealth trading at a valuation of 19 times after that sharp derating in valuations that we have seen.
Okay, this is very interesting. Can we just go to the previous plate just to mark both these plates? The first one was the multiples of Nalco, Avalon, VRL on the right hand side, and then the next one. Sumit, I'm throwing this out of the dark at you. But one is the P multiple and two is what people usually say the PEG ratio, right? Where within these companies is the highest growth? Do you have any recollection or any memory? I know, for example, Avalon Tech has guided to some very strong numbers, and therefore there might be a high P multiple there. Any recollection of any other company?
What I remember is for Avalon Tech and Irwin Smart, analysts are expecting strong growth. For Irwin Smart specifically, they have a huge land bank and huge upcoming launches that is there. So for this company, I remember, and for Avalon Tech also, they had guided for 30 plus revenue growth, at least. That's what vaguely I remember.
Got it. Okay, but remarkable stuff. Samit, thanks for getting this. By the way, viewers, we are not calling them safe haven companies. We are asking whether this is the list of safe haven companies because there has been earnings growth there. Lovely piece to end today's India Market Open. Thank you so much for tuning in. Up next is Ask Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The new tax regime.
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew and with me is Mahima Vachhrajani. We'll take you through the next 1 hour or so of trade. And it's looking like a prettier picture than it did even an hour back, right? Because you have the benchmark Nifty 50, which has come off the low point of the day. It's trading, treading water, I should say, at this juncture, down about 0.2% or so. And it has once again bounced back from very close to that 22,800 mark. The broader markets are looking sanguine. In fact, they've turned into the green. You have the mid-cap index that's trading with gains of about 0.5% and the small-cap index that's gaining about 0.6%. Let's see if that strength gets built up through the day, because several individual counters have gained in the second half in trade yesterday. Let's see if that strength continues today as well. A lot of stocks reacting to updates, a lot of individual counters moving quite substantially. In fact, 348 counters out of the 500 on the Nifty 500 gaining. But let's jump straight into things.
Absolutely.
Exactly. We'll straight away jump into queries, and let's welcome in our guest, Shaina Mukaddam, who's an independent market expert, is joining us, and Akshay P. Bhagwat, Senior VP at JM Financial, is joining us. Welcome to both of you. I'll take the first query. The first query is from Jay, who's from Andhra Pradesh. The stock name that he wants to know about is JP Power. His average price is around 19, and the quantity that he's brought is around 155. He wants a long-term view on this, so his time horizon is around 4 odd years. Shahina, a very good morning to you. I'll come to you first. JP Power, what's the view like?
I would say it's a hold from here, but it will consolidate for some time because the short term looks weak. But in my view, this is a turnaround stock. And having corrected such a lot from maybe 18, 19 levels, which it was about a year back, I would say at these levels it will consolidate. So it's a hold.
By the way, we started a little late, I know, but the standard way to get in touch with us, you see both those numbers on your screen, one on top and one at the bottom. The one at the bottom is where you can call us, and we'd love to speak to you, so pick those phones up and dial that number and call us. Let's talk about the next counter. We've got a question on Senco Gold, which Noor Fatima has bought. She's writing in from Bengaluru, and she's bought it at a level of 625, so elevated levels, 34 shares. Concern is whether she should average or book losses at this juncture. What is the outlook on this counter? Akshay, on the charts, any signs of an upside?
First of all, good morning. It's been a rapid sell-off for Senco Gold, as I see on the charts. One-way fall from 760 to 320. And it doesn't stop here. So the price setup is pretty weak. Now it's about where you take your exit. That's what it is left to, because I do not see much of an upside here. Overall, the downside can be possibly till around 220 to 225. So as of now, you can maintain a stop loss of 300 considering the highly oversold parameters on the price chart. But at a slight recovery around 365 to 370 zone, you should consider this as an exit.
That's the view coming in with respect to Senco Gold. The next counter that we're talking about is Wonderla Holidays. Parag has a question on this. He wants to know whether he can accumulate, at the current levels. Akshay, I'll stick with you. Are these the right levels to accumulate a stock like Wonderla Holidays?
See this on the price front, it has breached the support at 800. So that's a negative development in this chart as far as the medium term with the 2 to 3 month scenario goes. Now, possibly where can be the support? It's possibly around 500, 540 odd zone from where you can actually consider it to average or buy on dip kind of a scenario. So still some more pain left, probably 540, 500 is the level which would give me more comfort on the chart. So there's where I estimate a possible bottom can be going ahead. So wait for the dip, average it out there. The longer term charts are still strong. It is just that the short to medium term might see some further pain from the current levels.
Okay. All right. The next counter is Suzlon, and what an acquisition price. This is a question coming from Venkat writing in from the UK. So he's gotten up very early to send us this message. He's bought at levels of 13 rupees and he's got a considerable quantity. Am I reading that right? Yeah, it's 10,000 units that he has bought at 13 rupees per share. And Shahina, a dream acquisition, right? Because this is a counter that went from strength to strength. Of course, at one point of time, it tested that 80 rupee level before giving up those gains. But what should he do? He's got a very long-term horizon, 5 to 10 years. So are the prospects looking good?
Well, we are doing pretty well in terms of numbers. If you see, the balance sheet has been cleansed. The growth is good in terms of revenues, in terms of profitability. Having said that, I would say that it is better to take part profits. You can keep the rest for 5 years, 10 years, because there is a lot happening in terms of, tariffs, in terms of what's going to happen in the RE space, especially where US is concerned. And valuations for Suzlon are very expensive, even despite having corrected. So I would say take part profits, and then you can keep the rest for the longer term.
All right, so that's the view coming in with respect to Suzlon. We have our first caller for the day lined up. Mahesh from Bengaluru is calling in. Mahesh, a very good morning to you. How can we help you?
Yeah, hi, good afternoon. Good morning to all. I just want to know regarding Orchid Pharma.
Okay.
I purchased 82 stocks at the price of 1,321 rupees.
Okay.
And recently there was a huge fall in this share. And I want to know whether I can buy at this price, or should I exit in the rallies, or my view is like for a long term.
Okay.
So I want to know why it got fallen that much of huge. What is the reason for that?
Got it.
And can I purchase at this price or not?
Got it. Mahesh, when you bought this, you saw the fundamentals of the company?
Yeah.
Okay. Shahina, I'll quickly come to you on this one. Orchid Pharma is the counter. Today the stock is locked in upper circuit, and this is despite of the US FDA, inspect. It got around 7 odd observations, but they were minor ones, which have, kind of not impacted the stock performance at all. It's locked in upper circuit, but what's the long-term view with respect to Orchid Pharma?
See, US FDA, whenever you have observations, it does affect not only the sentiment for the stock price, which is the reason why it had corrected if you saw in the last couple of days. Now, of course, you're seeing a rebound. I would say be cautious. It's doing pretty well as of now. But if you see in terms of even profits and revenues, it has been a very subdued performance. Likely to continue on. So I would say if you're making, I don't recall his buying price, but otherwise I would say it is better to switch from Orchid Pharma because they have US FDA issues that are starting right now to maybe something like a Dr. Reddy, which is safer valuation wise also, and in terms of product portfolio also.
So the acquisition price, if I remember correctly, is above 1300. Yeah, actually it's 1321, China. So if you've bought at elevated levels and you lost so much ground, would you say hold on to that and add incrementally to a DRL?
Yes, because of course today you're seeing a huge buy, it's in circuit. So let it rally. I would probably take the technical view also. Let it rally and then at a better level because you're seeing the rebound that's coming in. So you enjoy that rebound and then you could switch.
Quick view, Akshay, very quick view on Orchid. Of course, no sellers in the stock right now, but key levels to watch on the upside.
Yeah, so it's a more of a rebound scenario on highly oversold parameters. So the best case scenario as of now works till near 1000 for this pullback rally. I think given the broader chart structure, it makes a lot of sense to go light on this stock once it tests near the level of 1000.
Okay, go light once it hits levels of 1000. Shankar is calling us from Bengaluru. Hi Shankar, good morning to you. How can we help you today?
Good morning.
Please go ahead.
Sir, I am holding a PC jewelry 3000 at 11.70.
Okay.
Average price fixed.
Okay.
Sir, what is the progress for this stock?
Okay, what is the time horizon that you have in mind, sir, and why did you buy it out of all of the jewelry companies out there?
Hello?
Yes, Shankar, I can hear you. Why did you choose PC Jeweler? You had several options in the...
No, it is actually based on the Dalal Street magazine. They have written good about this company, so I thought I can invest.
Okay, fine, all right. So, and you've got a long-term view on this? You can hold for more than a year?
Yeah. I'm already, it is almost 8 months over.
Okay. All right, China, then PC Jeweler. A lot of these jewelry companies have been witnessing not very strong volumes, and of course Mahima is better placed to look at it because she looks at the space very closely, but the value-led growth has been there because underlying has been going up. Gold prices have been going up, but ultimately volumes is what you want to drive. Would you pick PC Jeweler? He's in the green. It's a great opportunity to exit if you give him that suggestion.
No, I would say continue to hold. It looks pretty good. Balance sheet is pretty strong, and it's a small cap in the space, and the overall space should do well in the long term. So I would say hold at current levels.
So hold is the view from PC Jewelers. In fact, PC Jewelers has had a complete turnaround recently. Even the stock split took place in terms of Q3 earnings. If we see, revenue is up almost 16x, and they've turned profitable to around 148 crores from a loss of 198 crores. Margins at 17.5%, which is quite significant for a jeweler company, and EBITDA stood at around 112 crore versus that of 73 crore last year. So it's doubled in terms of the
So
EBITDA
operationally, it looks great, but But the worry is for people that have been looking at this stock for a longer period of time.
Correct.
Corporate governance is something that you must keep in mind.
Absolutely, but they've also, figured out in terms of their debt repayment, a lot's happening there. So they've progressed well in terms of their debt repayment also, which is why, there's a lot of turnaround that is taking place in the company, and a lot of people have turned positive as well. But moving on to the next counter that we're talking about is Sula Vineyards. Lalit from Mumbai has bought around 2,700 odd shares of this particular counter. He has not, bought all the shares at the same time. He's been averaging out. And his buying price now at an average is around 557. He wants to know whether it's worth holding Sula stock for the next 5 years as a time horizon, and what's the growth after all with respect to the company is what he wants to know. Shahina, I'll come to you on this one. Q3 completely was a disappointment for this quarter. Volumes have not grown well for them. Something that's just doing well for them is wine tourism. But, when I spoke to the management, he was pretty positive with respect to, wine sales in India. But what do you think? Is it a good stock to have in your portfolio for the next 5 years?
I would say that it is better to exit the stock as of now, while the numbers have improved. But I think, with tariffs coming off, and especially with import duties and imports improving in the wine space, I would say, it's a small cap stock. And I would say the correction will continue, or the consolidation will continue for quite some time. So I think there are better opportunities available currently. So I would exit.
Exit. All right. Better opportunities available. Quick follow-up then. If you are going to be buying in this Alcobev space, which would you buy?
I would prefer Radico Khaitan,
Okay.
which is also corrected, but I think in the overall space that looks best bet for the longer term. I would buy it at depth, of course, because we're seeing a correction across the board in these stocks. Some rebound is happening, short-term rebound, but I would say you can pick it up at dips.
Okay. And stock is up and about, in fact, 4.5%. Why don't we also pull up? I'm curious, are the other Alcobev companies also reacting in trade today? Let's pull up United Breweries. Okay, not doing too much. It's up about 0.25% or so. United Spirits up about 0.7%. So Radico finding a lot of buyers right now. Tilaknagar also up about 1% or so. All right, let's take the next question. We've got Suresh calling us from Hyderabad. Hi, Suresh. Morning. What would you like to ask us today?
Alec.
Good morning.
Good morning, Alec and team.
Good morning. Please go ahead.
I've got Indian Corporation average price, 1,000 shares average price 150 rupees.
Okay.
I've got an horizon of 1 year.
Okay.
I would like to exit no sooner I get 15 to 20% profit. Is it possible?
15 to 20% profit. So you would have to recover quite a bit of ground and then make some money on top of that.
Correct.
Okay, so let me take this
Correct,
across
correct.
on the technicals to Akshay. Akshay, it's not something that is completely unprecedented, but I guess several headwinds would have to go away for this counter, not least of which is the pressure in terms of margins, right? So, but on the technicals, would you suggest holding on to this for the potential gain of 15% by the end of the year?
Well, look, the price structure is strong. It's just that the stock is not in a momentum run-up. So the journey for it to cover from 204, where it currently trades, to at least till 300 is going not to be a straight V-shaped recovery, but a pretty choppy one, and it might be a time-consuming journey. So the suggestion is the broader trend is strong. So hold on to the stock. 150 is a medium-term support for this counter. When you get this around 250 or 260 zone, the suggestion is go light, book 50% of the quantity around 250, 255, and the remainder you can consider it to book it around 300. So overall, a positive chart structure, but not a one-way journey. There will be hiccups, but broadly I'm looking at targets of 255 from a 3 to 5 month perspective, and around 300 probably if things go as on expected lines for a year or so.
That's the view with respect to IOC. The next counter that we're talking about is Linde India. Vipul Seth from Ahmedabad is holding 15 odd shares at an average price of 6,915. So he's sitting on a loss of 7,800 odd rupees, and he wants to keep holding it for the next 3 years. He wants to know whether he can accumulate at the current levels. Shaina, I'll come to you on this one. Linde India is the counter. What's the view like?
Yes, he can accumulate. He can take it at dips. It's a steady performance in terms of numbers, and valuations are a bit expensive. So I would say you buy, but you buy it at dips.
But buy at dips. I will always remember this counter for what happened during COVID-19 when this company, of course, among several other companies, diverted manufacturing to provide oxygen for people that needed it. And so, in case you were wondering, this is a company that manufactures medical gases as well as cryogenic separation facilities. Let's talk about the next question. I believe we've got a call from Vineet, who's calling in from Ooty. Hi Vineet, how can we help you today?
Hi Alex, I am holding 160 shares of Scient DLM.
Okay.
At the buying price of 615 rupees.
Okay. And what is the time horizon that you have in mind, Vineet?
Yeah, I have a long time horizon on this counter. But as we all know that recently it has fallen a lot, and it has come near to the IPO price now. I just want to know what is the long time view on this. Should I be averaging it? Can I average it at the current price?
Okay, can you average it at the current price? See, I'm wondering if you looked at the latest development for Scient Limited, which came through overnight, post-market hours yesterday. It had to do with a management change. Incidentally, let's pull up Scient Limited and see where it's currently trading. Because, okay, it's down about 0.8%. The development is that there is going to be a new chief executive officer at the helm for the next 5 years, Mr. Banerjee, who was with HCL Tech for a period of 30 years. And the release also talked about the fact that he's going to be involved with the management of Scient DLM as well. Shahina, I'm coming. Okay, we'll have to get back to you on this one. Vineet, do stay with us on this because Shahina's line is getting fixed as I speak to you. I do want to ask her about your question, but in the meanwhile, let me ask Akshay about what he thinks about Scient DLM specifically. 419 rupees on the ticker right now. Would you hold on to this? What is the potential upside?
Yeah, so technically, whenever the stock is getting back to the prices from where it started, its listing post the IPO, it's really not a good way or a stronger chart setup which I see because, after going from 440 to 800 all the way, it's back to where it all started. So technically, at this point, yes, it is at the support. This is at the price you're getting when it listed. So there is a very strong chance that the stock will stage a recovery or a pullback rally. So this is more of a short to medium term view. The recovery rally can at the best work till 480 or 500. That's the pullback scenario I'm looking at. So if you're open to averaging with a time horizon of a couple of months, yes, you can buy, but you need to have a stop loss below 380 because if those prices reach, then really the momentum is off in this stock. So you can average, but the target area is open till 500, and I think averaging should help you kind of recover some part of your losses since you are bought at a high level.
But hold off on that. Vineet, do stay with us because, or pay attention to what is said next because as soon as I get Shahina back, okay, Shahina is back. Shahina, you probably didn't hear the question. We've got Vineet, who's called us from Ooty, who's bought Scient DLM and he's bought it at elevated levels. The level of buy price was 615. The stock is currently trading just above 400. And I was going to ask you about the latest development for Scient Limited, which is you have now a change in the management where you have somebody who has 3 decades of experience with HCL Tech coming on board as a chief executive officer. And he's apparently also going to be having a hand in the management of Scient DLM. Does that give you confidence that the earnings picture will change because it was pretty bad in the third quarter?
Basically that will be a positive, but you do not expect any changes in the fourth quarter in terms of earnings because if you see the impact is actually because of the M&A that they did and the demerger and certain write-offs that they have had to take during this current year. So basically this is not on a regular basis, the numbers that I would not say that this is what is going to go on in the FY26. FY26 will be much better because all these, the write-offs will be done by FY25 FY25 end, and FY26 you'll have the positives come in for both the M&A as well as the write-offs not being there. So any investor in Cyient DLM, I would suggest continue to hold and do not panic with any ups and downs that you see in the stock price for now. You hold on for the next 6 months.
All right, hold is the view coming on Cyient DLM. And interestingly, one of our researcher who, tracks the market space very closely also pulled out, 10 stocks with highest potential when it comes to the Bloomberg, estimates, and Cyient DLM topped that chart. It has the best target as 899 out of 10 analysts that track the counter and a potential of around 109% going forward. And this is a 12 months target, of course. So, that's with respect to Cyient DLM, but we have our next caller, Anant from Bengaluru is calling in. Anant, a very good morning to you. How can we help you?
Hi, good morning, Mahima.
Good morning.
I was holding Indotech Transformers.
Okay.
30 shares I am holding.
Okay.
And I bought it at 2,602. That's the average price I have.
Okay.
And I see the results were really good. And from say around 2021, the company is actually doing really good. And the top line is really good, and the bottom line, I see that every 2 years they are doubling.
Right.
As the base is low.
Right.
And it has actually fallen from high of 3,700.
Right.
Now it's around 2,600. I would like to know whether I can. It also the support was around 1,800. In that range, it was giving a good support.
Right.
I would like to know. Can I add more now, or should I wait, because this is a small cap company, and small caps are all getting hammered very badly, and the results were really good.
Got your point, Anand. So you want a technical view on this one or a fundamental view?
I would like to know fundamental, and can I add more now? Or should I wait?
All right, Shahina, I'll quickly come to you. Indotech Transformers is the counter. If you have a view, he wants to know whether he can accumulate at the current levels or not from a longer term perspective.
See, everything that he has listed out in terms of financial performance is correct. It's a small cap. It's doing pretty well in terms of growth. The only problem, which is why the correction has happened, is one, of course, the whole small cap basket is falling. Second is that valuations are extremely expensive. That is something he's not really looked at. Basically, valuations on all parameters is expensive. It's a small cap. But what I see is that if you want to average, you can average, but not at current levels. Of course, today the stock has rebounded. It is only buyers, I think. But you better to average it at maybe 1,500 or 1,600 would be better levels to average because your cost of buying is already high. It's a good stock. You can continue to hold for the long term.
Continue to hold, and 1,600 is the levels where you accumulate, is the view coming in on Indotech. The stock is locked in upper circuit. But with that, it's time to slip into a short break. Viewers, Shahina and Akshay, don't go anywhere. We'll be right back. More stock queries on the other side.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है नौकरी
Welcome back. You're watching Ask Profit. This is a show that gets you answers to all of your stock related questions, and several of you have sent us messages on WhatsApp, so let me start with one of those. We've got Lalita who's writing in from Chennai, and she's bought GMR Airport at a price of 67.7 rupees or 76 rupees. The stock is currently trading just above that. In fact, she points out that it went up to 90 but then fell flat. It's a nice way of putting it. Akshay, I'll come to you on the charts. What is the upside potential? Of course, this is part of a wide group of companies and stocks that is cooled off quite substantially from those heady levels. Does it make a move back now?
Yeah, so if you look at the longer term price structure, minimum with a time horizon of a year or above, the price structure is still strong. It is the short term space where the price structure is a bit choppy. So the support zone somewhere lies near 65 to 60 odd levels. So there should be some room which you need to consider from the current levels, maybe 5-10 rupees more. That can be the downside from here from a short to medium term perspective. But if you have time, you are open to averaging the stock, then 60-65 range is a good level to average it out. From a longer term perspective, I believe the stock should again recover back to levels of 90 plus eventually within a year.
That's the view with respect to GMR Airports. We have our next caller, M. Dasgupta from Delhi is calling us. A very good morning to you, Mr. Dasgupta. How can I help you?
Good morning, ma'am.
Good morning.
Good morning. Yeah, ma'am, I would like to thank you and your panel for such an insightful program on the stocks and how to benefit by picking the correct stocks.
Thank you so much.
Yeah, ma'am, I have Hatco shares, 200 shares at rupees 67. Bought it for rupees 67 average price.
Okay.
My query is, I am a long-term. My view is long-term, 3 years plus.
Okay.
So, what is the view on Hatco in the next 2-3 years? And when can I re-enter? At what price level can I re-enter this share?
Okay. Shahina Hatco, all right, thank you so much, Mr. Dasgupta. Shahina, Hatco is the counter and he wants to keep holding it from a longer term perspective. He also wants to know what levels he can make an entry again so that he can accumulate more.
Yeah, it's one of the cheapest stocks in the housing space, housing finance space. Public, it's a PSU. So I would continue to recommend to hold the stock. If he wants to average, given the way the market is behaving, I would prefer that he averages close to about 175, and then of course he could hold it for a year or two.
Shaina, one of our viewers, Satya, is talking about a recommendation that you had made a while back, 272 days in fact, he's specifically pointing out, Motherson Sumi Wiring. And he bought at levels of 68 rupees. Now, as part of the broader market correction, this is also a counter that has dropped a bit, right? It's currently trading just under that 50 rupee mark. He's wondering whether or not you've changed your view on this stock. And what should he do? Should he use the current price to average his holding? He's got a long-term holding. Would you sell? Would you move to something else? Would you average at this point?
Well, the overall auto anch space is going through a bit of a correction because of the overall, OEMs as well as China not doing that well in terms of OEMs. You have a lot of US, there are issues. So I think Motherson Sumi Wiring has also corrected in line with that. I would suggest that he can average, but average it at little lower levels. The numbers also were a bit disappointing, but I think from here on it will consolidate. And for averaging, I would give a level closer to about, closer to where it is as of now. Maybe 45 levels would be a good level. You can average it and then hold it for a year.
For a year. Upside potential though, I know I'm throwing difficult questions at you. There's a lot of factors that could change. And the auto ank space, of course, this is a wire harness manufacturer, so it would ultimately track what is happening in the automotive space. But still, potential upside?
I would say 60 is something that he can look at if he's holding it for the medium term, another 1 year. And, they also have EV. They are doing pretty well in EVs also. So I would say the growth is going to come. So you could continue holding it.
All right. We've got our next caller, Chandrasekhar, who's calling us from Bengaluru. Hi, Chandrasekhar. How can we help you today?
Yeah, good morning, sir.
Good morning. Please go ahead.
I bought shares of Hikal, Hikal company.
Yeah.
Which is an intermediate chemical, specialty chemicals for 540 rupees per share in the year 2021.
Okay.
Now it is trading at 350.
Yeah.
So would like to have a view to hold or sell.
Okay. So what was the thinking, Chandrasekhar, when you bought it? Clearly you know what the company does. And did you study the company?
Not very much, but I thought it's a chemical industry was on the upside. So with the advice from some people, I bought it actually.
Okay. So specialty chemicals is something that we've been waiting for some time for a turnaround in. Sorry, I'm going to come back to you on this one since it's an earnings related question, long-term holding. Shaina, I'm going to borrow from one of the experts on this program itself. We've been waiting for the chemical industry to turn a corner, but it seems like it's a straight corridor and there's no corner in sight. Is that what you believe as well, Hikal Limited?
Yeah, the chemical industry, we've been waiting for quite some time for it to turn around. But I think it's going to take some more time. If you see the numbers in the last quarter also, they were a bit disappointing. And I think even the next quarter will be a bit disappointing. But at the same time, I think, for the medium term investor, it's better to continue to hold at current levels because, there is going to be a turnaround. It will take a couple of more quarters maybe. So I think it's better to hold rather than switch.
You coming in for Hikal. The next query that we have is quite an interesting one. Gauri is asking this. Akshay, I'll come to you for this query. So what she wants to know is that she has 15 lakhs to invest and she wants to invest this in 3 stocks for 1 year. She's saying that she'll be happy investing in mid-cap stocks as well, and she's considering ABB India, MCX and Dixon. These are the 3 counters that she has filtered, but if you put on her hat, which will be the 3 stocks that you would invest in for the next 1 year if you had 15 lakh rupees?
Well, out of the 3 stocks which she has mentioned, I think one of the stocks fits in the technical setups which I track, and that is MCX. I'm looking at from a minimum 1 year investment horizon. So this price structure is pretty strong. It is just that with the recent market rough patch, the stock too has seen some bit of a correction. But broadly, 5200 is a very strong support zone for this stock. And my thought is eventually you should see the stock returning back to the swing highs of 6800 plus. So MCX fits the bill. 5200 is the support. Your stop losses can be below that. You can consider Kotak Mahindra Bank from the private banking space. It has broken out of a 3 to 4 year long price range consolidation. Easily targets of 2400 to 2500 is in the making. So this can be the second name you can look forward to. And Ashok Leyland is the third stock, which is from the auto space, which has stood out pretty strong in the last 4 or 5 months of mayhem in the market. 200 is the strong support base which this stock has set up, and now it is just about to catch strong momentum, which can see the stock sailing for levels of 270 to 280 with a time horizon of a year. So these are the 3 names. MCX is obviously the name which you have on your list, but the other names would be Ashok Leyland and Kotak Mahindra Bank.
Okay. And just a quick follow-up to that, Akshay, honestly, I've not met a lot of people in the recent past that have dry powder to deploy. They've tried to catch the bottom and they've effectively deployed before the bottom was found. I don't know if that's the case right now as well, but then seemingly she has 15 lakhs. Of course she has. So therefore, would you advise her to do the deployment incrementally and not all at once? Be a little cautious?
See, markets is a journey where you need to be present in all situations. Then only you reap the benefits of getting the cycle. Exactly, no one can predict where the bottom is. But if you have money on hand, you have withered the pain in the market, which people have been going through in the last 5 months, and you have cash at disposal. That's a very good news that at such lower levels you are able to enter with a good amount of money. So I believe these are good levels to enter. Really, this is the bottom, or still there is some pain left. No one can answer that, but it's a cycle of investing. You should be present, and when the cycle retraces back, definitely gains are in the making.
All right, interesting, perspective coming in. Thank you for that, Akshay. We have our next caller, Adi from Hyderabad, is calling in. Adi, a very good morning to you. I believe you have a query on Canara Bank.
Yeah, hi, good morning. So I bought Canara Bank at 90.5, nearly 100 shares.
Okay.
I'm looking to know if I can, hold them for 6 months to 1 year, and if I can accumulate more at current price.
Okay. Your question is crystal clear. Akshay, I'll come back to you again. Canara Bank is the counter. How is it faring on charts for the next 6 months, and can he accumulate more at the current levels?
So PSU banks have been at the wrong side of the market. Again, one side selling from 125 to 87 where it trades, but somewhere now it is returning back to the value support areas on the price technical charts. 80 to 85 is the sweet spot for this stock if you're looking at from a short to medium term perspective. Ideally, there should be a bounce back from these levels, but stop loss or risk management is a must considering the nature of the market. So here 67 is the stop loss which I would recommend to buy or add with the estimate that the stock should rebound from 80 to 85 zone, and if it does, then 105 to 110 can be the possible target projection with a time horizon of a 6 month scenario.
Okay, all right. So that's the view on Canara Bank. Jassi has messaged us and asking about Deep Industry. Price that he's acquired at is 562 rupees. The stock is currently trading at 493, so sub 500. What are the prospects? He's not really given us a time frame, but therefore I will go across to Shahina on the fundamental. Shahina, have you tracked this company, and what do you make of it? Would you hold on? Would you use this opportunity to buy more?
Well, it's a small cap. I believe it's an exploration of gas, coal and gas. But I would say that it's doing pretty well in terms of numbers. If you saw the last quarter also, they have had a 47% growth in revenues. So it looks like there seems to be some buying also coming in. So I would hold at current levels. But if you want to add, then it is better to average it at lower levels, much lower levels, somewhere close to about 430 type of levels. But as of now, it's a hold.
And this is a counter that has actually done reasonably well in the context of broad market correction, right? 12-month gain of 100%, 6-month gain of 40+%. So it's done pretty well. Unfortunately, the acquisition took place at slightly elevated levels. And that is true for a lot of people. Don't worry, you're not alone. Shankar is calling us. Shankar, hi. Shankar from Chennai, by the way. Hi, Shankar. How can we help you today?
Hello, sir. Good morning.
Good morning to you. How can we help you?
Sir, I want to know about TCS.
Okay.
The share dropped almost 15% for past 2 months or 3 months. Shall I buy at current levels?
Okay. And when you buy at the current level, Shankar, are you looking to hold for the long term, or is this simply...
Yes, definitely. Long term, I am ready to buy. But decent profit is coming. I can ready to book early.
Okay, fine. All right. So I got your question. Let me go across to Akshay then from that perspective, because Akshay, TCS off the low point of the day today, yesterday, and actually this week, if I'm not mistaken, it's taken a bit of a battering, right? And when the pack was doing well, also it was not doing too well, if I remember correctly. Is this the right moment to deploy into TCS?
Well, see, technically, this stock has seen a trend line breakdown. So that means that the setup is bearish from a short to medium term perspective. So really, you're not going to catch momentum. The chances of a further drop in share price looks pretty higher, and possibly 3550 to 3600 roughly is the zone where this stock may draw comfort to invest or look for opportunities to buy again. So those are the levels: 3550 to 3600. Roughly, it's a 50 odd point zone from a midterm investment perspective. There is where those are the levels which I would get comfort in putting my money in. So wait for those dips if you want to buy TCS. I think IT has had its fair share of run in the last 2-3 months. It's been in a correction mode since last 1 month, and TCS is one of the weakest price structure in the IT pack. So makes sense to wait for those levels before taking a buy position.
So that's the view with respect to TCS. The next counter that we're talking about is ICICI Pro Life. Hariom Khurana from Karnal wants to have a 1-year view with respect to this counter. Can I buy at the current price is what he wants to know. Akshay, I'll stick with you again for this one. Is this the right time to enter ICICI Pro Life?
Life insurance space, this stock has kind of held on in the last 3-4 weeks around the levels of 575 odd zone. But clearly the price structure is still trading in a negative zone. So there is, although there might be some trading pullbacks from the current levels, ideally the right price to get in should be somewhere around 550. So that is a good risk reward entry level for you. So wait for the levels of 550 to buy the stock. Stop loss of 515 should work well, and a recovery from the support zones should see the stock targeting 625 from a short to medium term perspective.
Okay, that's the view on ICICI Pru. The next question is from Harjeet, who's writing in from Mohali, and he's asking about Quadrant Future Tech, which he's bought at a price of 538. The question is, being a railway Kavach stock he invested, and can he hold or sell? He's not really given us a time perspective. The stock is currently trading below his buy price though. Any view on this, Shaina? Is this in your coverage, and would you hold on to this?
No, I don't have any coverage on this. I think this must be a recent listing.
Yeah, I think so. Yes. So, but okay. Yeah. So then let me ask you this, right? If you are looking at playing that Kavach story, which ultimately is what governs the safety of our railways, then what are the stocks that you would pick? Or even in the broader railway space, RVNL, for example, this week saw a bounce after it got that order win. I believe it was yesterday or day before yesterday, and double-digit returns in a single day, right? So any of these names that you see have maybe bottomed out and that you can buy?
Well, I would prefer some RVNL. You have Keynes Technologies. I think these are also in a similar space, better positioned, well capitalized, and they have got good technology, good growth coming in the future. So on any dips in this market, this market is giving us an opportunity to buy high quality stocks for the longer term, where you're seeing valuations expensive as of now, but the future next 2-3 years looks much better for these companies. So I would prefer as of now to be in cash and to add on dips these better quality companies for the long term.
Okay, we have our next caller. Prithvi from Bengaluru is calling in. Prithvi, a very good morning to you. How can we help you?
Good morning, NDTV team. I was holding Arrow Green Tech.
Okay.
At around 733.
Okay.
And I have 70 shares.
Okay.
As this is a small cap, after good results, it is coming down.
Right.
I took it 1 year back at around 900 plus, and now after averaging it is around 733.
Okay.
Again, it has fallen. Again, fundamentals I see it is good, and valuations are good. Results, quarterly results are really good. I would like to know, can I average it, or is it fundamentally good stock to hold, or should I book loss?
Okay. Shahina, quickly, Arrow Green Tech, not sure if you have a view on this one because it's a small cap company with a market cap of 871 crore. But just to give you perspective, it basically is in the business of biodegradable products and high-tech products when it comes to, technology with respect to the biodegradable products. If you have a view, is it a good stock to have in your portfolio?
Well, valuations on pure numbers, on price to book, etc., look expensive. But yeah, the growth, as he mentioned, in terms of numbers, very strong growth in turnover and profits, more than doubling. So I would say, yeah, you can hold, hold. But if you want to average, it's better to average at much lower levels, maybe somewhere close to about 500.
Okay, all right. That's a view on Arrow Green Tech. Murli Krishna is calling us from Visakhapatnam. Hi, Murli. How can we help you today?
Yeah, hi, good morning. My query is on Ola Electric. I hold 11,700 quantity, which I initially bought at 85, 88, and I averaged it at price of 75 now. See, this is the most volatile stock which I have seen over a few weeks. From positive 20, it is at negative 20 now within a month. So how would you look at this stock? Probably should I average it? It is at 60 levels now.
Yes. So, and what is the time horizon that you have? You bought a significant quantity and you've added to that. So, what's the time horizon that you have?
Except probably like 2-3 years. Any four-wheeler expected from Ola?
Not that I'm aware of.
Tesla coming in.
Not that I'm aware of, but I mean, this is a company that looks to disrupt. But from what I know of the automotive space, Murli, it's not very easy to set up a manufacturing plant to manufacture four-wheelers very, very easily, right? And so, therefore, I don't think that anything is in the offing right now. But let me go across to Shahina just to get her perspective on this. Shahina, Ola Electric, there have been disappointments, but the companies look to shore up its service offering. It's got a two-wheeler that it launched not too long back in the commuter space. Would you hold on to this or would you exit given the opportunity?
Well, the opportunity is definitely there, and they are actually trying to address one of their major issues, which is customer satisfaction and the problems that were originally there in their first launches. Having said that, I think, despite this correction, being a new listing, we really don't know which investors will try to book out yet slightly when the stock rebounds. So I would continue to hold, but at the same time, if I want to average, I will not average at current levels. I would say a 55 would be better levels if you want to average, because you see they are also losing market share. It's a very difficult, as Alex said, it's a very difficult space to actually compete, and you have the biggies like Hero, you have the biggies like Bajaj, which are coming out, TVS with very good bikes. So to that extent, it's electric bikes, so it's going to be a difficult space for them to actually regain back their market share. So don't average at current levels.
Average. Also, incidentally, on the point that a lot of people are focusing on today, and some of the automotive companies sulked early on in trade but rebounded, is the potential of Tesla coming in. And even for Tesla, it's not going to be very easy for them if they have to sell vehicles that they make here in India. They're not going to be able to set up capacity overnight. And so, therefore, I guess to a certain extent that has been taken by the street. Maruti is underperforming, but the rest have actually moved higher. Mahindra & Mahindra trading with gains of about 2.4% at this point. And it's a couple of electric vehicles doing particularly well in terms of the bookings that they've gotten starting Friday and heading into this week as well. Tube Investment is the next counter we're talking about. 2,950 is the buy price. Shabir is asking whether he should hold or exit. The stock is currently trading below the buy price at 2,740, but it's up and about in trade today. Akshay, what's the view?
Well, see, the stock has taken a beating in the last couple of months, and considering the oversold nature of the prices on the price charts, it is staging more of a pullback rally scenario. So really, if this is the bottom or not, the question is there is scope for one more round of bottom, which can be 2,500, and that's a massive support for the stock. So right now, it makes a lot of sense to take an exit around the pullback rally. 2,900 to 2,950 looks like a good best case scenario in the current situation. So on a slight pullback, it's recommended to take an exit in this stock.
Okay, all right. So that's the view on Tube Investment. It's time to hit the rapid fire segment on the show, and this is where Shahina, Akshay, Mahima and I will throw questions at you over the course of the next 2 minutes to answer as quickly as you possibly can. Challenging, of course. This is Indigo Paints that we're talking about first. 1,650 is the buy price. Sanjeev from Rani Bennur is asking this question on the fundamentals. Would you hold or would you sell? Shaina?
I will sell.
Okay, Happiest Minds is the next counter. Saurabh has bought 20 shares at 889 a piece. He wants to know what are the future prospects and whether he should continue holding from a longer term perspective. Shaina, what's the view?
It's neutral.
Okay, neutral.
I would say it's neutral. You can hold for the long term.
Okay, Yes Bank bought at levels of 20.5 rupees. Would you hold or sell? Anand wants to know. No time profile given. So Akshay, on the charts, would you hold or sell?
It's a negative setup. I'll keep a stop loss of 17 and look to exit around 20.
Okay, Varun Beverages is the next counter. Gul is asking this question. He wants to know whether it's a good buy at current levels or not from a longer term perspective. Shahina, what's the view?
Buy it on dips.
Okay. Tata Motors bought at levels of 807. Would you accumulate for the long term at this level? Would you also be able to provide a stop loss for this? Akshay?
So yes, long term you can buy. 650 is a massive support. Some more room might be on the downside. Keep a stop loss of 625. You will get your levels of 800 back.
All right, Nias is writing in from USA. He wants to know whether it's the right time to enter Siemens or not. Akshay, what's the view?
Siemens, you'll have to wait a bit. There is chance for some more downside. 4,500 is the apt level to re-enter the stock.
Okay, JK Tyre companies have had a torrid Q3. The question is, would you hold on if you bought at levels of 362? Sujit wants to know. Shaina?
Yeah, it's a hold.
Okay, HUL is the next. Sorry, go ahead, Shaina.
No, you can hold at current levels.
Okay. All right.
Okay, unfortunately out of time. Out of time on this leg of the rapid fire segment and indeed on the show. Shaina and Akshay, thank you so much for joining in. Always a pleasure having you on the program, and thanks so much for the advice that you dispensed today. That brings us to the end of Ask Profit today, but we've got lots lined up over the course of the day. If your individual question was not answered, we'll be back tomorrow to take more, so tune in then and stay tuned. Lots more coming up on NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday.
Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every day. Well, today we are taking a look at one of the foremost companies in the QSR space, where you just had maybe one or two back then, about 10 years ago. One of them was, of course, Jubilant FoodWorks, and I'm talking about the listed space. This one, of course, is known for its Domino's brand. But besides that, it's also come up with a handful of others, over the years. Now, Jubilant FoodWorks is actually a part of the Jubilant Bhartiya Group, and we do know that the group also does have a lot of interest beyond just quick service restaurants. In fact, this is India's largest food service company at the moment right now, and the group network comprises of around 3,300 odd stores across 6 markets, and it's not just India. Well, the company does cater to Turkey, Bangladesh, Sri Lanka as well, along with Azerbaijan and Georgia. Now, the group has a strong portfolio of brands, which in the emerging markets, and I've already told you about Domino's, which is the most well-known unit of the company, but it also has names like Popeyes and Dunkin' Donuts too, and it has 2 brands which would include Hong's Kitchen, which is this particular Chinese brand is not too old. It's been around, but not as long as Domino's has. But besides that, of course, the company is also looking at the cafe brand and coffee in Turkey. So a very, very interesting portfolio of names and brands in terms of QSR, that is quick service restaurants. And now we are going to talk about how the company has done over the past few years, as well as several other fundamentals. So let me tell you about all the things that we are going to address, and perhaps also rate the company. And among the parameters that we are going to, of course, consider is, of course, the income statement, the balance sheet, the cash flow, as well as return ratios. And if we move beyond, we talk about shareholding, street credentials in terms of how the share price is done, valuations, as well as street coverage on the company. And by street coverage, I mean what the analysts are making of Jubilant FoodWorks at the moment. As I've already mentioned that, Jubilant FoodWorks has been around for a while now, and it was one of the foremost listed companies, listed QSR companies on the exchanges as far as India is concerned. But, to shed more light into the fundamentals of the company, I also have with me Mahima Vachrajani. She's joining us, and perhaps you can give us more insight into how things have panned out. Mahima, good morning and thanks for joining in. Let's start again with revenues. I was actually tracking the company where revenues were less than about 400 odd crores many, many years ago. It's, of course, made a 5,600 crores in terms of revenue in FY24. But how does this company look in general?
Right. So in terms of, the 4 metrics of the P&L statement, the company looks strong enough. In terms of the numbers, the 9 months FY24 in fact is around 6,000 odd crores, and the FY24 number stands at around 5,600 odd crores, and the 3-year CAGR for revenue growth has been 19 odd %. In terms of the EBITDA number, it's grown to around 1184 from 1144, which was the figure in FY24, and it has had a CAGR of 3 years. Margins have taken a slight hit, but this is because the company has gone pretty aggressive when it comes to the store expansion, which is why the margins are a tad bit under pressure. But net profit has also seen a CAGR of 20%. So overall the income statement looks good, and even for Domino's as a whole, the like-for-like improved quite a bit in Q3 FY25. In fact, the QSR as a space, as a whole, has seen a turnaround when it comes to the Q3 numbers. Like-for-like growth, which was negative a few quarters ago, has turned positive and now in double digit. For Q3, for entire Jubilant Foodworks, if I remember correctly, was around 12.5%, which is quite a significant number when it comes to like-for-like growth for QSR space, which has been muted in the past few quarters.
No, sure, point taken. And we must remember that, a lot of these points will be intertwined with the rest of the QSR space. While we can get an individual point of view on some of these companies, do remember that there won't be a significant deviation in other parameters like same-store sales growth or, new store additions, perhaps markets in which they are consolidating. There will be a deviation, but not a significant one. But, we'll come to that. We'll take it step by step. It's going to be a positive as far as your income statement is concerned, as Mahima has mentioned, after the kind of growth that we've seen, about 19% CAGR over the last 3 years. I'll talk about the balance sheet. And at the moment, it does seem like it's in a steady place. The FY24 net worth, that's stood at around 2,200 crores, a little less than that. It does have a debt of around 1,200 crores, and it does need that much debt not only for running operations but also expansion, which of course gives you and contributes to the top line significantly. As far as cash in bank is concerned, that was also at a healthy level of around 157 crores, and it's the same largely for the first half of this financial year as well. Not too much deviation in terms of your net worth. The gross debt has moved up, but I'm not going to judge the company by that little bit of an increase here because it's mid-year, and a lot of these metrics do change considerably by the end of the entire financial year. So overall, we will give this one a thumbs up as well. But Mahima, let's talk about cash flows too. At least those from operations look all right. What about net cash flows?
Right. So, as you rightly mentioned, the cash flow from operations look all right. They're nearly around 794 crores in the second half of FY25, which was around 1,000 odd crores in FY24. Second half of FY25 on the net cash flow basis has turned, negative, but we'll have to wait for the entire year, to get over to find out as to how the net cash flow situation ends, because even in FY24, the net cash flow stood at around 13 odd crores. So it might turn negative, but it might, may not even turn positive because of the store additions that is taking place for them right now. So there's a lot of cash outflow for them right now. So we'll have to wait and watch out for as to how, this second half pans out. So that is one thing. Overall, in terms of the net cash flow, since you mentioned the gross debt as well, that position does not look very nice because you have a net cash flow for around 13 odd crores, but a debt of around 1,200 odd crores. So for that aspect, I think it calls for a neutral rating right now. Which is why that's the only reason as to why cash flow statements is a neutral rating. Otherwise, in terms of operating cash flow, the company looks pretty strong.
That's the point that I was trying to extend, and Mahima's made that very well. That is, your net cash flows will be impacted to a certain extent by the impact of your higher debt. Of course, your cash flows from investing activities will lead to a negative number, or at least a number which will negate all the positive cash flows coming in from operations. So that's another thing to keep an eye on, which is why, of course, it's a neutral rating. But I'll talk about the return ratios. Well, these are tough ones. They don't look amazing right now. So look, we're working with thumbnail, pardon me, the thumb rule around ROE and ROCEs is about 20 to 25% and over, and would be a good healthy ratio. But as far as the ROCE for this particular company is concerned, it's never been above 15%, and in fact, it's come up quite a bit over the last few years. So, from around well over 15, the mark of 15 is now below the mark of 12%. Look at the return on equity as well. This one was actually super healthy back in 2022 at nearly 25%. But this one has also come off and coming down to around 19%. Return on assets to, again, from 10% to 6%. So there has been a little bit of a decline as far as your return ratios are concerned, which is why we will give this one a thumbs down. But that's as far as your financial statements go. So we've spoken about your income statement, we've spoken about cash flows, your balance sheet as well. Along with that, the kind of return ratios that you in fact tend to see, and based on that, well, this is how things have panned out. But let's look beyond that, and we'll consider how things could potentially pan out for the shareholding. So Mahima, what kind of observations are you making here?
Right, in terms of shareholding, it's a well-held company. Promoters have not sold their stake. The promoter stakeholding is approximately at 42% odd. In terms of FIIs, the number has not changed much when you compare September 24 to December 24. But if we see the FII holding from a longer term perspective, March 2022, the FII's holding was around 32% odd, which has come down to 21% odd. So FIIs have been selling, in a Jubilant FoodWorks. But DIIs, on the other hand, have been, increasing their stake in this particular counter. Again, here where we compare September 24 to December 24 numbers, the change is not much. But if we compare these numbers to March 22, DIIs were holding around 15.6% odd share, which is increased and doubled to 30%. So while FIIs are selling, DIIs are buying this particular counter. And lastly, in terms of public shareholding, the public shareholding stands at around 6% odd right now for the company, and that is reduced from 10% odd which was there in March 22. But overall, thumbs up for this particular metrics, because promoters have not sold stake in the company, which means that promoters are positive when it comes to the growth of the company.
Yeah, I just want to make an additional point here in terms of when you consider companies where your promoter holding is not over 50%, you want to look at the stability of your institutions and the kind of the diversified holding that the institutions have. And as far as FIIs and DIIs are concerned, that's exactly what you've got. This is one of the reasons why we are giving this a thumbs up, because your institutional holding is considerably higher and your float beyond institutions and promoters is not significant, which will always be and rather bode well for the stock. So in terms of some of the big contributors to the shareholding, we have LIC. We also have the NPS trust in fact, which has about 6% stake in the company. Besides that, we have plenty of AMCs as well who hold good shareholding in the company as well. And again, FII is also significantly there, so which is why it turns out to be a positive. But let's move on and talk about the street credentials as well. What has the company done? So it's a little bit of a mixed one. In year-to-date performance is a tough one. Of course, it is, because the entire space is looking at a downturn. We have the mid-cap indexes, the small-cap index, all coming off significantly over the course of the last couple of months. But if you move on and take a look at the one-year return, we haven't seen as much of a significant return in the last 1 year for the mid-cap and the small-cap indices as the kind of return that you're seeing for Jubilant FoodWorks, up as much as 40%, which certainly is not bad at all. I think a little bit of a pain point would be your share price doubling over the last 5 years. 89% return to be precise, so it's not even doubled. Is this a bad one? Okay, so it could be a bad one if you are looking at multi-baggers, which have given you a 2 times, 3 times, 5 times, 10 times return over the last 5 years. But if you look at Jubilant FoodWorks from the point of view that is giving you steady doubling over the last 5 years, well, it may not necessarily be a bad point, which is why it would, if it was just a 5-year view, we'll give it a neutral rating, but because of the fact that it has significantly outperformed the markets in the last 1 year, it's going to be a thumbs up because of the fact that we were on the fence on this one, and the last 1 year returns have been good. Let's move on to perhaps the more interesting aspect of Jubilant FoodWorks, and perhaps Mahima can take us through this one.
Right, valuations. You know, with the kind of up move in the stock, the companies have not been, QSR space as a whole have not done very well in the past few quarters, which is why valuations, you know, don't look cheap for these companies. In terms of EV to EBITDA, Jubilant FoodWorks stands at around 37 times, that is 12 months trailing. It'll go to 33 to 27 in 2026, and this is pretty much in line with what the peers are also trading at. Apart from Sapphire Foods, even Devyani International is trading at around 30 times. Westlife Food is also trading at around 39 odd times. Sapphire Foods, on the other hand, is trading at 24 times, which will go to around 18 times, you know, by 2026 is what the Bloomberg estimates suggest. But valuations for, you know, all of these counters, even at 18 times P, you know, by 2026, with the kind of growth that we might see coming in the QSR space, do not look very cheap, which is why we've given a thumbs down when it comes to the valuation picture.
Yeah, I just want to mention that number, that particular parameter is EV to EBITDA. That's enterprise value to EBITDA. And the reason why we haven't taken price to earnings is because there are a lot of one-offs for these QSRs, which significantly impacts the bottom line, and also, well, you know, distorts the actual picture, which is why we thought that it would be a better idea to take your enterprise value to EBITDA in terms of valuation. So sure, point taken, you know, valuation maybe not the best at the moment. And I will, you know, conclude with your analyst recommendations. So at the moment, we do have analysts, about 18 analysts who have a buy on the company, but another 8 analysts have a sell on this one. And pardon me, another 8 analysts have a hold on this one, and 5 have a sell. So with that, the return potential is not significant at the moment. In fact, a -1 is what the kind of return potential that the consensus throwing up, which means that Jubilant FoodWorks is trading exactly where the consensus is expecting it to, well, trade in terms of its target price. So which is why we'll give this one as expected a thumbs down as well. That brings us to your overall rating and how we have in fact seen Jubilant FoodWorks pan out. So let's bring you all the ratings on that one, and along with that, so we do have a thumbs up for the income statement and the balance sheet, neutral for cash flows, return ratios not the best. Moving on, we also have shareholding, which is a thumbs up along with street credentials, valuations a little bit tough, as well as street coverage, well, not the best. And that brings us to a total of around 4.5 out of 8. So it's crossed the 50% mark, and along with that, you know, let's talk about a little bit more on the sector as well. So, Mahima, we've had a lot of brokerages, analysts coming and talking about the prospects of QSR going forward, especially when you have companies like Zomato and Swiggy changing the game.
Right.
What are you making of this?
Right. So, you know, a couple of brokerages have come out with their view on QSRs, and till now the stance was that, you know, the QSRs might not see a comeback in the next few quarters as well.
Yeah.
But that stance has now changed for a lot of brokerages. They are now saying that, you know, Q3 has been a turnaround for the entire space.
Yeah.
You know, to name a few of these brokerages, Morgan Stanley came out and said that the pizza category same-store sales growth has turned positive. They're saying that Jubilant's growth trends were ahead of its peers, which is why they remain positive on Jubilant. And in terms of inflationary headwinds and competitive landscape, they kept the margins in check, but they are within the guided range. Now, in terms of the same-store sales growth trends, they improved sequentially, while average daily spends remained weak overall. And net store addition pace improved, but the demand outlook right now is a bit cautious. Goldman Sachs has said that QSR players are now gaining share within the food delivery market. This is a very interesting one, because what they said is that the growth gap between QSR sales and aggregators' gross order value has been narrowing down. So this is a very interesting observation that Goldman Sachs has made, because this is what will probably, augur growth for QSRs in the next leg. And in the delivery channel, they're saying that the QSR players have gained market share overall in Q3. Dine-in channel seems to be recovering, which is a positive again for these QSRs, because they've been expanding in terms of, the store additions as well. And Bernstein as well, and we're going to talk to Jignanshu Gore as well in a minute. He's also given different ratings on all four of these. But yes, Agam, as I rightly mentioned, that QSRs are seeing a turnaround when it comes to
yes. So let's take this conversation forward with, in fact, Jignanshu Gore. He's with Bernstein SocGen Group. Jignanshu, good morning, and thank you so much for taking the time out. Firstly, I start with my question on Jubilant Foodworks itself. Your assessment, only as a standalone entity. We want to talk about the QSR space, but how are you looking at the prospects of Jubilant Foodworks based on the place which it is in the current environment?
Thank you so much for having me. I would look at Jubilant Foodworks and break that business down into three big parts and look at those three parts individually to sum it up. Part one is the Domino's pizza business, which has tailwinds of pizza as a category, has tailwinds of competition which has peaked in the past. So the competition for Domino's was from Pizza Hut, which is the second largest pizza chain, which has struggled, and it was from the local regional pizza chains which were being facilitated additional competition. So we think the competition has peaked in the past, and they have reported great numbers on the pace after that competition. So they have also significantly added growth stores. Close to 180 stores is what we expect them to add in FY25 and continue that going forward, because we believe there is potential for Domino's to add stores. So I think as a category, it has tailwinds. Domino's also has really changed their business model with the changing landscape better by reducing the number of stores and having a strategic advantage for delivery, which is where the pizza consumption is shifting towards. So we expect Domino's margins to be much higher than what their peers at, let's say, Pizza Hut or KFC are able to deliver, which should drive support the growth for Jubilant numbers as well. The second part of the business, which I think is a drag today, is the other brands in India, like Popeyes or Hong's Kitchen or Dunkin' Donuts. They are building these brands. As they continue to build them over the next few quarters, we should see increasing numbers there. We think the biggest part of the business, which is least understood, is the Turkey business, given the kind of upheaval on economic or on currency there, and the very volatile numbers that we've seen. I think these three is how I understand. So very positive on Domino's, neutral on the other part, and neutral to positive on Turkey.
Okay. Jignanshu, very good morning to you. I just wanted to understand, in your note, you had said that, you expect second half to be much better for QSRs as compared to first half. And we've already seen that happening in Q3 itself. But one counter that you're not, bullish about is Westlife Food. And in Q3 also, as compared to how the other three have performed, that is Devyani, Sapphire, as well as Jubilant, Westlife has not done well. What is your view with respect to Westlife Foodworks? Because I want to understand what is happening exactly there. I mean, are people not buying McDonald's burgers anymore?
I don't think that's the case. Mahima, glad to be here. My view on Westlife is because there is a structural disadvantage to that company, given their business model for burger category is focused on dine-in, whereas in that price point, majority of consumption has started to shift to delivery. So a business model which is built for a dine-in will inevitably have larger fixed cost structure, which is more rigid. You cannot change that with demand. And you have a larger capex because your store sizes are also larger. Over the course of this year, though, I expect that given the base that they have last year, which is very low, recovery in demand due to general consumption sentiment should help their margins also to improve. Today, Westlife stock trades assuming that they will be able to meet their F27 vision targets, and Westlife is probably the only company which gives a detailed guidance for a longer term. We expect meeting those numbers to be challenging, both on store additions as well as on what is called average unit volume or AUV, revenue per store per year. That should then create a struggle to flow down through PAT as well. So I think it's slightly business model concept issue versus anything in the industry, which is why, relatively speaking, we prefer the execution model of Domino's versus the execution model of Westlife.
Okay. So, Jignanshu, if you just take the entire QSR space right now, there are companies which are profitable, there are companies which are significantly profitable, and then there are companies which are still struggling with, not just their bottom line, sometimes even their operational numbers. How are you rating companies in what is your priority in terms of the best and those which are not in the best place?
Out of the 4 companies that we cover, my pecking order would be Jubilant, Devyani, Sapphire, and Westlife in that order.
Okay.
Jubilant, I think, has the most near-term catalysts in terms of margin expansion. Yeah.
Okay.
And hence, that's my topic.
All right. So then follow up here. A lot has been also spoken about the role of your quick commerce companies are playing right now, your delivery companies are playing right now in changing the landscape for the QSR space. What is your reading of that particular aspect and the kind of impact it is having on the QSR segment?
There are 2-3 ways to look at that, and we can read across from what we see on Zomato and Swiggy numbers. One, they are definitely shifting the consumption pattern of customers to delivery. And all QSRs in that price point need to cater to delivery as a channel, and hence keep their products ready for that. It's stronger than QSRs for the last few quarters. If you look at a critical metric of the order that Zomato or Swiggy generate per restaurant that is there on their platform, that number has been trailing negative for the last few quarters. So they are adding a lot more restaurants, which is leading to growth. But individual restaurants on their platform aren't necessarily growing on their platform. What this means is that QSRs have a fighting chance because of their brand, and the competition from aggregators has peaked. With these two in mind, companies who can generate demand by their own platform channels, so Jubilant generating demand on its own application, McDonald's doing the same, have a better chance of competing against aggregators today. I think the latest thing I want to talk about is the whole 10-minute food delivery. I think that is also a very net positive for QSR brands because it is unlocking a delivery category which was so far restricted to local canteens, cafes, or roadside stalls. I think that can become organized with a 10 to 15-minute food delivery. And once that happens, the QSRs who have the best kitchen processes to reduce the preparation time will be better off versus QSRs who take a lot more time for prep. So again, Jubilant works really well here. And in fact, even McDonald's, they can offer a much larger menu for the 10 to 15-minute snack. And it unlocks additional TAM, which was not available to them or to food aggregators.
Okay. Well, we have a ton of questions for you, Jignanshu. Unfortunately, we're out of time. We should have gotten you in sooner. But that is all that we have for you for now, at least. So thank you so much for joining us and talking to us here on NDTV Profit.
Thank you so much for having me. Cheers.
Well, there you have it. So that's the Bernstein view on the QSR space. And of course, Jubilant Foodworks, Jignanshu is positive on that particular company. But on that note, we are completely out of time on this show. That is all that we have on KYC, but don't go anywhere. Lost my lined up on the other side. You're watching NDTV Profit.
बजट भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। How did you arrive at this number of 12 lakh rupees?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Viksit Bharat, and while the share of manufacturing may have come off in the last few years, the focus of the government as well as the private sector seems to be on enhancing the manufacturing prowess in India. And as we stated, one group present across key manufacturing industries and actually key service industries is Mahindra & Mahindra, and the architect of the group's current strategy has also a sharp mind on what the nation can do to enhance the manufacturing prowess. Dr. Anish Shah, absolute delight to be with him in this fireside conversation. Dr. Shah, thanks so much for coming by.
Thanks, Neeraj. It's a pleasure to be here.
Yeah. So I think the question on everybody's mind is that if there is so much of focus on manufacturing of the nation as a whole, policies for it, etc., how is it that the share of manufacturing in GDP isn't quite inching up at the pace that it should? If anything, it's maybe come off a little bit, but that may be because services have done really well. How do you view that enigma?
It takes time for that change to take place, and a number of efforts have been put in place already to make it easier to do business in India, to improve infrastructure, to reduce logistics costs, to have companies focus on innovation. And all of that starts coming together at some point. From a Mahindra Group standpoint, our leaders 20 years ago had a vision, and their vision was to create R&D in India, to ensure that India could create the best vehicles. And that was the birth of the Mahindra Research Valley in Chennai. As I said, it takes time. And it has taken us time as well to really be able to harness the strength of our research center. And what you've seen over the last 5 years is products that were put in place earlier, but we are delivering now. What you're seeing in the last 5 weeks are our electric vehicles that are also coming, which are entirely born in India and out of research and development here. But it takes time for that to happen. And today we feel very proud that our products are of a quality that can match up to any international standard and can really compete with anyone out there in the world.
Yeah, well, that showed in the way the bookings happened on Friday, and quite stunning really, Dr. Shah. So just trying to understand, I mean, you reckon that, and congratulations on that number, by the way, quite fascinating, though I must say that it didn't come as a surprise. I mean, the sneak peek that people got of the two vehicles that you kind of opened up, if I can use that term, it was partly anticipated because they just look so good. So great stuff there. I would love to understand, as you think of the group strategy, and you are a large group, you are the architect of that strategy, as you think of the group strategy over the course of the next 5, 10, 15 years, do you reckon the opportunity and the incentives for enhancing manufacturing are there for you and other groups to really enhance the Indian manufacturing prowess? Because without that, the goal of Viksit Bharat might not quite be achieved.
So we feel very confident about that, especially after what we've seen with our electric vehicles and what we've seen with our tractors. So India clearly has the ability to manufacture at scale, to manufacture at a lower cost. It does require a few more efforts for that to happen, but we've been able to show this with our products. And we've had many questions over the years around how will you compete with all the foreign companies coming into India. There have been many who've written us off at multiple times over the last 20, 25 years as well, saying that the entry of such and such company is going to be the death knell for us in either automobile or in farm. And our teams have been able to show that they can manufacture in India at strength and be able to compete with the global majors in a very significant way. Over the last year as well, on electric vehicles, there were a number of questions saying, how are you going to compete if such and such company comes into India? And our response has always been our products will speak for themselves. And that's what they're doing today. And this is a strength that not just us, but we see other Indian companies also bringing to the fore and essentially setting up the opportunity for India to be a manufacturing hub for the world. And that is what we aspire to, and that is what we feel confident we will be able to deliver in our path to Viksit Bharat.
Okay. And I'm going to make this equal parts manufacturing as well as services, because less Mahindra and Mahindra, I mean, yes, the dominant share is auto. There's lots beyond that, right? And would love to talk about that too. But just for a moment, because you mentioned that point, I can't not invoke that conversation, right? This whole talk of one Tesla coming in, the Chinese companies, BYD, etc., making their presence felt. Now, your numbers, booking numbers speak for themselves. But I'm still trying to understand, not just for Mahindra Group, but for others within the auto ecosystem. How would the industry face up to deep-pocketed global car companies or vehicle companies wanting to create their foothold in India? Just trying to understand.
Neeraj, that's a question we've been answering for the last 25 years. Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore we feel fairly good about the fact that we can compete with various folks. And I'm glad you were talking about services as well, because we do remind everyone we talk to that auto today is just 1/3 of what we do. Mahindra plays in 70% of India's growth over the next decade. And we are in multiple sectors, and some of those are growing very well and contributing very significantly to our businesses as well.
Yeah, most certainly, and I'll come to that. Just so sorry, if my question came across that Indian companies will find it difficult to compete with global brands, no, because in some sense, Indian companies are global brands unto themselves. Your tractors in the US, I mean, making a mark, right? And Indian tech companies making a mark globally. So I didn't mean it that way. What I was just trying to understand, because a lot of these global brands are very famous per se, and there might be an allure for that. But I get the answer. You're saying that the products for you and for other companies will speak for themselves. Now, my question is the current economic momentum in India, which is maybe a bit slacking in Q2, picking up slightly in Q3, conducive for Indian companies to think big in the near term? Is this a passing phase, or is it difficult to say whether this intermediate slowdown that we have will get over in a hurry or not?
So there, Neeraj, we feel that the fundamentals in India are very strong. And they are further strengthened by some of the actions over the last few years. The digital stack today makes it much easier for us to do business across multiple sectors. Improvement in infrastructure is starting to bring logistics costs down. And a combination of all of these will enable the economy to grow even faster. we see this recent slowdown as a blip, and with some of the actions taken, we feel that we will be back on track. I personally do expect that we should be seeing growth north of 8% in the near future as well. And that's something that I think the Indian economy will be able to deliver, because we've grown at 6.3 to 6.5% over the last 30 years. And there are a number of positives that we have in place today that we didn't have over the last 30 years. So we should be able to see a faster growth rate. And we're investing in a significant manner across multiple industries. And we feel very bullish about the India story.
There's some bit of pivot that this budget has taken, if you will, right? That there is a focus on consumption being given. It may be a small portion of the overall economy size, but it has a multiplier effect. The moves taken in the budget, if you will. Do you reckon that this move towards 8% growth, and I heard you say near future, it may be 1 year, 2 year, 3 years, depending on where you believe. In fact, would love to know that as well, if you have a kind of time gauge in mind. But two, would consumption and manufacturing both play an equal part into this, or can it ride on the plank of manufacturing alone?
It has to be both, because consumption is what will drive further private sector capex. And there has been concern, and rightly so, that private sector capex hasn't quite kept up, and government capex is really what has taken the economy forward over the last 3 or 4 years. But private sector capex comes in when capacity utilization goes higher. That's driven by consumption. And therefore, we feel that this is the right path to take. And this consumption boost will enable private sector to put in even more capex, and that creates a virtuous cycle that allows the economy to grow faster.
It's been elusive, sir. I mean, this capex, and I'm not blaming the private sector, right? The private sector will put in capex. I'm not talking about you, but in general, the private sector will put in capex when they see the right kind of IRRs for the project. But private sector capex has been elusive. Do you believe that we will sooner rather than later see this again? I mean, is there some estimated timeline that you reckon, maybe in 2025, 2026, that there's a higher probability of private sector capex coming back with a bang?
So the one metric to look at is capacity utilization across sectors.
Right.
And that has been inching up. In a number of sectors, it's over 75%. In a few sectors, it's over 80%. So as it starts getting over 80%, that's the right time for companies to start thinking about capex and making sure that they have enough capacity to meet the demand going forward. As consumption increases and we see further growth, it only accelerates the need for private sector capex. And you're right, for us, we've tripled capacity in the auto business in the last 4 years. We've added significant capacity to farm, to a number of other industries as well. And that's because we've seen demand for our products, and that will drive further private sector capex. So again, we feel that India is well positioned right now. The actions that we've seen the government take have been for the long term and to create stimulus for the economy in the recent past around the short term for consumption as well. And that's the right set of actions that will enable private sector capex to come in and provide a further boost.
Okay, you are an industry captain, but a lot of our audience are investors. I would love to know. The worry seems to be that we are not getting out of this growth quagmire. I know I'm maybe repeating this question, but I'm just trying to understand. We've seen a bit of an uptick in Q3 numbers relative to Q2 numbers. The hope is that Q4 and then Q1 onwards, some of these moves that the government has taken will take or bring about an impact. Do you reckon, I know you mentioned that there's no reason why India can't grow at 8%, but I'm not going that far. I'm trying to understand, do you in your wisdom believe that, let's say Q1 FY26 or maybe Q2 or Q3 onwards, we will actually see meaningful growth come back? Is there some estimate around the timelines that you have?
So if you look at rural India, we've seen growth coming back already.
Okay.
So our estimate for the fourth quarter is that tractor sales will be 15% higher than the previous year from an industry standpoint. And that's a fairly significant level of growth for tractors. It's in a very good place at this point. We see some of that momentum continuing into next year as well, though it's a little early to call next year from a rural standpoint. There is a lot of positivity around that. We've seen some slowdown in urban, but there again we feel that's more of a blip right now. So we would feel very confident that by Q1 next year we're going to see the economy on a faster track from a growth standpoint.
Okay, does the budget kind of try to address the urban slowdown as well? Because in effect, a lot of that taxpayer savings that happen impact, I would presume, the urban consumer.
That's correct. The tax effect as well as the rate cut, a combination of both of those, will provide a stimulus from an economic standpoint. The key is to ensure that inflation does not come back, and that's a fine balance. And therefore, the RBI has its task cut out, but it's a balance I think they've handled very well in the past. And as they do that, I think we will be in a good place to see growth coming back.
Okay. I'm sorry if I'm putting you in a bit of a spot, but because you have US business interests as well, and I'm just trying to understand, what are your thoughts on the India-US meets that have happened? There is, I mean, the tariffs, reciprocal tariffs, what have you. Ridham Desai was here in the morning, and his note suggests that the risk of a large impact of reciprocal tariffs is very less. Would love to understand, one, that from you, and two, somebody invoked this thought and asked me to ask you this. I mean, what if there were trade agreements which were nearly equal to a free trade agreement between India and the US, and if all of those moves were to happen, what are the impact for Indian industry per se? Any thoughts?
So the starting point is that the relationship between India and the US is very strong. And I think that's a very important factor. Each country is going to take actions based on what is required for that country at that point in time. And on a longer term, we want the world to be completely free from a trade standpoint. And that's positive. We've seen the benefits of globalization in doing that. But we've also seen each country, and whether that's the US or China or Japan or Thailand or India, take actions based on what makes sense for every industry at a particular point. And our sense is that will play out in some form. I don't see a world where there is no tariff at all across the board. That doesn't make sense for multiple countries because it depends on their phase or their life cycle at that point. So I think we will come to a place where it makes sense for both countries. There will be some industries that are hurt more than others possibly, depending on what finally happens. But I do feel that it will be in a place where it makes sense because India has to protect manufacturing in a significant way as well, and that's an important lever for India's growth for the next decade.
Yeah, I mean, and which is why my concern was that could that have an impact? Because for the last 3 years or 4 years, we've been talking about the China Plus One benefits coming into other ASEAN countries. Some of them have come to India as well. Do some of these trade agreements or reciprocal tariffs impact that manufacturing ambition in a meaningful way? You don't think that?
Given the relationship that we have between both countries, we feel that India will be possibly in the net gainer category. But as with the world right now, everything is unpredictable, so we shall just have to be agile and ready to respond.
Okay, let's move beyond manufacturing, Dr. Shah. I mean, and beyond just tractors and autos, which are, of course, doing very well for you. And by the way, I mean, it was great to see some of the large companies like yours, very few in Q3, which delivered very strong numbers, right? What's your sense about, one, the overall console performance for your group in the times to come? Because in some sense it will do slightly better than GDP growth, but it will be a mirror or a reflection of what the inherent growth is. You are constructive on growth picking up for the country. Would that be safe to assume, therefore, that you are constructive on growth looking better for M&M in FY26 over what you've done in FY25, which has been a commendable job already?
That's the problem with doing well, and we've had a discussion at our board as well, saying that just the fact that you've done well raises expectations significantly. So the one thing I will say is, if you look at Q3 results, it's our businesses beyond auto and farm that have actually grown much faster, and that's really helped. And auto and farm have done very well also, so it's been a combination of all of that coming together. And we feel confident that we can continue this because from our standpoint, it's more about operational excellence and ensuring that we're delivering everything we can by having our teams perform well on the ground. We have signed up effectively for growth at 2x GDP, and that's something we feel confident we can continue to deliver over the years.
But this is a mix of a lot of businesses, or at least one key business which is also very global in nature, and therefore maybe not as aligned to the Indian GDP growth as maybe to the world GDP growth, right? In Tech Mahindra, etc. So when I look at the console, you reckon being 2x of GDP is a bit of a conservative estimate that you're putting right now? Under promise and over deliver?
Well, if 2x GDP is under promise, then I think we are in a good place.
No, I didn't mean it that way, but just by virtue of what you've done in the recent past, it seems that 2x is a bit of an under-promise. Just that, nothing else. Okay, what about the GEM strategy? We spoke about that briefly while we were together in the World Economic Forum as well. But now that you've just completed your Q3 numbers, how did you feel the rest of the non-auto businesses are doing for the group? And if you can just extend that argument for whether you see growth in those respective industries for the sector as well. I mean, whatever brief 50,000 feet view that you may have.
So we are seeing them do very well actually. So if you go beyond auto and farm, first I'd start with Mahindra Finance and Tech Mahindra. Both are on a very good turnaround track, and in fact now we are talking about going beyond the turnaround to achieve full potential. Both have underperformed in their markets, and that is where the growth really lies for us, to get to industry average first and then go beyond industry average to be one of the industry leaders. If you look at our growth gems beyond that, hospitality is one area that's growing very well in India. Logistics is a second one that has significant tailwinds, and especially as we think about manufacturing growing in India, logistics will logically extend that growth rate as well. Real estate continues to be on a very strong path, and that's benefited our business. Renewables continues to grow at a dramatic pace because generating power from renewables is much cheaper, in fact, than fossil fuel. So there's an economic argument for that, and from a company standpoint, we are moving from 26% of our power being renewables to over 60% in just this year. With our business Sustain setting up various solutions for us, and that 60 will quickly go to 80 or 90% as well. And that was a very easy decision because it's actually cheaper for us. We save money by going to renewables. So you'll see more of that happening in that space. And therefore, we see multiple businesses, multiple sectors now well poised for significant growth.
Interesting. Some people go as far as to say it's a very small part of a business maybe, but that the next couple of years might actually be years where logistics businesses do really well. I know it's a small part of a business, just trying to understand. Any thoughts out there? It's a very niche question, but still.
Yeah, and not just next couple of years. I'd look at that for the next even 10 or 20 years. As manufacturing grows, as infrastructure becomes better, we're going to see logistics businesses grow at a much more rapid pace.
Okay. Last couple of questions, Dr. Shah. One is for this goal of Viksit Bharat, and as you said, both consumption and manufacturing have to contribute. For manufacturing, the issue that some people have been citing is that there is a skill gap in that, yes, there are jobs, yes, there are people available, but the right matching of skills isn't happening, and that's a problem for corporate India. Is that a problem that you are facing as well, and if so, how to resolve that?
It's clearly something that needs a lot of attention. It's not a problem we are facing today, but we will if we don't give it the due attention. So our focus is to do a lot of work with ITIs. We've in fact partnered with a number of ITIs to develop skilling programs for various people. The Mahindra Group is also focused on skilling for women. And we've taken on a target to skill and provide jobs for 1 million women. We're not going to provide all the 1 million jobs. There will be various other companies that do that. But we're going to focus on skilling, and that is an important contribution to society. So this is clearly an important part. If there are any companies out there that want to hire women across the country in various areas, please reach out to us. We're setting up skilling centers, and we'll be happy to work with you on that front. Because this is something that we feel is an important part that India needs to do.
Why are men being left out?
Because we need to get equality in the workplace, right? So from that perspective, we need to have a lot more skilling for women.
Lovely answer. No, I didn't expect anything less. Okay, final thoughts really, Dr. Shah. And one is for all that India is doing on manufacturing, making in India for India, in some sense making in India for the world as well. Do you reckon that pie will grow larger as the decade rolls by? India's share of manufacturing for the world. Any thoughts there?
Yes, that has to grow larger because that is really the growth area for India. As we look at the goals for Viksit Bharat, manufacturing has to grow 16 times over the next 22 years. And I would say that companies in India are ready for that.
All right. Well, great. Lovely talking to you, Dr. Shah. Energizing conversation as always. Thank you so much for taking the time out and being with us.
Thank you.
Pernod Ricard India. Co-presented by Shema General Insurance. Co-powered by Share.Market, a phone pay product. State partner, Government of Uttarakhand. Premium menswear partner, Reed & Taylor. Banking partner, SBI.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Hello and welcome to NDTV Profit. You're watching Profit Buzzers. My name is Mihika Barve and with me is Nahiva Vacharani. But, before we go on, let's just take a quick look at how markets are faring. Well, if you look at the Nifty 50, it is under pressure right now, seeing cuts of 0.16%. If you look at, the counters on the Nifty 50, you have 29, stocks advancing. However, 21 stocks in the decline. You have HDFC Bank down about almost 2.5%, and it's also dragging the index with the most points, followed by Maruti Suzuki seeing cuts of 2%, Tata Consumers and ITC. You have some certain FMCG names also seeing losses of over 1%, and this is after the Nifty FMCG did hit a 52-week low today. Some of the stocks that are gaining is an NTPC up over 3%. We did have a Motilal Oswal note coming today talking about how it could be the bellwether play for India's growing nuclear energy theme. We also have Shriram Finance and Adani Ports and M&M all seeing gains of over 2%. But while the benchmark is under pressure, Mahima, the broader markets are doing fairly well.
Absolutely. So, it's the broader end of spectrum which is actually doing well. The mid cap 150 is up about 0.8%. The small cap 250 is also trading within similar levels of around 0.9% higher. Let's pull up the sectoral indices before we go on to stock specific action. There you go. It's the metals that is gaining leading the entire pack. It's up by about 1.7%. PSU Bank seeing gains after the longest time, up about 1.5%. Nifty Energy up by about 1.4%. But something that's not doing well is the Nifty Bank, which is down by about 0.6%. Nifty Pharma down by about 0.4%. Nifty FMCG under pressure, almost hovering around its 52-week low level, down by about 0.3%. Let's also pull up the advanced decline ratio and see how that is faring. In terms of the ratio, there you go. In terms of the Sensex, you have around 16 odd advances versus that of 14 odd declines. So the ratio is almost 1:1. But in terms of Nifty, the range is slightly broader. There is 29 odd advances versus that of 21 odd declines. And there you go. The NSE, overall space, the gap is quite wide. There's 1680 odd advances versus that of 600 odd declines. So it's almost 2.5:1 ratio when it comes to the entire NSE universe. Let's pull up some stocks which are doing well in trade today. There's Godrej Industries, which is up around by about 11 odd%. Thomas Cook is another counter which is up by about 11 odd%. Voltamp Transformers is another counter which is doing well. Piramal Pharma, MTAR Technologies, Amara Raja, GE Power, Safari Industries, Linde India. All of these counters doing very well in trades today. So some of these counters, and they're trading by about in the range of that 7 to 12 odd%. But the Adani Group has announced its financial performance for Q3 FY25 and has reported a record-breaking trailing 12 months EBITDA of more than around 86,000 odd crores. And we have Mihika, who tracks this company, in fact a lot of these companies very closely, and she'll be the right person to explain as to what has led to this growth.
So we do have certain data coming through, and this is regarding the entire Adani portfolio. It's achieved its highest ever 12-month trailing EBITDA of 86,789 crores. This is the value as of December 2024. Now the trailing, and this marks a 10.1% year-on-year growth in the overall portfolio value. The core infrastructure business accounted for 84% of this EBITDA, and when I talk about core infrastructure, this business includes your utility, transport, as well as the incubating infra businesses that come under Adani Enterprises. Now, when you look at the company-wise financial performance, if you look at the December 2024 values for the last 12 months, you have Adani Enterprises and EBITDA of 16,824, marking a growth of 23%. Adani Green Energy 9,900 crores of EBITDA as of December, 10% annual growth. Adani Energy Solutions 7,255 crores trailing 12-month EBITDA. This marks a growth of 15.9%. You do have an Adani Power, which stands at around 24,084 crores. It has seen a slight downtick of 4%, but the other companies, and Adani Total Gas 1,200 EBITDA 14% growth. Adani Ports also 16.8% annual growth in their trailing 12-month EBITDA. And when you talk about Adani Cement, which includes your Ambuja Cement and ACC, the EBITDA for this as of December 2024 stood at around 3,100 odd crores, and that marked a growth of 13.2%. And lastly, when you talk about the update on liquidity, they do have sufficient liquidity to cover debt servicing for at least the next 12 months. Their cash reserves as a percentage of their total borrowing stands at 20%, 20.53% if I'm being more specific, and this provides liquidity cover for 28 months of debt servicing is what the company is saying. The company has also been maintaining their minimum 5% cash balance required metric for at least 6 years now, as well as the last 12 months, and their fund flow of cash after tax stood at 38,908 crores. And lastly, in terms of their company borrowings, well, net debt to EBITDA stood at 2.46 times as of September 30th, and this is well below the benchmark that is set between 2.5x to 3.5x. But on that note, let's welcome our guest Astha Jain, Senior Research Analyst at Hem Securities. Welcome to the show, Astha. I want to talk about the Adani Group companies first. We have seen the portfolio performance come through. Are there any counters within the pack that stand out for you?
As we are talking about, I was just listening to you. So yes, in Adani Group, the one counter which is really sounding strong to us is Adani Green. First of all, so we are very much optimistic on that counter. The reason being, first of all, the kind of industry it is working into, and definitely a strong industry tailwind is what this company is enjoying. So among all the Adani Group stock, this is the stock which we are very much comfortable with it, and due to its business, due to the industry which it is performing. So Adani Green is our preferable choice, and here our price target is somewhere at around 950 to 980 odd levels.
Right, so that's the view coming in with respect to Adani Green. Standard disclaimer, NDTV is an AMG Media Network owned company which is also owned by Adani Group of companies. Now, shifting focus to RateGain Travel. Now, in a recent development, RateGain Travel has signed a pact with this high-budget courier, that is Noke Air. In this agreement, Noke Air will gain access to RateGain's advanced pricing intelligence platform. To tell us more about this, we have with us Rucha joining in. Rucha, what do you make of this agreement, and how does it stand out?
So RateGain is up more than 6% in today's trade after it announced that Thailand's Noke Air has selected the company for its real-time competitive insights. Well, Noke Air operates domestic network as well as international routes in India as well as China. With RateGain, Noke Air will access real-time competitive pricing data from over 300 airlines and 50 plus OTAs is what the company has mentioned in an exchange filing. It will also use an AI-powered pricing intelligence which will enable Noke Air to navigate market complexities. So this one is a big positive based on which the stock is buzzing in trade right now. Talking about the latest earnings, the Q3 earnings which came out on 14th of February, that is last Friday. Revenue was up about 11%, margin came in at 22%, net profit up about 40%, all this on a consolidated year-over-year basis. However, the stock ended 3% lower on 14th February as the results came out. Lastly, talking about what analysts believe on the street based on Bloomberg, well, there are 6 buy calls, 1 hold call and 1 sell call with a return potential of up to 43%. So big positive for the company, on the back of which it is trading in green today.
Got it. Thank you so much, Rucha, for giving us those details. Astha, I'll come to you. Your view on RateGain. I mean, the stock has zoomed in trade today based on the latest news. You also saw a strong Q3 revenue, seeing a 10% uptick, EBITDA up almost 20%, and net profit growing 40% on a year-on-year basis. What's your view?
So this is being, global solution provider for basically SaaS solution, and especially for the hospitality industry. I think that is really, helping the company, the kind of solutions they are providing, helping the company in posting good set of numbers. This is what we have seen. Now talking about the future outlook of this company, the kind of partnership this company is doing definitely will help the company in giving very strong numbers going ahead. In fact, in this quarter also, if I talk about especially of the bottom line and the operating profit, number looks to be decent. So my idea here is to stay invested in this counter. This counter is poised to show some more upside from here, and our price target here for the RateGain at the initial level is at around 580 odd levels. So idea here is to stay invested. Even buying on dip strategy can also be applied if it is available at the stock prices of around 520 to 515 odd levels.
So with respect to rate gain travel, it's a buy on dips and hold view that's coming in from Astha. Now moving on, let's shift focus to BCL Industries, which is buzzing on the back of an order win involving an ethanol supply tender. My colleague Varsha tracks this very closely and she has more details on the same. Varsha, take it away.
Thank you, Mahima. So yes, company is actually buzzing now. This is on the back of the order win that they've gone into. They've got into ethanol, wherein company and its subsidiary won ethanol supply tender from OMCs, and company will supply almost 23,000 kiloliters of ethanol for rupees 135 crore. And this ethanol will be produced from FCI rice. So overall, if you see, 135 crore will actually, will be add up to the revenue, and considering the growth prospects that the company has, so pretty good future we can see when it comes to BCL Industries. Yeah.
Then Varsha, while you're still joined with us, tell us about the other order wins that are in focus today, and that are kind of buzzing when it comes to order wins.
Yes, so let me start with India Glycols, wherein they've received 1,200 crores order from OMCs and oil companies. Company will supply almost 18 crore liters of ethanol, and this order has been received under ethanol blended petrol program, which needs to be executed in ethanol supply year 2024-2025. Then on my list is Waaree Energies, wherein they've received order for supply of solar modules from INGI Indian Arm, and the supply of modules will be commenced in FY25 and 26, and the current order book was interesting, which stands at around 50,000 crore as of December 2024.
All right, thank you, Varsha, for giving us those details. Astha, three stocks in focus. One is a BCL Industries. So one is a India Glycols. I'll take those two first. Your outlook on those. You've seen strong order wins and tender supplies for these companies. How does the story look from here?
So talking about BCL Industry, it is one of the largest agro-processing companies in India. I'm talking about BCL Industries. So one of the largest agro-processing company this is, and now as India undergoes energy transition, definitely this helps the company in having a very strong future outlook from here. So I suppose the whatever right now developments are taking place in the company, that will help the company in posting good numbers, because ultimately the things are revolve around the earnings, which we are closely looking at right now. So BCL Industries, being one of the largest agri-processing industries, I think this is the counter on the back of a strong order, definitely will poised to perform more, better from here. So idea here is to stay invested in this counter. We are not recommending buy because we want the stock to fall more. But here one can remain invested in the counter with the initial price target of 45. Talking about India Glycols, we are not very closely tracking this counter, so I'm not able to comment more on it. But yes, regarding Waaree Energies, we are positive on that counter as well, because the industry outlook is very, very strong for the Waaree Energies. So this is again a counter where we are giving a buy recommendations to our clients, but buying on dips. And buying on dips, I think somewhere at around 2,200 to 2,250 is a good level to make entry into this counter. Initial price target for Waaree Energies can be set at around 2,600.
Regarding Waaree Energies, it's seen a very volatile movement. Now, yes, the company does have, a highest capacity advantage right now, but as new capacities start kicking in, do you expect, that pressure to come in? Because you do have a 50,000 crore order book, but we have no timeline execution because it's very varied in terms of gestation period. So is that risk, something that could hurt the stock?
I don't think so. Basically, I think in the immediate term, we should also acknowledge the fact that the company has posted good set of numbers. So first of all, that yes, valuation can be a concern, because we all know that valuations are still high for this counter. So my major concern is regarding the valuation rather than anything else. So here the idea is looking after the valuation. And that is why I have recommending buying or dips also, not saying that just make a buy at this level. So here the idea is buying on dips strategy can be applied at the lower levels, because valuations are a concern. But I don't think that adding capacities will going to, negatively work in the favor of company going ahead. So idea here is stay invested in this counter if you have this counter in their long-term portfolio, but for making a new entry, let this counter cool more and then make an entry that is at around 2200 odd levels.
That's the view coming in on Vari Energies. The next counter that we're talking about is from the IT space. Cyient Limited is in focus after the board appointed Sukamal Banerjee as CEO for 5 years, and we have Rucha joining in with more details on that. Rucha, what are the details like, and how does this benefit the company? Because the stock is was seeing significant gains, but it's cooled off a bit.
Cyient Limited is in focus as the company has appointed a new CEO, Mr. Sukamal Banerjee, for a period of 5 years with effect from 19th February 2025. Now, Mr. Banerjee spent nearly 3 decades, that is around 27 years in HCL Technologies, where he led its transformation initiatives and incubated the IoT Works business unit globally. Well, he left HCL Technologies in 2023 to join a digital engineering company, Exorient. He holds a bachelorate degree in mechanical engineering, and he's also an MBA in finance and strategy. Previously, it was Mr. Karthikeyan Natarajan as the CEO of the company. He had resigned in January, around the 23rd of January. And remember that the stock back then tumbled about 23% in just one day after this resignation. And the stock has since then declined nearly 16%. Therefore, this is the much awaited appointment for Cyient post the abrupt departure of the earlier CEO. Well, let's talk about what Morgan Stanley believes. Morgan Stanley has an underweight rating with a target price of 1500. It says that this announcement of an external candidate as a CEO is a positive for the company, but it will expect any strategic changes to come only gradually, and also mentions that investor will require an improvement in execution with respect to revenue growth as well as margins to turn incrementally positive on the stock.
All right, Asa, I have a two-part question for you, where Cyient is concerned. One is on Cyient and one is on Cyient DLM. Of course, first question is that how are you viewing this management change for Cyient? And secondly, Cyient DLM is one of those counters which, a lot of analysts came to our channel and talked about this particular counter that, they are turning positive towards them. And, when one of my research, analyst colleague compiled the data on Bloomberg as to which are the top 10 stocks that have the highest return potential when it comes to the 12 months period, Cyient DLM tops that chart. The best target price is at 899 and with a return potential of around 109%. So, two-part question to you, Cyient with respect to the management change, and how are you viewing Cyient DLM?
So first of all, talking about Cyient, yes, there is a change in the management, but we should not forget what they have spoken in their analyst con call. That is, they have cut their revenue guidance. I mean, in fact, they have given the minus 2.7% revenue guidance. I'm talking about negative revenue guidance for Q4, while it was flattish in the previous con calls. So analysts don't like such kind of revenue guidance where the negative numbers are there. Secondly, in fact, if we talk about their EBITDA margins also, so they have given a cut there also. Previously, it was 16% and they have cut their guidance to 13%. So there was a cut in the guidance, and that is the major factor. The streets are not liking such a sort of cut. Although we know that the company has posted not a very strong set of numbers. And apart from that, if such cut in the guidance came, then it is definitely not a positive for this counter. But yes, due to the change in the management, we can say some sort of, but street will really like to look after the new management, how the strategies will work on. So my idea here is for the sign that this stock will continue to underperform the IT space, because first of all, numbers were not positive, revenue guidance as well as margin guidance were not on the positive side. And now the new management which has stepped in, so street really want to look after how they execute, because execution was the major issue in the past also. So I mean, looking after all these factors, those who have this counter in their portfolio, they can remain invested, but they should be in the wait and watch mode. But for those who want to make a new entry, I think this cannot be a cause for the new entry that the management changes there. Although it improves the sentiment for this counter, but not make buying call at this point of a time. So we would really like to wait and watch. So Cyient here is just a hold from our side. Now talking about Cyient DLM, in fact their quarterly numbers were also not very strong. If I talk about, it was also a muted set of number which the company has posted, but we really like the business model of this company, and that is why I think our the analyst fraternity is positive on this counter. So between these two counters, Cyient DLM is looking good to us, recommending a hold as well as buying on dip strategy can be applied. But for Cyient, just remain a watchful, be in a wait and watch mode, and not make an entry just on the basis of this positive news.
Got it. Thank you so much. We now shift our gears. The auto industry is gearing up for tough terrains. Maruti Suzuki, on that note, has come up with a new 5-year plan, with the company planning to reach more than 2.5 million in sales by 2030. Now we have Tushar joining us with more details on this. Tushar.
Essentially, the new 5-year plan is sort of reinstating what the company had stated earlier, that will aim to make 40 lakh cars or 4 million cars in India by 2030. But the sales figure that the company has stated at 2.54 million units in India, that's about 25 lakh odd units in India, stands out, because that means the company is looking to export 15 lakh cars annually by FY30. So exports is going to be a major component of what the company's future looks like. The company wants to become the largest EV maker in India in terms of production, exports, as well as sales in the country. The company's investment, the parent company Suzuki is investing about 7,000 crore rupees into India. That's about 1,1200 billion yen. About 2,000 crores will go towards stepping up production capacity. About an equal amount of money will be invested in developing new models. The company believes about 75% of its volumes, incremental volumes, will come from new fuel types, actually, hybrids, electric vehicles, as well as CNG. Most of these volumes will be likely be concentrated, except for the EVs, where the company is set to become the manufacturing hub for Suzuki for electric vehicles globally.
Well, thank you, Tushar, for giving us, those details. Astha, I'll come to you. Maruti Suzuki, flat performance in the last, 6 months. We did see the stock touching somewhat high level at the end of Jan, start of Feb, but it's lost those gains. It's under pressure as of today. The outlook in terms of the near to mid-term is positive. Do you mirror these views?
Yes, so I would like to add some points towards exports also, that they hold 49% of Indian, of a passenger vehicle sales market. If I talk about the export market, so they hold 49% share. So that is one positive. Secondly, the kind of number this company has posted, because operating profit was in line, and especially when we are seeing the slowdown in the passenger vehicle industry, this company has shown some sort of decent performance. So I think that is why we have seen a good rise in the stock prices also. But from here, we really need to see, because their export market is majorly into the Latin America, Africa, and Middle East. So how these markets will pan out for the company, we really need to see. And that is why idea here is to stay invested in the counter. Maybe right now we can see some sort of downside in the stock prices, but that can be an opportunity to make a entry or a fresh entry also. So we are recommending a hold as well as buying on dips at around 12,000 level, but our initial price targets we are restricting to 12,800 to 13,000.
All right, so that's the view with respect to Maruti Suzuki. Now, the inaugural edition of NDTV Profit Conclave saw industry leaders offering insights into the India opportunity. On the sidelines of the event, my colleague Harsh spoke to Welspun Living's MD and CEO Dipali Goenka. Listen in to what she had to say about India's manufacturing potential.
Welcome. We're at the sidelines of the NDTV Profit Conclave, and interesting conversations already starting off. And we have with us Dipali Goenka. Great speaking and always great having that perspective. So, the agenda, Dipali, is Viksit Bharat by 2047. What do you think is going to get us there?
I think the main thing that we see is the organized supply chain that we're talking about, and ease of doing business, which we already are moving in. I think the skilled manpower that we already are working towards. And like if I look at the complete ecosystem, like, when I talk about the PLI, when I talk about the Gati Shakti or these Samarth schemes, I think in totality it's going to be about ease of doing business. And I think India, when we talk about, is at the heart of all these conversations globally, being an integral part of the supply chain for everybody. And I mean, for me, it is such a pleasant thing to see where India is in the boardrooms of discussion for the sourcing destination. And I think that's going to be a very important but I think a rider, how are we going to skill the youth of this country?
Yeah, I was going to come to that. Challenges, Dipali.
So the important thing is how are we going to skill the youth of the country? How does digitization, AI, Industry 4.0 play a very big role in the whole industrialization? Because now we're talking about another industrial revolution which is going to be so huge, which has already put India on the world map.
Fair point. How are you as a company navigating the current global macro? Because it's a tricky one, right?
I think, post-COVID, the world hasn't been the same. And I again say that, all the time. I think it's about the resilience of, an organization that really holds you on. The importance is about laying your complete supply chain in order, your whole digitization technology. And I think looking at not just today, but I think the long term where we are off to. And I think that's a very key thing. For me, when I talk about Wellspun living here, the predictive analytics for the consumer across, whether it's in America or in UK, Europe or in India, what that person's going to buy, to the kind of supply chain in the terms of the raw material, that's cotton, the whole traceability and blockchain, to my vendors, the MSMEs, in the terms of which make the bedrock of the entire supply chain in the dyes and chemicals, getting them on board to the whole sustainability index, to delivering the product on time, and also maneuvering towards the Red Sea. I think it's a lot of things, but I think again the bottom line is about a resilient organization.
Okay, resilient organization in this tricky macro. But thanks so much, Dipali, for spending time speaking with us.
Well, on that note, it's time for a short break, but do stay tuned. Lots more lined up on the other side.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI, इसके लिए सेंटर्स बनाए।
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Welcome back to Profit Buzzers. I'm now joined by Alex Vatis for the second half of the show. But up first, I want to address an Indraprastha Gas.
Absolutely.
Strong gains today. It's up over 5% in trade right now, and it's gained 8.4% in the last 5 days itself. In terms of today, well, the trigger has been a Jefferies note, which is positive. It's maintained its buy rating on the stock. Target price stands at 252 rupees. Now, what's been happening is the company has been managing to secure low-cost LNG feedstock, which is a key input for the company, and this can help its margins as well as its volume outlook, is what the brokerage is saying. Now, the decline in the APM gas availability management, there was a lot of government movement. They had a deallocation and the allocation was replaced, but all of this volatility is manageable for the company. Jefferies expects a 2 rupee per kg hike, which will be enough to protect the company's margins to the pre-deallocation levels, and now the management focus is going to be on volume growth, which is a key positive for a stock like IGL. And there's also new growth opportunities from the end of marketing exclusivity, which will allow the company to grow more forward, and that's the view that we have on IGL. But let's welcome our guests back. We have Asta Jain joining us from Hem Securities, as well as Osho Krishan, SR Research Analyst, Technical and Derivatives at Angel One. Osho, I'll take IGL to you first. On the charts, when you look at an IGL compared to its peers like MGL or GGL, how does it look?
Very good afternoon. Firstly to you and all the panelist members. Well, looking at the technical perspective of IGL, then yes, in this week there has been a decent traction, approximately 10% higher from the lows of nearly 180, 182 odd levels. But looking at the technical perspective, after a very long period, the counter have started gaining a decent traction and has started merging up towards the 100 exponential moving average. So I'm expecting that with the recent development, there is a possibility of sloping trendline breakout in this counter, and I'm expecting that in the coming period, if a sustainable buying is seen in this counter above the zone of 205, then we can see a target of nearly 230 to 235 in the short-term period. So yes, this is a very attractive and favorable news that has came in this counter, and I'm expecting that in the coming period, this can boost stock prices to a decent levels.
Okay. Hi, Osho, and hi, Asta as well. Asta, I'm wondering what you think of this note and indeed the trajectory going forward, because you had the third quarter results which were not the best, but at least the perspective at the time was that the worst may be over for this company as well as MGL. What would your pick in the space be, and what is the upside potential in your opinion?
So the quarter was tough. There were reasons behind it. First of all, it was the toughest quarter for the company due to the sourcing of gas, and that was the major reason. But now going ahead, if we see, in fact, the volumes will be a major trigger. And in fact, management in their previous con calls also have guided the volume growth of around 8 to 10%. That is in FY26, not in FY25 I'm talking about. So I think going forward from now onwards, I think this company is well placed to show some long-term gains. Maybe short term we can see some sort of downside momentum because of the market's volatility, but in the longer run they are poised to show strong numbers on the financial front, and on that basis we are also positive on this counter. If I talk about all the counters in this space, then we are most positive on IGL only. So idea is to stay invested in this counter. Initial price target can be set at around 220 to 225 odd levels in the medium term.
20 to 25, not very substantial upside at this stage. So I guess to a certain extent, Asta is being cautious and holding off on tremendous optimism. So certainly buy though at the current level. Asta, point noted. Let's talk about NHPC, right? Because this is a counter that started off a little bit weak. But it has gained momentum through the day, seemingly on the back of this CLSA note. It's interesting because they have improved their rating on the stock, but they've cut their target price. What do they say?
But the target price cut is by 3 rupees.
Okay.
Yeah, so the stock has been upgraded. They were already bullish. It's now the rating has been upgraded from an outperform to a high conviction outperform rating, and the rating has been upgraded because the stock has seen a 25% stock correction in the last 6 months, which has made valuations inexpensive as per the brokerage at 12 times its FY25 P ratio. Now the target price has been cut from 120 rupees to 117 rupees, and this is to factor in higher capex announced by the company, but it still offers around a 57% upside potential to yesterday's closing price. Now, in terms of key catalysts, well, the start of Parbati 2 hydro project is expected to boost the regulated equity by 27% to the company. They're also entering the shorter duration pump storage space, which is good for the company, and they CLSA additionally expects a double, the regulated equity of the company to double over FY24 to FY28. Context, regulated equity is basically the portion of NHPC's capital that the regulator allows the company to generate guaranteed profit on. And lastly, in terms of growth expectations, is 79% higher EPS over FY25 at 27, and they expect the return on equity to also expand 512 basis points. And on that note, Asta, I'll come to you. The power power generation stocks as a whole, they've not had a good run in the last 3 months. You've seen strong correction, but today seems to be a fairly good day for NHPC. They are playing on the whole pumped hydrogen theme, a strong order book. Whether it executes is what we have to find out. What are your views for this counter?
So first of all, I think like their capacity additions are in the main focus. If I talk about Subansiri, etc. So I think all these capacity additions will really help the company in FY26 to post a strong set of number. If we talk about their Tista V power station, there were the reasons behind it. It was not able to perform because due to the flood and there was a landslide. So and it contribute around 11% of standalone sales. So there was some issue, and that's why we have seen the muted set of numbers in the Q3 of FY25. But going ahead, maybe over 2 to 3 quarters, the company will be showing good numbers. And on that basis, we are positive on this counter. Initial price target which we would like to give is around 85 to 88. And Alex, why I'm so much cautious in giving price targets, because right now market mood and conditions are also not very favorable. So it's better to limit to these small targets. Maybe later on when market moods are in a good shape, then definitely we will revise them upwards. But right now, my targets are 85 to 88.
And that's exactly what I thought would be the case, Asta. That's exactly what I said as well. And thank you for clarifying that. It is best to be a little cautious because the kind of swings that you've seen in trade today as well should tell you that nothing is a given, right? Because you started with cuts in the broader markets, and as things stand right now, you have gains of about 0.7% for the small cap and the mid cap index or thereabouts, right? Let's talk about the pharma pack, because in trade yesterday they were a little bit wobbly, and in trade today as well you have a large number of pharmaceutical companies that are trading with cuts, and the worst hit are the likes of Ajanta, which is down as much as 6%, but the others are lower to the extent of about 2.5%. I'm talking about Laurus Labs, which is currently trading with cuts of about 2.6%, Oro Pharma down about 2.3%, Natco down about 2%, JB Chemicals 1.8%, well, there are a few gainers as well, Gland Pharma, Ipca, Cipla in the green right now, but you've seen a spate in the recent past of observations from the US FDA on a couple of companies, and that is having a bearing on some of these stock prices. Of course, there's also the conversation about tariffs in the United States that could come through, Donald Trump teasing 25% tariffs. Of course, in the conclave, NDTV Profit conclave yesterday, you had, was it yesterday or day before yesterday? I'm losing track of time. Day before yesterday. Day before yesterday, you had Mr. Habil Khorakiwala of Wokhard speak about the fact that there's unlikely to be a major impact on his company, or indeed some of the other companies that cater to the US. In fact, in case you missed that, take a look at what Mr. Habil Khorakiwala had to say about reciprocal tariffs in the US.
Basically, to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected. Okay. But long term, one doesn't know what happens after 3 to 5 years.
Yeah. Okay. Now there's another pack that has been in focus, and that's because it's been a rank underperformer in the earnings period as well, and that's chemicals. Because the waiting for a rounding of the corner for this entire pack continues, and investors have had to have a lot of patience with this pack. But the thing is, Morgan Stanley has put out a note. It remains cautious on the Indian chemical space, and Varsha is joining in to tell you about what the nitty-gritties are here, because you can't paint the entire chemical space with one brush. Varsha?
Let's see what all stocks Morgan Stanley has covered. So they've maintained overweight on Deepak Nitrite, but they've cut target price, and they've maintained equal weight for PI Industries, and they've maintained underweight for SRF, Navin and Tata Chemicals. What they say is that Q3 was a contrasting trend. You know, fluorine and diversified companies did post a good numbers, but when it comes to agrochemical companies, they actually struggled. And for FY26 outlook, increased production and capacity should improve operating leverage, but the AgChem, that is agrochemical recovery, is uncertain due to competition, and so that's the reason they've maintained cautious outlook on India chemicals. What they're saying is that the FY26 recovery won't be smooth for many companies. China and EU demand is weak, and India faces dynamic customer behavior like short-term purchases and Chinese competition as well. Indian companies will likely increase production to gain market share, but the prices increase will be limited according to Morgan Stanley. And the unit EBITDA is expected to improve 5 to 10% in FY26 due to operating leverage, but still below mid-cycle levels, and lower returns are actually expected. And they've changed their estimates. The earning for SRF, the earning estimates have slightly raised, and for Navin so they've raised the estimates for earnings for SRF and Navin Fluorine, but significantly cut for Deepak Nitrite and Tata Chemicals.
Okay, got it. All right. Thanks so much, Varsha, for getting us those details. Now, Osho, if I were to push you to pick something in the chemical space, and not necessarily for a short-term target, But something that you see based on the price action in the space in the recent past few weeks or so, what would you find a conviction buy in, or would you avoid the space entirely?
No, there are very stock-specific action that is being seen, or there are various counters which are actually having a very strong movement in the recent period. So one of the counter which is looking very positive on the technical front is Navin Fluorine. This counter have started gaining traction from the zone of nearly 3,200 to 3,300, and from there onwards there has been a significant development which has even emerged above the previous swing closer of nearly 38, 3,900 kind of a zone. So I'm expecting that in the recent period or in the coming period, there is a possibility of a higher continuation or a price action which can give a strong momentum towards the zone of 4,500 to 4,600, looking at the technical parameters. So I'm expecting that there can be a stock specific action from the space. Some of the counters are expected to do well in basis of the technical parameters, while other counters, as mentioned, we're having some kind of tough time also. But Navin Fluorine is looking good to me. Even SRF is having a very strong technical charts, but it has given a very strong breakout around the zone of 2,600. And once it retests the zone of neckline around the zone of 2,600, it will be an apt zone to accumulate this counter from a short to medium term point of view. So both these counters are looking very positive. And apart from it, UPL is also looking positive to me from a short to medium term time frame.
Okay, coincidentally, those two counters, SRF and Navin Fluorine, seem to be the consensus buys for the fundamental analysts also. I'm wondering if that's the case for Asta. Asta, would these two be your picks? Because we spoke to our experts at the start of the day today, and I can't remember who it was, but they also picked these two counters in the chemical space. I think it was Meera Vashar who picked this, Latin Manhalra.
Yes, in fact, even I do like Navin Fluorine a lot, and here the price target is around 4,300 to 4,400 odd levels. Talking about this counter, I mean both of the vertical. If I talk about CDMO, definitely it has got a very strong order position. In fact, if I talk about their other specialty chemical vertical also, starting of the manufacturing facility at Dahej and Surat will definitely help the company in posting strong numbers going ahead. So in fact, if I talk about any counter in the entire chemical space, I think Navin Fluorine is the best placed at this point of a time on the back of a strong numbers which it has posted. So idea here is to stay invested in this counter with a price target of 4,300 to 4,400.
Let's move on and take a look at what Jefferies had to stay on the capital goods areas. L&T and BHEL are the two stocks that have been mentioned. Anushi joins us with the key details.
Hey, so first of all, L&T and BHEL is expected to drive order flow growth. Now, while these are the preferred picks, let's see what has happened in the quarter. Now, if you look at the order flow, they have risen about 34% year on year, which was led by L&T and BHEL, which showed about a 53% and a 167% of a growth respectively. So strong orders coming in for both these counters. In fact, if you look at the defense pack in general, the focus is on the Q4, as now the orders, there's going to be bunching up of orders in the fourth quarter. But however, if you look back to the quarter, defense orders had declined 79% on a high base. But expectations is that Q4 would be an accelerator going forward for the business. Power and defense is something which is going to be having higher visibility, and they believe that while growth will moderate ahead, double-digit growth is something that we should be watching out forward for, and operating leverage remains as a key for the business. Even L&T, if you go back to the con call, the emphasis is to grow their margins going forward, which in the previous few quarters it was disappointing, but in the last few quarters we have seen strong set of numbers coming for L&T. Now coming to Jefferies' top picks, Siemens, Thermax, L&T and HAL remain as the top picks in the space.
Thank you, Anushi, for key details. Asta, Siemens, Thermax, L&T are top three capital good picks for Jefferies. They do expect most of the order inflows to come to Q4, but you also have the question of whether it will be executed, because that's when the revenue actually gets recognized. Among these three, which is the stock that stands out in terms of their execution and what has more upside potential?
So I think L&T is well placed among these three. But I would also like to bring your focus on BHEL, which I think is also a very good candidate on the back of a strong order book, and now they are diversifying into the railway and other verticals. So I think the BHEL is also one of the counter which is strongly placed apart from these three. So my ranking is L&T first, followed by BHEL, and then Thermex, and then Siemens.
A history of delayed execution, and while we have seen one-offs in certain quarters, but that remains the case in an overall picture.
Right, but if I see the past track record of L&T, I think definitely the past track record is very, very optimistic, and on that basis, right now that can be a case, but in the longer term, I think the execution capabilities are quite strong as I compare to the other counters. So on that basis, I think L&T is well placed if I am giving the ranking to all these counter, followed by BHEL and then Thermex and Siemens.
Got it. Fair
and
enough.
one more point I want to bring in your notice that Siemens, I'm giving a fourth number because apart from the execution capabilities, we have also seen that management was not very much optimistic. And in fact, when they have given their Q3, I suppose, Q2 FY25 on call, in fact, they have not given some positive outlook. And that is why we have seen a strong fall in the stock prices since then. So I should look after the management, commentary also, and on that basis also L&T seems to be a good one.
All right. Let's shift our focus to Petronet LNG, which is also buzzing in trade today. It's up 1.5%, and this is after JP Morgan did come out and note they've maintained their overweight rating, target price of 377 rupees. And what the brokerage is saying is most risks are already priced in, that the current stock price builds in a good volume, builds in no volume growth, and the 15% cut in the Dahej and Regas tariffs by March, as well as the proposed PDH plant generating returns of 50 to 60% of cost of capital is yet to be priced in. They do appear harsh and suggest strong valuations do support the stock. In terms of your key catalysts, one is the start of the new 5 million tons per annum Regas capacity at the Dahej terminus, which will add to the company's EBITDA. They also see summer demand for power, which will help LNG imports on a seasonal basis. And lastly, the completion of the tariff negotiations with GAIL, Indian Oil, as well as Bharat Petroleum can remove the overhang in terms of reduction in tariffs or tariff question mark, if you may, and this overhang removal could be positive for the stock, and that's why we have Petronet LNG buzzing on trade today. Osha, I'll come to you. Fundamentals remain positive. Most of the risk already priced in on the charts. How does Petronet LNG look?
Well, in this counter has started gaining traction from the zone of nearly 180, 185 until the zone of 370 in a very vertical manner. And after that, we have witnessed a 50% retracement on the price action. So I'm expecting that with the kind of a correction this counter has seen recently, there is a possibility of pullback in this counter. So I'm expecting in the short term, there can be a possibility of pullback for a target of nearly 325 to 330 in a very short term perspective. But if there will be any sustainability above the zone of 325, then from there we can see a kind of a trend reversal in this counter, which can turn out to be a bullish momentum coming for a future perspective of nearly 360 kind of a target. But for now, 325 to 330 is the immediate target that one can expect in this counter.
Okay, all right. That's the view on Petronet LNG, up about 1.6% in trade today. Cement stocks have been in focus, and this is on account of a raw material price increase. Pet coke prices have now risen to an 11-month high with persisting concerns around the global economy. Somit is joining you to tell you about when this will likely impact the companies and what the expected impact could be. Somit?
Well, yes, cement companies would remain in focus given the fact that pet coke, which is one of the key raw materials for them, now the prices of this raw material is at an 11-month high. To be precise, from the third quarter average prices, they have increased nearly 17%. In third quarter, the prices were averaging around $98 per ton, but now the prices are averaging around $115 per ton, which is a 17% jump. Now, what has led to this jump in prices? It's because of the spike in Chinese demand coming in for the US pet coke prices. We are seeing such kind of a move in the international price prices. Apart from that, for Indian companies specifically, it's the currency depreciation also which will add to their woes going forward. Now do remember that cement companies generally have an inventory of around 2 to 3 months, so the impact of this increase in prices and currency depreciation will largely be affected from the first quarter of FY26. Now what would be the impact on the cement companies? Now generally petcoke forms nearly 55% of the total raw material cost. For some companies it could be higher. For northern region companies it is usually higher compared to what it is for central region, but on pan-India basis it's around 55%, and on pan-India basis this increase in prices and currency depreciation would lead to an increase of around 75 rupees per ton for the petcoke prices for Indian cement companies. Now of this 75 rupees, 60 rupees is because of the alone of the price movement, while the remaining 15 rupees is purely because of the currency depreciation that we have seen. Now to negate this impact of cost increase, they'll have to take a price hike. Now generally if cost is increasing by around 100 rupees per ton, then the price hike required by the cement companies is of around 5 rupees. So around 3 to 4 rupees of price hike is required to negate this 75 rupees increase in cost for the cement companies. So we'll have to wait and watch whether they go ahead and take a price hike, or whether there's impact of higher raw material costs will come on their margins from the first quarter of FY26.
Okay, got it. Samit, thanks so much for that. Asta, we're running out of time, but a very, very quick view. Any cement stock standing out for you? It has to be a 20-second answer.
Yes, Ambuja Cement is still looking good to us, so recommending a hold on this counter. So Ambuja Cement can be a hold with a price target of around 550.
Okay, all right. So bear in mind, of course, that you could see the impact of what Samit was talking about in the first quarter of the next financial year. Thanks so much to the both of you for joining in, Osho as well as Asta, and always a pleasure speaking with you. That brings us to the end of this edition of Profit Buzzers. Thanks so much for watching. From Mika and myself and the team that put the show together, thank you so much for watching. Do stay tuned. Lots more coming up over the course of the day.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims?
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, if you look at the benchmark index, that has been flat in trade, not much of an action. It is stabilizing around the 22,900 mark, but it's the mid cap and the small cap that have been in green in trade today as well.
Actually, yes, Somit, but let's just pull out the constituents of Nifty 50. When I talk about the losers, you have Maruti Suzuki, HDFC Bank, Bajaj Finance, Apollo Hospitals, Britannia. But if I talk about the gainers, you have Shriram Finance, NTPC, M&M, Adani Ports. Let's pull out. Let's see which are the sectors that are buzzing. Barring auto, media, realty, everything is under pressure. Nifty FMCG is down, 0.13%. Nifty Bank is down, and Nifty IT is also down. Nifty Pharma is actually down. Yesterday also Pharma was under pressure because of the, ongoing tariff, all the things. But if I were to talk about advanced decline ratio, let's pull out that chart as well. Well, there you go. You have almost 1500 advances against 670 kind of declines, and Somit was saying that broader markets are the things where things are going pretty interesting. If I were to talk about Nifty Mid Cap 150, let's see what's happening there. So it's up almost 0.7%. Let's see who are the constituents taking this index up. So gainers, if I want to talk about, you have Godrej Industries, Linde India, Tata Invest, IGL. Jeffries actually has maintained a buy on the stock. Even you have APL Apollo as well, which is in the gainers list. While if I talk about the losers when it comes to Nifty Mid Cap 150, you have Ajanta Pharma, you have Supreme Industries, Aurobindo Pharma. There's a reason behind Aurobindo Pharma under pressure. Company did receive observations when it comes to their warehoused facility. You have Nykaa and Biocon as well in the losers list. If I were to talk about Nifty Small Cap 250, let's see what's happening there. It's up almost 0.8%. There you go. And Piramal Pharma, MTAR Tech, Amara Raja, Rajesh Exports are some of the gainers in the Nifty Small Cap 250. While if I talk about losers, you have Godfrey Phillips, JBM Auto, Capri Global, India Cements, Jyoti Labs. These are some of the losers in Nifty Small Cap 250. But few stocks which are actually buzzing on the back of order wins. You have BCL Industries, wherein company and its subsidiaries won ethanol supply tender from OMCs. Company will supply almost 23,000 kiloliters of ethanol for rupees 135 crore, and this ethanol will be produced from FCI rice. On the second on my list is India Glycols. If we can pull out chart for that company, it's actually buzzing. Well, it's kind of down right now, but it was up almost 4 to 5% if I'm not wrong. Well, they've received almost 1200 crore order from Bharat Petroleum for the supply of ethanol, and they've received this contract from OMCs and oil companies. Company will supply almost 18 crore liters of ethanol, and the order is received under ethanol blended petrol program, and this order will be executed in ethanol supply year 2024-25. Last on my list is Worry Energies, wherein they've received order for supply of solar modules for from Engine India arm, and this supply of modules will commence in FY 25 to 26. And the current order book is actually pretty interesting. They have a current order book of 26.5 gigawatt, which the value of that is almost 50,000 crores. So Somit, these three stocks are actually buzzing on the back of order win. Right. So if you see, Worry Energies is up almost 5% in trade today.
Well, it must have hit an upper circuit as well in trade. But let's also get in Prashant Tapse, the Senior VP Research with Research Analyst with Mehta Equities. Prashant, to start off with, what's been perking up with BSE? The stocks gained at least 10% in the last two trading sessions. Any views on this counter?
Are you talking about BSE?
Yes.
I think the way how markets are getting volatile and going forward, I think overall the capital market positivity is increasing again. All the negativity which we were seeing from last 3 to 6 months have been neutralized right now. I think going forward again, we are in the fourth quarter. If you have seen Q3 earnings, they are also better than street estimations. So I think we are thinking again the volume will be increased in the BSE exchange, and that will gain lot of business tactics for the revenue generation. So I think that will be one reason why stock is again going up. Again, last 2-3 days there was a lot of profit booking attempts seen in the overall broader market, but again these things are picking up very soon. So I think fundamentally as well as technically the stock looks very good for another 5 to 10% momentum from current levels.
Right. And any views on the stocks like BCL, Worry Energies on the back of the order wins that we have seen here?
Obviously, yes. We are in the fourth quarter right now. A lot of companies will start giving a lot of orders to the vendors and other things like this. So I think fourth quarter, a lot of order books will come, but the big question would be on the execution side. Obviously, today the stocks were up by 5 to 6%, mainly because of the news, but that was a sentimental impact on the action of the price. But overall, execution is the biggest question that comes once the execution comes in next 1 quarter or 2 quarters. But overall, obviously, fourth quarter, a lot of order books will be flowing out through the companies, and that will be in action.
Right. Another stock that has been buzzing in trade is IGL, and this is after Jeffries has maintained a buy rating on the stock. Basically, they are expecting the price hike trigger to come in anytime now, and that could be one of the key focus of the company, given the fact that they'll be able to maintain their margins going forward on the back. What is Jeffries about to saying about the same? Let's get in Mika on that.
So Jefferies maintains its buy rating. Its target price is set at 252. The company has been managing to source low-cost LNG, which is a key input for the company, and this helps the company's margin as well as volume outlook, is what the brokerage is saying. They also they're saying that the decline in APM gas availability, which is administered price mechanism gas, which is procured by the company as a fixed cost, the decline of this is manageable, and the company only needs a ₹2 per kg price hike to protect its margins to pre the two levels before the deallocation, and the management focus on volume growth is a key positive for the company, and there are also new growth opportunities from the end of marketing exclusivity. Now, as per Citi, in recent days, both IGL as well as MGL have signaled a shift in their stance towards the regulator's attempt to enforce the end of market exclusivity. As per the brokerage, the declaration of the CGDs as common areas is not much of a threat to the larger CNG-focused companies. They believe that the introduction of the competition actually offers an opportunity for companies like IGL to expand their geographical footprint and thereby their volumes, and it also increases the possibility of M&A or by entering new geographical areas of smaller players for the company. So this is a positive for IGL on both parts.
Right. Well, thank you, Mika, for that. Prashant, any views on IGL? Volume growth has been pretty much steady for them right now, and given the fact that conversions of vehicles have been pretty much steady, the volume growth going forward will also be pretty much strong for the company. Do you think price hike would be the key trigger here coming in?
I think two triggers. Again, price hike can be a first trigger at 2 to 3 rupees, can be expected very soon, maybe in next 40-45 days. So that can always trigger the margins which were under pressure due to the government intervention last few months back. Second, again, obviously you said it right with respect to the volume growth. I am expecting next year CNG vehicle sales will be better than the other petrol or diesel vehicles. That would be second trigger, obviously, that which will help these companies to expand pan India, as well as the volume growth will follow on to these companies' volume.
Well, moving ahead, as the auto industry gears up for tough terrains, Maruti Suzuki has come up with a new 5-year plan, with the company planning to reach more than 2.5 million in sales by 2030. We have Tushar joining with us with more details on this.
Essentially, the new 5-year plan is sort of reinstating what the company had stated earlier, that will aim to make 40 lakh cars or 4 million cars in India by 2030. But the sales figure that the company has stated at 2.54 million units in India, that's about 25 lakh odd units in India, stands out, because that means the company is looking to export 15 lakh cars annually by FY30. So exports is going to be a major component of what the company's future looks like. The company wants to become the largest EV maker in India in terms of production, exports, as well as sales in the country. The company's investment, the parent company Suzuki is investing about 7,000 crore rupees into India. That's about 1,200 billion yen. About 2,000 crores will go towards stepping up production capacity. About an equal amount of money will be invested in developing new models. The company believes about 75% of its volumes, incremental volumes, will come from new fuel types, actually, hybrids, electric vehicles, as well as CNG. Most of these volumes will be likely be concentrated, except for the EVs, where the company is set to become the manufacturing hub for Suzuki for electric vehicles globally.
Thank you, Tushar, for all the details. Prashant, your view on Maruti Suzuki, considering they want to introduce 6 electric cars by FY30, including 2 in FY25?
I think the near-term trend would be very difficult because of the high competition in the EV segment. Tata Motors is carrying almost 60% of the market share right now, and again, now a lot of new other Mahindra & Mahindra, if you have seen the order book which has last week, I think 8,000 crores of order for BE6. So EV is a very high competitive sector right now. Obviously, they are good in terms of low cost pricing model with 5 to 10 lakhs worth of car models for Maruti Suzuki for entry segment. But for a EV, I think 15 to 20 lakhs would be the basic version for a car. But still, I think it's a long way to go for a EV from the Maruti Suzuki. I think Tata Motors will lead the segment right now. But overall, I'm still neutral to negative on Maruti as of now.
Right. Well, in a recent development, RateGain Travel has signed a pact with Thai budget carrier Nok Air. In this agreement, Nok Air will gain access to RateGain's advanced pricing intelligence platform. To tell us more about the same, we have Rucha joining us.
So RateGain is up more than 6% in today's trade after it announced that Thailand's Nok Air has selected the company for its real-time competitive insights. Well, Nok Air operates domestic network as well as international routes in India as well as China. With AirGain, Nok Air will access real-time competitive pricing data from over 300 airlines and 50 plus OTAs is what the company has mentioned in an exchange filing. It will also use an AI-powered pricing intelligence which will enable Nok Air to navigate market complexities. So this one is a big positive based on which the stock is buzzing in trade right now. Talking about the latest earnings, the Q3 earnings which came out on 14th of February, that is last Friday. Revenue was up about 11%, margin came in at 22%, net profit up about 40%, all this on a consolidated year-over-year basis. However, the stock ended 3% lower on 14th February as the results came out. Lastly, talking about what analysts believe on the street based on Bloomberg, well, there are 6 buy calls, 1 hold call and 1 sell call with a return potential of up to 43%. So big positive for the company on the back of which it is trading in green today.
Right. Prashant, any views on RateGain?
I am very positive on the stock with respect to its software as a service provider for a traveling and hospitality sector, which is growing very fast in the global markets. Today, the stock is up only because of the news which the anchor has already said it. But with respect to valuations, again, if you see last almost 1 month, the stock has come down from 700 rupees to 500 rupees. So there's a good correction in terms of valuation. Now, around a forward P of 25, I think there's a very comfort level for any fundamental or a conservative investor who would like to take a call on this for a long-term investment. So overall, a bullish, positive view on the stock.
So positive view on the RateGain. Well, a slew of stocks are in focus on the back of block deals. Anushi joins us with the list.
Hey, thanks for that. So firstly, the big one yesterday was BSE. In fact, it's buzzing in trade today as well. This is after Goldman Sachs Singapore had bought about 0.53% of stake in the company. In fact, Goldman Sachs bought about 7.28 lakh shares, and this was at a consideration of 5,504 per share, which took the total bulk deal size of to around 401 crore. But there were a couple of insider transactions also which were in focus. Now, this includes the promoter group buying shares in several companies. This includes Maharashtra Seamless, wherein the promoter group bought about 5.5 lakh of shares. NCC, there we saw about 3.06 lakh shares being bought by the promoter. In Godrej Properties, 75,000 shares were bought by them. This, if you go and check some other counters, we have counters like JSPL, Deepak Nitrite in focus as well, along with something like Usha Martin, where 25,000 shares of the company were bought by the promoter. Then just if you are seeing in the shares sold category, we have Star Cement, in which the promoter group had sold about 60,000 shares. So BSE is the big one in focus, along with some insider transactions which has happened, wherein promoter groups have sold and bought stake in a couple of these counters that we spoke about.
Right. Thank you, Anushi. Prashant, so out of all the names which was mentioned by Anushi, BSE, if you see, the stock is up, 12% in last 5 days. Any view on that?
Yes, fundamentally very positive. Again, the way how the volumes are growing in the exchange. And I think the mood of the capital market is again towards the positivity going forward for next 6 months at least. So I think overall the business model is strong. I think that will be a lot of earnings growth for Q4 earnings. Again, if you see Q3 earnings also, they were very much above street estimations. That is also one comfort level for supporting these valuations. So I think overall 6,200, 6,500 can be a target for at least 6 months to 12 months from current level. So overall bullish on the stock.
So bullish on BSE. Well, there was this brokerage note on chemicals. Morgan Stanley actually came out with a note wherein they've maintained overweight on Deepak Nitrite, equal weight on PI Industries, underweight on SRF, Naveen and Tata Chemicals. So just what are they saying is that Q3 was a contrasting trend, considering the fluorine and diversified chemicals did well, but commodity and agchem actually struggled. And for FY26, so increased production and capacity should actually improve operating leverage, but the agrochemical recovery is uncertain due to competition is what Morgan Stanley is saying, and they have a cautious outlook when it comes to India chemicals. Well, when I talk about the FY26 recovery, so what they're saying is the recovery won't be smooth as the China and EU demand is weak and the India faces dynamic customer behavior, short-term purchases and Chinese competition are some of the issues due to which the FY26 recovery won't be smooth as per Morgan Stanley. And Indian companies will likely increase production to gain market share. Pricing increases will be limited as per the brokerages. If I were to talk about the India Chemicals expectations, so what they're saying that unit EBITDA will actually improve 5 to 10% in FY26 due to operating leverage, but still below mid-cycle levels, and low returns are actually expected. And they've changed their estimated earnings. So earnings estimates have raised slightly for SRF and Navin Fluorine, but significantly cut has been for Deepak Nitrite and Tata Chemicals. So Prashant, over to you. We all know the pressure that is there in chemical industries and especially agrochemical industries, which has not done well over the last 2 years. So any names out of this that might interest you?
I think we still continue the neutral to negative outlook on the specialty chemicals due to the high competition. Again, the China plus one strategy did not work from last 2 years. I think there are a lot of pressure still from the other countries as well. So overall, Indian capacities are still very much underutilized. I think there are a lot of cost effects, cost margin benefits they have to take. And I think one has to wait for another 1 or 2 quarters to see how these margins will get benefited out of this good capacity expansion. So overall, I am very much neutral to negative at this point of time. If you want to pick one stock again, I would like to go again with SRF again at this point of time, considering the high ROC and high ROE as a valuation parameters for me. But again, obviously with a 60 forward P will not be so comfortable to have an aggressive buy call. But obviously, if you want to choose one, I would like to choose SRF at this point of time.
Right. Well, another stock that remains in focus is Cyient, and this is after the board has appointed Sukamal Banerjee as the new CEO for the next 5 years. Rucha is joining us with more details on him.
Cyient Limited is in focus as the company has appointed a new CEO, Mr. Sukamal Banerjee, for a period of 5 years with effect from 19th February 2025. Now, Mr. Banerjee spent nearly 3 decades, that is around 27 years in HCL Technologies, where he led its transformation initiatives and incubated the IoT Works business unit globally. Well, he left HCL Technologies in 2023 to join a digital engineering company, Exorient. He holds a bachelorate degree in mechanical engineering, and he's also an MBA in finance and strategy. Previously, it was Mr. Karthikeyan Natarajan as the CEO of the company. He had resigned in January, around the 23rd of January. And remember that the stock back then tumbled about 23% in just 1 day after this resignation. And the stock has since then declined nearly 16%. Therefore, this is the much awaited appointment for Cyient post the abrupt departure of the earlier CEO. Well, let's talk about what Morgan Stanley believes. Morgan Stanley has an underweight rating with a target price of 1500. It says that this announcement of an external candidate as a CEO is a positive for the company, but it will expect any strategic changes to come only gradually, and also mentions that investor will require an improvement in execution with respect to revenue growth as well as margins to turn incrementally positive on the stock.
Prashant, have you tracked this countersign? Do you think that after this appointment, the major overhang goes away and now a turnaround strategy would be in place?
I think yes. I started tracking the stock once the stock was down by 20% on the day that the key management person has resigned. So I think they were looking for a very aggressive person who could lead the company going forward. But obviously, the person who joined right now will take some time to understand this company and understand the company model and then the client business model. So it will take its own time. At least we have to give him at least 2-3 quarters to understand how this key person change will affect the business model, as well as how we will take a lot of key actions to improvise their margins. To be on the price action again, I think we should remain neutral once the new management takes place. We need to wait and watch for 1 or 2 quarters before taking a positive call.
Right. Well, apart from that is the cement stocks that remain in focus, and this is purely on the back of the fact that pet coke, which is one of the key raw materials for them, the prices of pet coke are at an 11-month high. Now, if you compare it with the third quarter average prices, they have risen nearly 17%. In third quarter, the average pet coke price was around $98 per ton, and currently they are trading around $115 per ton, which is a jump of nearly 17%. Now, what is the reason behind this rise? Well, it's because of a spike in Chinese demand for US pet coke, which has led to international prices going higher. Apart from that, it's the currency depreciation also, which will add to the woes for Indian cement companies. Now, do remember that Indian cement companies generally have inventory of close to 2 to 3 months, and the impact of this higher pet coke prices would largely be realized in the first quarter of FY26, which will be the next quarter. Now, what would actually be the impact for the cement companies? Now, generally, if you look at on pan-India basis, the average pet coke contribution to the fuel mix is around 55%. For some regions it is higher, like for northern regions it is higher at around 80%, but for central region it is lower. So the average pan-India contribution comes at around 55%, and this increase in pet coke prices internationally could lead to higher prices by around 75 rupees per ton. Now, of this 75 rupees, 60 rupees can be attributable to the actual rise in prices, that is 17% rise that we are seeing, and the remaining 15 rupees is purely because of the currency depreciation that we have seen. And cement companies will have to take a price hike to negate this cost increase impact, and generally to negate 100 rupees increase in cost price, cement companies need to take a price hike of around 5 rupees per bag. So to negate this 75 rupees cost increase, they'll have to take a price hike of anywhere between 3 to 4 rupees, and if they do not take this price hike, then the margins could start to get impacted from the first quarter of FY26. So keep an eye out for cement companies in trade. And Prashant, coming to you, how do you see, do you think cement companies will be able to take a price hike? Because so far we have not seen a major price hike coming in from the cement companies, at least in the last 1 year.
I think near term it is very difficult to take any price hike. The way you are saying with 4 to 5 rupees price hike would be difficult, at least for first quarter of next financial year. There may be some hike after the monsoon season where the volumes will be down, and then there can be some kind of opportunity to rise post the monsoon season. So I think for next 1 or 2 quarters, there will be very difficult for a cement companies to pass on the cost which they are incurring through the pet coke price hikes. But I think the pain will remain for a very shorter period of time. In this again, I think there is a good room for a company called Ultratech Cement. I think that was the only stock which can have some kind of margin pressure to their own books and then take a call to go forward in the market.
Well, right. Well, thank you, Prashant, for joining us and giving us your perspective about the markets. Well, another stock that has been in focus is NHPC, and this is after CLSA came out with a note where they have upgraded the rating to high conviction outperform from an outperform rating that they had earlier. However, on the target price front, they have actually cut the target price on NHPC to around 117 from 120, which they had earlier, and they clearly believe that this stock could double in the next 4 years. Apart from that, they're saying that the decadal green growth has been validated on the back of the regulations that have come in for FY24 to FY29, and they also believe that NHPC has been gaining share in hydro and new energy, and there has been a faster growth in multiple sectors for NHPC so far. That's what the brokerage believes, and the main point here is that they're expecting the stock to double in 4 years, and on the back of this note, the stock has gained around 6% in trade. Well, apart from that, it's stocks like APL Apollo Tubes, which has been gaining on the back. In fact, the entire metal sector has been gaining. APL Apollo Tubes is up around 5.6%. The Indian metal index has also been gaining in trade, and this is largely on the back of in fact, NMDC is almost up 6%. Hindalco is around 5.5% up in trade. JSPL is up 3.5%, and that is largely because JSPL promoters are also continuously buying shares from the open market. Nalco is up around 2%. Now, what is helping NMDC? Well, it could be a couple of things. It could be the fact that there could be a steel price duty that could come in, import duty that could come in, that could also help steel companies take a price hike, and indirectly NMDC would also benefit because they'll be able to pass on the higher iron ore prices to the steel companies. So keep an eye out for metal companies. A lot of news expected around the corner. Well, with that, it's a wrap on this edition of Top Trades. With that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to see.
Welcome, this is India Market Open. I am Agam Vakil. We are taking a look at how markets are faring in the last 1.5 hours of trade right now. Nothing much has changed. The Nifty stays flat, marginally in the red yet again, not unlike what we saw yesterday. And it has turned out to be a very, very listless weekly options expiry as well as far as the Nifty is concerned. If you consider the Bank Nifty, a little bit of an underperformance today as against the outperformance yesterday. So the Bank Nifty is down around 0.4%. And now let's talk about the various sectors across and see how things are faring there. So firstly, in terms of the one sector which is in fact under a little bit of pressure is the financial sector. Some of those indices belonging to the financial sector belong to the Nifty Bank, the private bank, as well as the Nifty Finance indices. All of them declining by around 0.5%, finance a little over 0.5%. But the India Volatility Index has come off as well, and substantially so. The expectation now for the VIX is to move towards a mark of 12-13 for now. On the higher end and on the gaining end, however, we do have gains and strength in metals, energy, and PSU banks. But even if you consider the small cap, the mid cap space, well, they are in fact outperforming the benchmarks. I'll come to that in just a bit. Let's talk about the constituents of the Nifty first, and then we can take a look at the broader markets. So we do have an advance for Shriram Finance, Adani Ports, and NTPC. All these stocks advancing by a little less than 4%. Of course, Shriram Finance at 4% gains. What's weighing down on the indices is heavyweights like HDFC Bank. That's down around 2.2%. We also have some amount of weakness in Tata Consumer Products, ITC along with ACL Technologies and Maruti also weighing down the index to a certain extent, but more gainers than losers. The advance decline ratio hasn't changed too much, at least as far as the Nifty is concerned. Has that, however, changed when it comes to the broader markets? Well, it is towards the advances, and this is for yet another day of trade where the broader markets are doing well and outperforming the benchmark indices. That brings me to the broader market indices. So the Nifty 150 is advancing by around 1.25%, and the Nifty small cap index is also up by nearly just as much. We have seen gains in several of these counters from yesterday, and well, to take a look at some of those names in today's day of trade as well, see where there's a pull and push coming through. Let's pull up the top gainers and losers on the 500 index. That should come up for you on your screen. So we have whopping 17% gain for Godrej Industries, Piramal Pharma advancing by around 9%, as is the case for Sterling and Wilson Solar. And then you have a recovery playing out for names like Amara Raja and Lind India, along with Radico Khaitan too, up as much as 8%. Suven Pharma is something that we're going to talk about in the show as well. And of course, on the losing end, we continue to see a sharp slide in Godfrey Phillips. Today, down around another 7%. Weakness in Ajanta Pharma, V-Mart and JBM Auto also down by well over 4%. And of course, as is the case for Capri Global. So all in all, it's a day of trade where the broader markets are looking at positive market breadth, but the benchmark indices continue to consolidate, largely flattish, and that's what we are keeping an eye on this afternoon, Neeraj.
Okay, well, let's take it to our experts then, Agam, to try and understand what to do in a scenario like this. Rajesh Palvia, SVP Technical and Derivatives Research at Axis Securities, joins us to talk about derivatives and the charts, of course, and on the fundamentals, Sonam Srivastava, founder and fund manager at Right Research. Both of you, thank you so much for joining in. Rajesh, good afternoon, and thanks for being at the conclave, Rajesh, and thank you for being here today on the show as well. Really appreciate. Would love to understand, how are you seeing the texture of the market the last couple of days, because it does seem like that the broader end of the spectrum seems to have, if not climbed the wall of worry entirely, just trying to get its foot in the door of the gainers.
Good afternoon, Neeraj. Good afternoon, everyone. And it was, very insightful conclave which we have attended, which you have organized. It was very organized, and many new insights we have got from the industry experts and the market experts. So moving back to the markets, Nifty again and again, creating a 22,800 low and recovering from those levels. So again, there is a sign of worry in terms of near-term trader, because once we broke below 22,800, then maybe the fall could be slightly severe, because at the multiple time, if you are trying to hold any particular level, and if it breaks, then fall can be severe. But till the time 22,800, 22,750 levels are intact, I think looking at the broader market, which has recovered in last couple of days, that is giving some sign of divergence, that yes, market is trying to bottom out at these level. Maybe it may consolidate further in terms of Nifty. We could see range of 22,700, 750 to 23,100. This could be the possible range for next couple of weeks, and either side breakout will decide the major direction for the Nifty. But I think looking at the recovery in the stock specific as well as in the oversold stocks, and mid cap, small cap space is also started recovering. So that is again building up some confidence on the retail clients as well as in the traders. And I think if the same behavior continues for next couple of days, so I think yes, maybe on the higher side we may get the breakout about 23 100, and if that happen, then rally can extend further. But I think till expiry we may remain in the range. So we have to play in the range only for Nifty. But yes, stock specific, lot of opportunities are available. Bank Nifty is attempting to cross 49,500, 600 zone. That is major challenging level based on the data. So I think once we able to take out over 49,600 on a closing basis, then maybe we may see some short covering action, and then possible really can extend to 50,000. But on the downside, at this juncture, 48,800, 48,900 are the important support areas. So minor dip can be used as a buying opportunity in the Bank Nifty now. So that is important level to watch for. If it breaks below 48,800, then we may see a further course of correction in Bank Nifty. So that's the view on indices.
Okay. Rajesh, on that note, if you could also tell us about some ideas that you like this afternoon.
Yeah, so first stock is from the capital market side only, and that is Motilal Oswal Financials. If you look at the structure for Motilal Oswal, stock was in downtrend, but if you analyze on a weekly chart, since last 4 weeks, stock is able to hold its 600 level, which is important support area. Even if we go little longer period, it's a important support area on the longer term chart also. So I think if it's continues to trade above 600, I think this pullback can extend further. And we have seen this capital market related stocks have done well in the today's session. Most of the stocks have shown good buying action. So one can look to buy this Motilal Oswal for upside target of 670 to 680. With stop loss of 610. And just a disclaimer, this stock we have recommended to our client also for same targets. And other stock is Indian Hotel. If you look at the structure, stock has connected and taken the support almost from its 200-day moving average, and we have seen a recovery from those level. So we believe that Indian Hotel can extend its up move. Looking at the overall structure, we believe that the possible target one can project around 790. One can keep stop loss around 745 to buy Indian Hotel.
Well, those are two ideas coming in from Rajesh. So let's get in Sonam into the conversation. Good afternoon to you, Sonam, and thanks for joining in. Sonam, over the past, I would say since October, momentum clearly is out of fashion. But under these circumstances, what are you doing and what kind of factors now take precedence? Do you think that value now comes into play? Are you still getting into stocks which are showing more growth in terms of earnings? How are you constructing your portfolios, or rather what kind of rebalancing are you bringing about in your portfolios?
Right. So thanks a lot for this question. See, what we're seeing is obviously that momentum is not working that well. But I think the factor to focus on right now seems to be quality, right? Which is companies that have a good moat, that have good ROEs and are financially more stable. I think that is what sort of stood out even in the last trade war, and that is what our models are also focusing on. So recently, we have during this whole drawdown, we have reduced our small and mid cap exposure and actually have moved a little bit to large and mid cap, especially the quality names, because obviously there is a correction, there is a recovery that has happened in the last couple of days, but we do not think that this is the exact bottom, because we expect the market to be a little bit range bound. And in this market, high quality names, especially the ones that have a lower volatility, might be the ones that sort of stand out. So that's what we are sort of doing right now.
Okay, fair call. But the last couple of days, thankfully, some of the small caps have gained, which is actually a good sign right now. If you're taking the large cap bet, where within large caps are you finding favor right now, Sonam?
Doing just large caps, we are doing large and mid caps, but we're sort of staying away from very small and micro caps. And there's some very interesting bets to have. I think you guys already mentioned Suvain Pharma. So that's one position that we've taken. We have India Hotel that I think was also mentioned. Other names like Indigo, Persistent Systems, these are the quality names that sort of have come up in our portfolios. And so obviously these are not very, very large stocks, but they are relatively stable and high growth stocks, I think.
I wonder if power comes into the scheme of things, because a lot of these power stocks have corrected quite a bit, and maybe there's a bit of a reversal that might be happening there. And you look at it that yesterday before Suzlon was very, very active. It'll be interesting to see if the likes of water or other hydropower companies might be in focus as well. So all of those certainly come into focus as well. You know, the one stock, viewers, today that has done really well, and then we'll get to the views from both Rajesh and Sonam on that, is NHPC, because if you look at that stock and what it has done today, it's quite stunning really, 5.5%, and currently trading at the highest point of the day. I think this has happened after CLSA upgraded it to a high conviction outperform idea, even though they've cut the target price a little bit to 117. Mihika Johnson, with what is it that CLSA has mentioned as the key reasons for liking this stock? Mihika, good afternoon.
Good afternoon. So CLSA was already bullish on the stock, but it has still upgraded the rating to the highest rating it can give to NHPC, and that's a high conviction outperform rating from outperform rating previously. Now the rating was mainly upgraded because of inexpensive valuations, which is due to the 25% correction the stock has seen in the last 6 months, and now the valuation trades at 12 times its FY27 P ratio. The target price has been cut slightly to 117 rupees versus 120 earlier, but it's only to factor in higher capex, but it still offers 57% upside potential to the previous close. Now, in terms of the key catalyst for the company, well, the start of the Parbati 2 hydropower project is expected to boost the regulated equity of the company by 27%. They've also noted how the company's entry into shorter duration pump storage space is a positive, and overall over FY24, FY28, they expect the regulated equity to more than double. Just context, regulated equity is the portion of NHPC's capital that the regulator allows for the company to earn guaranteed profit on, and this is how you kind of calculate the profitability potential for the company. And lastly, in terms of growth expectation, they expect 79% higher EPS over FY25 and FY27, and they expect the company's return on equity to also expand 512 basis points over the same period.
Okay, so that's NHPC as a stock of the day. Mahima, thank you. Pardon me. Mihika, thank you so much for getting us that one.
This happened twice today. It happened with me in the morning as well.
Yeah. Well, it does happen more often than we care to admit. But Rajesh, I'm going to come to you on NHPC. It's been on. So it does look like, at least today's day of trade, it looks like a little bit of a dead cat bounce. But you correct me if I'm wrong here. What is your observation in NHPC technically?
Yeah, definitely. So after a long correction, stock has shown first sign of trend reversal, but still it's again on the higher side. The 85 level needs to cross, then we may conclude like yes, the trend has reversed from the down to upward. Because still a series of lower top, lower bottom formation is there. But yes, in this process, in this recovery, now stock is crossed about 20-day, 50-day moving average. Stock managed to give breakout of falling trend line also on the daily chart. I think this week close above 82, 83 level may encourage further more buying action in this counter, and then possible rally can extend to 88 to 90 kind of level also. So I think those who are already in trade on the long side can hold the position with the stop loss of 76. I think possible upside can extend to 82 to 83.
Okay. Do you like any of these companies, Sonam? NHPC is one, but everything in that power ecosystem which has all come off, right? Suzlon was at 85, at 51. There is Inox, which has done that. Hitachi Energy's come off a little bit in the power grid system, and then of course NHPC and some of the power generators. Do you like anything in the power ecosystem?
Yes, so Hitachi Energy is another stock that we have picked up. It is in the power sector. It is another one of the slightly largish but high quality companies, I believe, right? So that is one stock that we have sort of picked up during this correction as well. This particular stock had picked up momentum which corrected, but it is a favorite of many analysts who keep on getting upgrades, and I think it ranks highly on quality as well as growth, right? So this is one stock that we sort of like.
Okay, Sonam, I have a little bit of a theoretical question for you, and this is to do with the momentum. Now, over the last 10 to 12 years, we have seen this particular factor play out. In fact, a lot of portfolio managers have, given significant weightage and only increased their weightage to the momentum factor, even in terms of, ranking various factors. At this point in time, this is perhaps the first time in at least 10 years that we're looking at 4 and if not 5 straight months of declines coming in. It's been a very, very testing time for anyone who uses the momentum factor at this point in time. How do you go about it? Because over the past 10 years, as I've suggested, is something which has worked so phenomenally well, and now the time it's really, really tested patience of a lot of these practitioners. What's your opinion here?
So definitely see this, I would assume like in 2018-19, right, which was the period of the last trade war, I think that was also one of the phases where momentum struggled, right? It was a very, very range bound market. And what you saw was high beta stocks were correcting and momentum was going up and down, but your quality stocks did well. So I sort of presume that this trade war could have a similar pattern where, things are not going haywire, but there's a lot of volatility, persistent volatility. And it's very stressful to be a momentum trader at this point in time. I remember when I was working in HSBC around that time, my team got shut down, and there's a lot that happens to momentum traders during these stressful times. But I think that's why you have to have a multi-factor approach. You have to look at, let's say, quality or other factors that could work well in this time, right?
You are saying that you have reduced your weightage to momentum substantially, or does it stay the same and do the other factors, of course?
So I think we have a proactive sort of allocation right now. Like I said, our allocation is highly towards quality as well as low volatility. We obviously look at, let's say, earning momentum and things like that when we pick up stocks. But I think right now the focus is on quality and low volatility. And our strategies are dynamic, so if the market changes, we can pick up on momentum, but right now it has reduced.
Sure. All right. Point taken. Well, thank you for that clarity. But, we'll get Mihika back into the conversation. Nifty is the top metal, Nifty metal is the top sectoral gainer, even as it surges around 2%. What's pushing the pack higher? Let's get in Mihika to tell us why.
Yeah. So the index is the top sectoral gainer. No clear stock specific trigger except for maybe one or two, but the index is up 3.8% this week and up over 1.2% in February 2025, making it the only one of the two sectoral indices that have gained in this month. In terms of the metal gainers on an intraday basis today, well, APL Apollo up 5.3%, so has Welspun Corp gained that much, and even Nalco and NMDC on focus, they've seen gain of as high as 3.3%. In terms of the last 5 days, you have NMDC at the top, it's up almost 6%, Hindalco is up around 5.5%, JSPL around 3.5%, and Nalco around 2%. Now I'll first come to NMDC. Well, iron ore future prices did rise over 2.3% on an intraday basis in trade today, and higher, and they're also up 6.3% in Q4 FY25 so far, and higher prices are not only better for the company's realizations, but they also improve the prospects of a potential price hike for the company. In terms of your aluminium companies, Hindustan Industries and Nalco, well, one is the strong aluminium prices. LME prices are up 7% month on month as of yesterday, and 16% on a year-on-year basis. And as per the the management, the prices are expected to stay in the $2,500 to $2,600 range in FY26, which does not mean any significant deterioration in prices. We also have positive management commentary coming through in the last 2-3 weeks. Hindalco says that the US tariffs have a neutral to positive impact on Novelis, and they expect the demand and the company to bounce back in Q4. They also expect a 40% quarter-on-quarter rise in their downstream EBITDA per ton metric to around $250. As per National Aluminium Management, on the other hand, they expect Q4 results to be similar in terms of growth as Q3, margins to be at 40%, and they also guided FY25 revenues at around 15,000 crores and margins stable at 35 to 40% range that we've been seeing this year. Lastly, we have JSPL. One is all steel stocks in general have been gaining on anticipation of anti-dumping or a safeguard duty on steel imports, which have been hurting the Indian industry. Now, the potential import duty will not only help the companies but also help increase domestic steel prices. A 10 to 15% safeguard duty will help JSPL's FY26 EBITDA by 5% and 15% respectively, as per Morgan Stanley. And lastly, we did speak to Axis Securities in this month itself. Now, their top steel picks as per order is Jindal Steel and Power, JSW Steel and Tata Steel. And if you have to look at the whole metal, which is your non-ferrous and ferrous pack, you have Hindalco and Vedanta at the top, Nalco, then JSPL and then JSW Steel in that pecking order.
Okay. Thanks for that, Mika. Very active in the first half of the show. But as we're speaking of metals, and which has been the top gainer today, as we said, let's hear in a view coming in from Rashi Chopra of Citi, who was talking about metals and the impact of tariffs on the sector, or potential tariffs on the sector.
The US imports about 70% of their aluminum, about 25% of their steel is all under imports, right? And on steel as well, when 232 was sort of implemented earlier, there were a lot of exemptions that came through. And at the moment, I think really only 18% gets taxed over there. So the question is, will it stay or will there be exemptions? Number one. Hypothetically, if it were to stay, right, at the moment, like from an aluminium perspective, Hindalco has been quite confident that at the moment they benefit from the premiums rising. And in their view, the exemptions will come and they won't stay. From a pure India perspective, right, and again from a reciprocal tariff perspective, etc., we're not really exposed from an export market perspective. India exports about almost like 230 to 250,000 tons of steel to the US, because in any case there's a tariff, a 25% tariff on India. From aluminum side, it's 100 KT exposure. Sorry. And the only place again where reciprocal tariffs become important is thermal coal and coking coal. Sorry. Because we import about 10 million odd thermal coal, 10 million odd coking coal. So I think that becomes a question mark. But then, there are alternate sources of coal that are available globally. So it's still all a big question mark, but purely from a sort of a reciprocal tariff perspective also, I don't think the implications are very significant purely on tariffs.
Okay.
From an Indian equity perspective, we are still negative on steel as a sector, because we're still sort of banking on, or rather the view is that there's not a lot happening in China at this point in time. I think the market is still hopeful that something will come up on the safeguard side, which is why the stocks are kind of in a range. And I'm not sure necessarily reacting completely to the tariffs. I mean, the volatility is there, but I think it's on the one side is something happening on the tariffs, the other side is something happening on the Indian government doing something about safeguard and protectionism. But we are still sort of the view that maybe nothing will really come significantly on the safeguard side, because inflation is a big question mark as well.
In fact, talking about private capex, SBI Chairman C.S. Setty said that the core sectors like steel are not spending and must be encouraged to come forward and not fear much about tariffs. He spoke about this at the NDTV Profit conclave.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening. Maybe we are kind of an outlier, because we are the largest player in the project financing. So obviously, whatever projects there in the market will come to us. So if you see our pipeline, I mentioned in my analyst meet also that we have, both in terms of the capital expenditure by the public sector as well as private sector, is almost about 2.5 lakh crores, which is a very good visibility. And I also mentioned that the sectors which are not actually spending is the core sectors like steel. And it's not about that they don't have the domestic consumption or demand, but I think everybody is watching what is the external sector is going to be. You did mention something about tariffs, right, to the Commerce Minister. But it's a fact that all of these core sectors are waiting, particularly steel is waiting, that how these tariffs, not in India, but in other countries, how is it going to play, whether it is going to lead to any dumping. Yeah. So this is something what everybody is watching. But otherwise, I see the sectors like, renewables continue to be doing well across the segments within the renewables. Roads are doing well and data centers are doing well. So if we measure the private capital expenditure only by way of steel, cement and these things, I think we need to wait for some more time for the dust to settle down in the West, and then things become clearer.
Right. Well, Sonam, coming back to you, you did mention a handful of names which have popped up for you, which are showing in some sort of an indication which could potentially see more allocation coming through. But my question is, what are your systems currently showing up in terms of themes or broader sectors which are likely to see more allocation as far as your portfolios are concerned?
Right. So, see, in terms of the themes that we are picking on, it is, like I said, mostly in terms of quality as well as, sort of stocks that have, lesser risk of defaults, stocks that have very good cash flow, a very good cash flow return on investment capital and stuff like that, right? We always sort of also have a lookout on the estimates coming out from analysts. Even though in the recent correction, we've seen many of the smaller suffer a lot in the combination of good quality indicators and lesser financial stress, I would say. That's what we're focusing on.
But you don't have specific sectors as such. You will have various many ideas from various many sectors. Is that a good way to look at it?
Yeah, so typically the sector rotation happens along with the factor rotation for us, and we've seen that evolve a lot over the past few years. So, for example, in the beginning of last year, we were invested in all the PSUs and defense and railways and all that, and then eventually last year we were allocated a lot into consumer names, capital markets, hospitals, stuff like that, right? So it evolves over time. And right now, I'm seeing a few cyclical names also come up. So there seems to have been a shift in the model. But we do have a fair bit of, let's say, consumer durables, consumption, and those type of themes, right?
Okay, all right. We leave it at that. Sonam, thank you so much for joining us and taking us through your views on the current markets as they stand. But on that note, it's time to slip into a short break. And on the other side, we continue with all the market action. Back in just a bit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get
All right, back with India Market Close right here on NDTV Profit. It's the time of the show wherein we get you one of the most anticipated things, the chatter from the dealing room. It's our segment Heard on the Street with a remarkable strike rate thus far. But you know what, Somit, what that does, right? When your strike rate is remarkable, the expectations go up. Right. So, okay, not putting pressure on you, Somit, but good afternoon. What are you learning? Just actually, before you get to the specific stocks, are dealing rooms talking about the strength at the broader end in the last couple of days? Because it's slightly new to see that relative to the Nifty.
This is last couple of days we have been seeing some buying action coming in. But it's not that people are putting in a lot of funds in that. It's just
they are not, right? Because I remember you telling me some days back that the HNI action on the dealing rooms is just quiet.
It's quiet. It's quite muted.
It's still quiet.
It's still muted. It's not that they are coming in large money, large funds and deploying it. Just some deployments that we are seeing, and some actually FI buying is also come back, but in some selective counters. Not that it's a basket buying that is happening. Some selective counters are still seeing some FI action as well.
Okay, now again, just before we get to stocks, in the last 4 or 5 days, right? There were a couple of news bits that we did, which have turned out very right, including Airtel and some others, right? So, which is great. What is it that we have today?
Firstly, it's Godrej Consumer. In fact, if you look at the stock price, it's up 5% in trade. So there is buy flows coming in from institutional desks, but both FI and DI. But what is more interesting here is that earlier there was an FI and a leading family office which were actively selling this counter, and that has been done. So that sell part is completed, and hence we are seeing this kind of an up move in Godrej Consumer. Also, management in Kotak Securities conference gave a very strong commentary that happened yesterday or just a couple of days back. So that is one counter to watch out for. Other counter is Lend India. Now, strong volume action on this counter. We can surely expect high delivery volumes for this stock. A prominent FI PMS has gone ahead and actively bought this counter in trade today. Then there is REC, Crompton Greaves and Trent. And as I was mentioning, there is selective buying in FI desk, and these three stocks stand out among them. And we should keep an eye out for these three counters. Strong FI buy flows is what I'm understanding for Crompton Greaves, REC and Trent. And another stock that is interesting in trade is HDFC Bank. In fact, Chinmay pointed out this while I was talking to him, that the stock saw around 15.9 lakh shares sold today in the opening trade. And after that, volumes have been muted. And never in past we have seen such a large trade happen for HDFC Bank in opening. If you see the volume action, if you can get that chart, 15.9 lakh shares at the opening trade, and after that the volumes have been muted.
Okay, I don't know if we can pull up the volume picture for HDFC Bank right now, but if we can, we should. But Somit, what you're saying is that large voluminous trade took in the first 5-10 minutes of trade.
Exactly, yes.
And that's
in that also, in couple of 2-3 trades, that volume just happened. And after that, the volumes have been quite muted. And never in past also in opening, we have seen such large volume getting sold off.
That's
What I'm picking,
interesting.
it's an FII seller obviously, but we need to watch out for the bulk and block data. Could
Okay.
be interesting one.
Okay, that's interesting. Okay, Samit, thanks for that. Maybe we ask Rajesh because he looks at this picture closely. Rajesh, if you check the volumes on your screen as well on HDFC Bank, very large blocks early and then not maybe so much, but the stock has been down today. What do the charts and the derivative positions suggest to you?
Yeah, so a large block was traded in the opening tick itself, and stock has slide from those level. But still, if we analyze on a little near-term to short-term perspective, stock is trying to take support at its upsloping trend line on daily chart. Stock is just slipped below to 20-day moving average, which is almost placed at around 1690, 1700 zone. So I think again, if it's able to sustain above 1700, I think stock is ready to give some pullback action towards 1730, 1750 zone also. So stock is trying to recover, moving in upsloping channel on daily chart. Stock is now approaching to its important support area. So 1680 is the important level to watch for in the today's closing. If it's not break below that level, I think some pullback we may see in the coming days.
Okay. All right. Well, if we do have Sandeep Agarwal with us, yes, we do. He's a fund manager and co-founder at Sovilo Investment Managers, who joins us on the show. Sandeep, good afternoon. Thanks for joining in. Your latest on the reading in terms of how things are panning out for the IT sector specifically. What are the ongoings and how are you looking into things now?
No, hi, good afternoon, and thanks for having me on the show. So, coming to your question on the IT sector, I think IT sector has also, come pulled off a bit in last few days, and my view is that if you see the trade imbalance with the US, which is the most talking point today, we have around $50 billion of excess exports, and I think the assumption which people have and the investors have for some time now is that IT being very integral to the US economy and the whole deep tech, the IT probably will not see any imposition of any kind of cost from the new president. But in my view, the president is a very hard negotiator and he knows where to hit. And so I think that the cost of doing business in the IT sector can go up a little bit, or there could be some constraints. And I think that is what something which has not been discounted by market. All the positives have been already built in. So I would be a little skeptical in IT stocks at current levels. But from a longer term perspective, obviously, this is one sector where growth and cash flow generation has been the best. So from a long term perspective for investors, it is a good sector and you can be invested and accumulate. But in near term, the risk remains.
Okay. Now, Sandeep, good afternoon to you. I would love to understand from you, Sandeep. I'm told by our team that you've gone across the country, met a lot of companies, maybe in conferences, maybe otherwise, and have tried and understand from them what's happening on the capex side, right? Can we start with that? And then in that vein, Sandeep, nail it down to the investment argument that comes from your findings as well. So take your time, Sandeep, but tell us what have you learned about capex or the lack of it, and what does it lead to in terms of investing?
Yeah, hi Neeraj. So, we have been working on this capex thing for quite some time, and I have traveled to most of the industrial belts, right from Chennai, Bangalore, Baroda, Rajkot, all the belts from where, a lot of IPOs also you would have seen are coming, primarily in the engineering and other spaces. And one very interesting thing which, I saw when I speak to promoters is that most of them are very, very conscious of where they are putting in money and what kind of returns they can get. So if you go back 5 years, then I remember that most of the times, when I was also on the sell side, we used to see the return ratios and we used to grill the management on the return ratios that your return ratios are very poor. What kind of investments you are doing? You should look at the return on that investment, whether you should do it or not. Now exactly opposite has happened, because what has happened in last 4-5 years, and this is also reflected in the way private capex has happened and the way the balance sheets have got deleveraged, because primarily if you see the leverage always happened because of either working capital requirement or the capex. Now if you see recently all the IPOs also which are coming, you will find very interestingly that most of the IPOs are coming for raising money either for an OFS or for the working capital requirement. The capex requirement or the requirement to put in assets is very, very low. Now, when you go deep down into this, and this is what exactly we have done, we have made more than 40 companies and listed and unlisted, primarily unlisted, which are going to go for an IPO and all. And when we meet the management, they have become so market savvy. They are talking about return ratios on everything. They want to invest in the assets. So, they are very interesting findings. Some of the managements are so curious that they have tried to calculate the return on investment for every single asset they are putting, and wherever they think that the asset will give more than 25%, 23% return, they are okaying that kind of capex. They are ready to buy that machine, build that infrastructure. But wherever the return ratios are slightly lower, they are trying to get those things through outsourcing or through import. Now, this is, this may put a very good picture when you see the financials and the ratios, and they may get higher valuation, and maybe that is also in the back of their mind. But in a long term, this doesn't make any sense, because what happens is that you need to build whole business in a long term. You can, whatever you're living today and you're not spending, this will become very difficult to get. And I think that is the real problem why private capex is lagging the public capex.
So here's the question, Sandeep, then. Does private capex at some point of time pick up? I mean, because, there is only as much of outsourcing that you can do in order to shore up your ratios. At some point of time, you will need dependability of supply as well, right? So therefore, does private capex pick up at all? Because we heard, for example, at the conclave, the clutch of companies are saying that we are now starting to put it up. So is private capex picking up, part one, at all? Part two, whether a yes or a no, what is the investing implication of this? Please tell me that. I mean, would you go out and therefore stay away from the capex beneficiaries, or would you go out and buy them because they've corrected quite a bit?
So, yeah, Neeraj, so, I think this brings discipline, because earlier we have seen that most of the very good companies went bankrupt because of very high capex, and also, the industrial cycle playing against them. And it is a good thing that if managements are doing that kind of research and they are very conscious about where they are investing money, it is a very good thing to do. But I think that discipline has got overstressed, and honestly speaking, I think that some of the managements have started behaving like fund managers, which is not good, because you have to build your empire and business. But good thing is that, now with if you see the data, the balance sheets are deleveraged substantially, and now I think the corporates are opening up that they have some space to build in again new capex and invest in assets. So I think we will see some pickup in the capex, but I'm just trying to give you a glimpse that what has happened and why private capex has lagged. The primary reason for that is simply that they were too much focused on return ratios, and now with deleveraged balance sheet, I think they will be in a better position.
All right, let's get in another technical opinion on something like a handful of these defense companies. Maybe I can talk about Bharat Electronics, because it does seem like it's made an up move, and it's also part of the Nifty 50 now. I reckon that a lot more interest here. So this one, of course, has also corrected quite dramatically off late, but it's not corrected as much as the other defense companies. And currently it's up, looking at an up move around 2.5%. So Rajesh, your view on Bharat Electronics at this point in time?
So after correction, stock has formed a base at around 235, 240 zone, and this is the second consecutive day we have seen strong buying action in the counter. Looking at the reversal which we have witnessed on the daily chart, there was a bullish engulf candle on the previous day and follow buying action in the today's session. So I think stock is ready to approach towards its 20-day moving average, which is placed at around 268. So I think for that target, one can hold the position, and around those levels, one needs to review it whether it's able to surpass that level or not. At this juncture, hold the position, and with stop loss of 254.
Okay. Let me take this conversation on defense ahead with Sandeep as well. How are you reading into cues? Because we've seen a sharp recovery in a handful of these names from the sector. Do you think that at this point in time, there are opportunities in the defense sector that could be taken advantage of?
Yeah, hi. So I think, government is very focused on spending on the defense side, and they want to increase the percentage of export in defense, and there is too much of focus, and I think it is a good sector. Only challenge which we face when we analyze the sector on numbers is that, the stocks are really, really expensive, and at these valuations, everything positive which could be there till 2028 has been discounted for. So, and 2028 is honestly a very long period of time from here. So for 2-3 years, if every positive is discounted for, and if we get something, if some bad news comes, or one quarter you have seen that, 1 or 2 quarter government not doing capex can lead to such kind of situation where stocks correct by 40-50%. So, such price to perfection and such expensive names, we really want to be more careful. We like the sector, we like the companies, but we don't like the valuation. We are a little stingy in giving valuation.
Fair enough. It's good to be stingy in giving valuations, I suppose, especially in markets like this. But let's get in my colleague Anushi, who's going to tell us about 3 stocks which are on her radar. Anushi, good afternoon.
Hey, good afternoon, Agam. The first one on my list is BCL Industries, and now this is after the company and its subsidiary has won an ethanol supply order or tender from OMCs. Now, this is to supply around 23,000 kiloliters of ethanol for a consideration of about 135 crores. This ethanol is to be produced from FCI rice. So the stock is up around 10% in trade today. Second one on the list is BSE. This was after a bulk deal. Even yesterday we saw BSE buzzing in trade. This was after a bulk deal which happened, in which Goldman Sachs has bought 0.53% stake in the company. The Goldman Sachs bought 7.28 lakh shares, and this was at a consideration of about at a 5,504 per share. Total bulk size, if you see, that added up to 401 crore. So BSE is the second one on the radar. But the third one on the radar is Radico Khaitan. This is after its Royal Ranthambore whiskey has entered the CSD market, which stands for Canteen Stores Department. The company aims for a 10% of a market share in the blended Scotch whiskey category in the CSD side, and it also aims to diversify its luxury and semi-luxury brands now, which contributed to about 250 crores in the 9-month period of FY25. Along with that, now the company also expects a net 500 crore of net sales in FY26 given their higher demand. So they expect to cross this value, because of which the stock is buzzing in trade today. So these are the 3 stocks in my radar today.
Okay, and you know what? We have to talk about BSE because we didn't exactly address it yesterday. And while it was up about 5.5%, 6% yesterday, today it's gained yet another 5.5%, 6%. And if I'm not mistaken, there's a possibility of BSE making our life high today, at least close at a life high today, even if it doesn't make one. Rajesh, this question is for you. It's clearly defined gravity, and this does seem like there's no stopping, because there are good volumes as well for the past couple of sessions. What's your reading here?
Yeah, so I think whole sector, capital market related sector, has done well in today's session. Especially BSE is clearly outperformer, and yes, looking at the intensity of buying in last 2 trading session, and the way stock now managed to give breakout above February swing high. So I think now if it continues to trade above 5,900 level, yes, definitely stock may again move back to the new all-time high trajectory very soon. And the way stock is holding the ground on the long-term chart, despite of these kind of corrections in market, I think this stock has furthermore upside potential going forward. Once market stabilized and once Nifty started recovering about 23,000 or 23,100, I think we believe that 6,300, 6,500 could be the short-term target we may see in the BSE. So at this juncture, advice would be to keep trailing the stop loss. Now stop loss, those who are in trader in nature can trail stop loss towards 750 and hold the position. Possible target 6,200, 6,300 we may see in the near-term perspective only.
Okay. By the way, just wonder, some stocks, just wanted to mark, pull up ISGEC, ISGEC, and show what's happened there today. That stock, see that dip and then the subsequent recovery. So That one is interesting. Prestige, I think, saw some selling today, Prestige Estates, and just wonder what again, look at that selling happened, and from the intraday low, that uptick that has come up in Prestige. So that's the other interesting one that happened. I wonder what DLF is doing today, because there's some optimism around that stock, but up about 1%, and kind of that's about it. So some interesting movers, and especially from the lows of the day. And if you look at the mid cap and maybe the small cap story today, intraday, I think you will see that it is a story of upticks from the lows of the day and currently trading at the high point of the day, particularly the mid cap index 1.29%, but I'm inclined to see what the small cap index is up to as well. High point of the day 1.3%. 2 days on a trot now, we've gotten the broader end of the spectrum really turning around, and that is actually quite remarkable. Now the question only is this a dead cat bounce or no? I think difficult to say that. Rajesh, maybe we spoke about this earlier on the show, but for people who are tuning in right now, this is a very different last 2 days for the mid caps and small caps than what we've seen for maybe months altogether. Are the charts showing something remarkable, or is this something that you'd be wary of? You want to see whether it gets sold at higher levels and then take a call? Just trying to understand what are the make or break levels for the mid cap and the small cap index.
Yes, this is the fourth day where strength is there in Nifty Midcap Index, and the way Nifty Midcap is now shaping up on the near-term perspective, I think if it continues to trade above 50,800 mark, I think possibility of a rally to extend further towards 51,800, even 52,000 level also. But till the Nifty not able to take out about 23,100, because the major short covering or major buying thrust will come about 23,100 level, because that will give some comfort to the traders as well as to the investor, because we are in congestion zone, and once we take out on the higher side, then yes, we may see some aggressive buying to emerge in the market, and then possible 52,000 would be the next level for Nifty Midcap Index on the higher side. So at this juncture, 50,800, 700 zone is the important level to watch for on the Nifty Midcap. And if we go with the Nifty Small Cap, I think here also recovery is taken place, and which is almost reflecting in the breadth of the market itself. So I think here is also the similar kind of behavior is emerging, and we believe that we may see continuity of uptrend for Nifty Small Cap also, and possible really can extend towards 16,000, 16,100 for Nifty Small Cap. So here also 15,500 needs to watch closely. If it's sustainable those level, then I think 16,000, 16,200 level can be achieved.
Okay. Now, just want to, before we take that break, a set of stocks which we've pointed out since the morning, right? Sumit did this piece. And these are stocks at the broader end of the spectrum where actually, can we show that on the wall if we can? Because these are stocks wherein the growth in EPS for Q4 and for FY26 has been high, and yet the stocks have gotten sold off because the multiples got a bit derated. So if you look at that, Nalco, Avalon Tech, Arvind Smart or G Vernova TND, FY25 EPS upgrade was to the tune of 73% and 30%, 32%, 28%. FY26 has seen upgrades as well. Yet the 12-month forward PE fell, and in the case of Nalco or Arvind Smart Spaces, really sharply. And in some cases, the multiples are not too expensive either. So here is a set of companies wherein the growth in earnings in FY25 and 26 is very strong. And in some cases, the P multiples, 12-month forward, which is 1 year forward, doesn't look all that egregious. Nalco, you would agree 9%, 9 times for a commodity company is okay, but VRL Logistics, Arvind Smart, not very expensive or as expensive as a G Vernova TND or an Avalon. There is one more set of stocks like this. So if you look at Brigade, MCX, etc. Sure, PG Electroplast, the numbers are expensive, but Nuvama Wealth, look at that. FY25 EPS upgraded by 17%, FY26 upgraded by 12%. and the multiple has gotten derated. The 12-month forward multiple is just about 19 times, so not very, very expensive here. Now, Sandeep, come in here. Some of these stocks, you can't see all of them, but I hope you heard about some of these that I mentioned. And I heard you tell Agam earlier that you're very stingy with your valuation multiple, right? But there are some companies out here where the valuations are not expensive and the earnings have actually gotten an upgrade for FY26 as well. Do such stocks become companies which are worth studying in the current times?
Yes, so Neeraj, let me give a disclaimer. Some of the names which you showed, we own in our PMS for our clients. So very difficult to call them out. But let me put it this way. You have done a very good analysis. This table is really, really good because this is what the way we also track the companies. So I will tell you, when the fall happened, then everything got butchered, right? Now, slowly, when, things will start recovering, I think 40 to 45% of the stocks which have been butchered will come up because there the earnings has seen an upgrade. The margins have gone up and the outlook looks better. So those stocks will be the first one to recover, and I think that they will recover very fast and very, very sharply. But in this, when this recovery happens, you will also see that 25 to 30% of the stocks will get weeded out, and they will never go to those levels or may not go for 3-4 years because they were just story stocks or the earnings were very, very back-ended. I think those stocks will not recover even if the mid cap or small cap index recovers fully to the previous level. I think that this time the recovery will be more stock specific rather than the index at the index level. So I think, as you rightly mentioned, wherever there is the EPS upgrade and where there is earnings visibility, I think those stocks will be the first one to bounce back and bounce back very, very strongly.
Okay. All right. Well, on that note, we slip into another short break and we continue giving you updates on the last half an hour of trade. Don't go anywhere. Back in just a bit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focus on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government
Welcome back. It's time to get in Nagaraj Shetty, technical and derivatives research analyst at HDFC Securities. Good afternoon, Nagaraj. Thanks for joining in. Let's start by taking your view on the Nifty 50 now. How are you reading cues here?
Hi, good afternoon. Nifty has been consolidating around 22,700 odd support levels over the last few sessions. What we can observe, the sharp selling momentum that was there a few weeks back seems to have halted, and market is placed at a very strong support around 22,700 levels, which is the 38.2% Fibonacci retracement. I am expecting that there is a possibility of some more strength building up in the market to move further from here onwards. Initial resistance would be around 23,100, 150 level. Once it sustains about 23,100, 150, the next stop would be around 23,400 to 500 odd levels in the near term.
Okay. And Nagaraj, what would be the ideas for the afternoon?
Yeah, I have two picks from the mid and small cap segments. Chartically, these two indices have been doing very well after a sharp decline of previous weeks, and they are showing some signs of lower bottom reversal at the lower levels. Bullish patterns have been formed and they have moved up. On that basis, I have two picks. One is Castrol India and second one is Graphite. If you look at the Graphite has been hammered recently from the recent swing high of 520 to almost 380, 385 levels, and bounced back strongly in the last couple of sessions. Today's price pattern is indicating that this stock has formed a lower bottom and likely to move further. Currently trading around 422.50, 423 levels, one can look to buy at this point of time, and 445 is going to be the upside target, and one can place a stop loss at 410. If you look at Castrol India has been in a steady move over the last few sessions. It has been in a range bound action above the 200-day EMA. There was an knee-jerk action and bounced back smartly from the lower levels. Currently placed at the edge of upside breakout of the range moment around 214, 215 levels. Currently trading around 214. One can look to buy at this point of time. 224 would be the initial target, and one can place a stop loss of 208.
Okay, well, that thought, it's time to get in our bull and bear segment for today. And today we're not talking about a sector or a stock, we're actually talking about a sub-segment, and that's CDMO. CDMO players, in fact, have been in the spotlight after Trump indicated a 25% tariff on pharmaceuticals. Varsha now joins us with more details on this. Varsha.
Yeah, thank you for that. Actually, CDMO companies have been in buzz in last few years, rather 2 years now, because the CDMO itself, the sector or the sub-segment, it is itself growing in a double digit. But today I'm going to compare few stocks. So let me start with Piramal Pharma versus JB Chemicals. So in Piramal Pharma, if I were to talk about historical strength in Q4, which may continue. So company has seen a good growth in few of the quarters, and that may continue in Q4. While for JB Chemicals, if you see, there was a decline in revenue on the challenges faced in US and Russia. So though JB Chemicals have shown good growth when it comes to CDMO, but yes, they are facing challenges in US and Russia. Moving on, for Piramal Pharma, they are actually expecting 13 to 15% growth in revenue and in EBITDA in FY25. while for JB Chemicals, the CDMO business have faced material availability challenges. So this is on the disadvantage side when it comes to JB Chemicals. While Piramal Pharma is expecting to double their revenues to almost $2 billion by FY30 with 25% of margins, while JB Chemicals is expecting a slight dip in overall business growth in Q4. Next, let's compare Suven Pharma versus Laurus Lab. Actually, Suven Pharma and Piramal Pharma is buzzing. If I talk about Laurus Lab is under pressure. Suven Pharma is set to benefit from high growth CDMO segments, and Suven Pharma has a history of acquiring CDMO companies and taking them to the next level. While Laurus Lab, if you see, you have CDMO growth, though there was a CDMO growth, but that was offset by 7% decline in the generic segment that they see. When I talk about Suven Pharma, their CDMO revenue in Q3 was almost doubled year on year, while in Laurus Lab, if you see, though they have given a guidance of 20% margin in FY25, but there are high chances that they may not deliver their guidance, because management guided for 25% in H2 FY25 but reported only 20% in Q3 FY25. So walk the talk has been very difficult when it comes to Laurus Lab. So we need to see whether what the management is saying, will they be able to execute it, because in the past quarters they have not been able, they have not been very good when it comes to execution. So that's the disadvantage when it comes to Laurus Lab. While if you see Suven Pharma, they aim to achieve a revenue target of $1 billion, while for Laurus Lab, if you see, the high non-CDMO business will suppress the overall margins for the Laurus Lab. So this is on the disadvantage when it comes to Laurus Lab. So this is all we have. Bull versus bear when it comes to CDMO as a subsector.
Interesting. Varsha, thank you so much for getting us all those updates there. In fact, we spoke to Aditya Khemka, fund manager at Incred Asset Management, about how does he see the CDMO space panning out. Listen in.
Basically, during the COVID period, I think India gave a message to the world that we are your friends. You can come to us when you are in need. And today, the global landscape is that 80% of the drugs that are available in the world have one way or the other dependence on China. The Western leaders are basically thinking whether such a dependence on one geography, that to a geopolitical adversary, if that is that basically wise to save a few dollars or a few pennies on the dollar. And I think that is where they have decided to sort of push the industry to look for an alternative. Now, when you look for an alternative in the CDMO space, you want the 3 C's. You want cost, you want capacity, you want capability. So barring China, the only other geography which can give you similar cost, similar capacity, similar capability is India. So which is why, many of those order flows from China are coming to India. Customers who are really buying from China are now looking to buy from India. Remember, China even today sells $40 billion worth of API and services to the world, and India sells around $4 billion. So we are 1/10 their size. So no matter how much China loses, 10%, 20% is going to be a very significant number for us. So clearly, that roadmap is there. CDMO is going to be a great story over the next 5 to 10 years. It will have its own cycles also, because remember, we are smaller pharma companies today doing these CDMOs. So 1 or 2 clients may dictate what happened to the entire earning cycle in a quarter or over a year also sometimes, because sometimes clients a year worth of goods in 1 quarter. So, there will be volatility, quarterly, annual volatility in numbers. But if you're taking a 5 or 10 year view, I think that's pretty clear to me that, CDMO will be a space to reckon with.
All right. That's the view coming in on the CDMO space particularly, but maybe if we can actually take a technical view here on the entire pharmaceutical space. Rajesh, back to you on maybe if I can take a view on Laurus Labs. How is this one looking on the charts right now, and what would you do with this?
The stock has corrected in last couple of days, and in this correction, now stock is slipped below to 20-day, 50-day moving average. Looking at the near-term, short-term structure, I think if it's sustained below to 550 mark, continues to sustain below 550 level, I think stock may reach to the next lower side target of 520, 515. That's the important level in this correction. So those who wants to buy the stock should wait for 520, 515 zone. That's the important and strong support area in this correction. I think from there is a high probability of a reversal of trade. Once stock crosses above 555, I think then recovery can extend to 590, even 600 zone also.
Pardon me. Let's talk about IGL now, and this one is of course up and about in trade. We understand that Jefferies has in fact gone ahead and maintained a buy rating on the stock. We have Mihika joining us back to tell us about what's buzzing behind this one. Mihika.
So Jefferies maintains its buy rating. Its target price is set at 252. The company has been managing to source low-cost LNG, which is a key input for the company, and this helps the company's margin as well as volume outlook, is what the brokerage is saying. They also they're saying that the decline in APM gas availability, which is administered price mechanism gas, which is procured by the company as a fixed cost, the decline of this is manageable, and the company only needs a ₹2 per kg price hike to protect its margins to the two levels before the deallocation, and the management focus on volume growth is a key positive for the company. And there are also new growth opportunities from the end of marketing exclusivity. Now, as per Citi, in recent days, both IGL as well as MGL have signaled a shift in their stance towards the regulator's attempt to enforce the end of market exclusivity. As per the brokerage, the declaration of the CGDs as common areas is not much of a threat to the larger CNG-focused companies. They believe that the introduction of the competition actually offers an opportunity for companies like IGL to expand their geographical footprint and thereby their volumes, and it also increases the possibility of M&A or by entering new geographical areas of smaller players for the company. So this is a positive for IGL on both parts.
Okay, Mihika, thank you for getting us that. I'll take this one up with Nagraj. Your opinion on Indraprastha Gas, how is it looking on the charts?
Yes, Indraprastha Gas was moving in a broader range over the last couple of months, and recently seems to have made in a bottom reversal somewhere around 185, 188 levels and moved up. The overall chart pattern is looking promising for the bounce back, and I'm expecting this upside momentum of the short term is likely to continue, and 220, 222 is going to be the next overall resistance for the stock in the near term.
All right. Okay, from there on, we also want to take a look at NTPC. Now, NTPC is the other stock which is in focus because we've had a lot of conversations around the power sector in general, and of course, while we know about the renewable space and where the very recently spun off subsidiary, the renewable subsidiary, NTPC does stand at a very interesting precipice, especially after the kind of correction that we have seen of late. So, Rajesh, your view on NTPC now and what could potentially hold in store going forward?
The whole power basket is moving up. NTPC is also one of that stock. And looking at the reversal in today's session, it's a bullish engulf kind of formation is taking place on a weekly chart also. So if it's sustained above 320 level, I think this pullback can extend further. And in today's session, stock is now penetrating to its 50-day moving average also. So I think today's close is very important for the stock. If it's close around 325, 326, further follow-up buying action we may see in the tomorrow's session also, and then possible rally can extend to 340 zone also. So for NTPC, one can hold the position with stop loss of 320.
Okay, then that is on NTPC. Actually, I'm just wondering that when we talk about some of these power names, Sandeep, we were talking to earlier a guest as well, that the targets around the power ecosystem seem to be very, very strong and constructive, right? I think they just reiterated that there might be some for the battery energy storage system companies as well, that with every contract being given, some additional 2 gigawatts, if I'm not wrong, has to be given as well. I'm just thinking, and the space has gone through a correction. Does the correction make some of the power or power ancillary businesses attractive, or would you still wait for some time, Sandeep?
So, absolutely, we are very, very optimistic on the whole power ecosystem. And we have been a big investor in our PMS in the whole power value chain. And it started with the thought that, power demand will go up substantially. One, because of the manufacturing focus of the government. Secondly, also we had we thought that, to play the best proxy to AI will be power. So we try to also accumulate power stocks and power and related stocks from that perspective. Only thing which we have very deliberately not touched within the power ecosystem is the solar side, because the stocks were very, very insanely expensive and we were not able to buy such expensive stocks. But if you leave aside the solar part of the whole ecosystem, we have been invested heavily in the cable side. We have invested heavily on the transformer side, and we also have invested very, very heavily on some of the power generators and also transmission players. So we have actually saw a very good run in our portfolio also because of this power ecosystem stocks being there. And we honestly are very, very positive on the whole power theme still from here as well.
Okay. Well, so clutch of those names doing really well. I think the last couple of days there is some bullishness that has come in the voices per se, and in continuing with the bullish voices and thinking of global voices as well, we spoke to Trin Nguyen. Trin is the senior economist covering emerging Asia at Natixis, and here's her view on India, the promise, and how does India stack up within the rest of the emerging Asia pack. Listen in.
You can say the appetite for India is huge, right, given the high valuations. So I would say that we're going through a cyclical slowdown in India. And that cyclical slowdown, there's a big uncertainty, I think, for a lot of people is how long it's going to last, right? Obviously, there are rate cuts happening, but and of course, if you look at India valuations from the market cap, it went from 1-something trillion to 5 trillion, now declined to about 4 trillion. So it's still a huge market cap, particularly also relative to GDP. So I wouldn't say just because that there are outflows at the moment that investors are completely turning, and this is a cyclical reshuffling. The Fed is cutting rates. In a Fed cutting rates environment, a lot of high yielders are not doing really well. High yielders tend to do well in a Fed hike cycle. In the past that happened because why India was growing really fast, rates were really high. In a low yielder, so there's an adjustment, right? In terms of, they people have overshot China, for example, so there's a bit of a reshuffling that's going back. Valuations in China continues to be quite depressed. It is getting a lot better, particularly because now people are seeing that perhaps we should look at some of this value play, given that. And I think there's always been that idea. So I do think it's a healthy correction. The fact is we want to make sure that this is not going to be prolonged too long, right? And I think that is why I think for the Modi government, there's needs to be more significant reform to bring attractiveness to basically to make sure that this cyclical slowdown is only a short-term blip, and that it will be rebounding to a higher level. And to rebound to a high level in a fiscal consolidation phase, what that means is that the government is taking a step back in fiscal spending. It is still spending, but much less. Then you really need private sector capex. And to get private sector capex to get really excited is for them to get much more support from the government. In terms of streamlining the business, the government is doing that regarding rate cuts, but I think more could be done.
Okay, I have one final question, Trin. What did you think of the recent moves? I mean, we had a NDTV Profit conclave wherein various people came in and said that while India was in this growth slowdown, we probably passed that, and the government and the authorities at large have taken some moves. The budget put in some money in the hands of the consumer. Maybe that helps fiscal consolidation on track. The Reserve Bank of India, in addition to all the liquidity measures, have also gone ahead and cut the rates by 25 basis points. And capex has picked up since December in India. Do you think the powers to be have played their cards, and will it show up maybe in the numbers in the months to come?
Well, I think there will be more rate cuts. I reckon that there could be still another 75 basis points of cuts coming for the RBI. I do even if the Fed were to be hawkish, you think RBI will still cut rates? Yeah, I think in the short term they might pause, but I do think that they will continue to support liquidity conditions. And the dollar itself is on a softening path, so that would provide some support in space. In terms of fiscal policy, of course, the income tax cuts were pretty helpful, but I think the share of them is too small. And I think the fundamental idea here is that I do think that there needs to be much more aggressive focus of the government to grow beyond the ICT sector. I think the ICT sector is an area that will continue to grow. There's this big coverage that talks about how increasingly Apple is going to produce more phones in India. But I think India needs to also expand to other sectors, right? It's just a huge population. And I think the key concern here is that we're going to miss the boat if India doesn't do much more to attract investment within the country. And I think an area of a missed opportunity is in the labor intensive sectors where it's much less sexy to develop, right? So I do think that there's much more space for the next budget to refocus less on the agrarian sector, but more on manufacturing.
Well, just 9 minutes to close, so it's time to take in BTST calls from our experts. So I'm going to come to Nagaraj. Nagaraj, anything interesting on your radar right now?
I'm stick with the same cause that I discussed earlier a while ago. The two stocks that Castrol India and Graphites are looking positive for the even BTST and the short-term trades, and I'm stick with the same targets and stop loss.
Rajesh, the same question for you. BTST calls for today.
Until I'll select from the metal space, and metal space is looking promising. So Hindalco, one can look to buy. A strong buying action since last couple of days, and stock managed to be breakout of its previous swing high also comfortably. Hindalco can be looked at for BTST for upside target of 654. On the downside, one can place his stop loss around 630.
Agam,
okay. Yes.
Just because you look at derivatives charts so closely as well, what do you make of the last 2 or 3 days of this very sharp move at the broader end of the spectrum?
So broader end of the spectrum is always a little bit of a toss, because it just comprises of so many different varied stocks and the way things are moving. But right now we're not getting good trends. We're certainly not getting any direction whatsoever. Even price action is not giving you a definitive way by which you can in fact decipher the market move. I can, however, give you an idea about the benchmarks. And this is very much in line with what our experts are saying. There's a little bit of a consolidation, a larger probability of a little bit of a bounce, at least at the moment, keeping that in mind. But again, you can't really time that bounce. We don't know when it's going to happen. The other thing is that when it comes to FIIs and their positioning in index futures, that remains sticky and below the mark of 20% longs, and that has been the case for the past, well, at least a couple of weeks, if not more. And so those shorts need to be covered. We need to see a sharp bout of short covering, and then a sustenance over certain important levels. Those levels, of course, again, technical analysts will tell you and will be in a better position to tell you. But 23,000 may not be as important a mark as something like a 23,500 or a 24,000 will be. That said, the 200 daily moving average for the Nifty 50 is at around 23,600, if I'm not mistaken. We're still quite a bit far away, and it's going to be a little bit of well, it's going to take some might before we actually take that level out. So that's going to be something that we must keep an eye on. But while we're at it, let me tell you about what we're keeping an eye on overnight as we move into trade tomorrow. So firstly, US unemployment claims, huge number. So that's something that's going to have an impact on Trump rhetorics as usual, and of course a lot in terms of the Federal Reserve interest rate trajectory. US crude oil inventories, a little bit more pertinent to, the globe as well. And the US Federal Reserve balance sheet as well is something which we're going to keep an eye on. Well, moving on, of course, we're also keeping an eye on Japan manufacturing PMI. Inflation rates for Japan are now, taking a little bit of an importance now that even Japan has in fact gone ahead and hiked rates. So that's going to be a little bit of an important factor to keep an eye on as well. And as far as corporate actions are concerned, it's record dates for interim dividends when it comes to Manappuram Finance, Procter & Gamble and SJVN. And of course, as you can see, the dividends that are going to be paid out on each share. So these are some of the names that we're keeping an eye on. Let's not forget Stallion India Fluorochemicals will see an exit as far as lock-in is concerned. This is for the equity of around 4% right now. So that's the other stock that we are keeping in mind as we move into trade tomorrow. But all in all, yes, it's about 4 minutes left. So maybe I can get in another view or with Rajesh on what we can do with some of your other frontline names. Let me just pull up the top gainers on the Nifty 50 right now and see what we can in fact talk about. If we could also show up on your screen there and see how things have in fact panned out for the index, and then maybe I can take one of the top movers of the Nifty 50 with Rajesh. Okay, so HDFC Bank, of course, is one of them. ICICI Bank is the other. So I'll talk about ICICI Bank. Rajesh, your view on ICICI Bank here. How are you trading this one?
Still consolidating in very tight range. I think breakout is awaited once its stock crosses above 1265. Then I think we may see some pullback action towards 1300 zone. But I think till the time it's not breaking out about 1265, consolidation would remain in the range. On the downside, it's almost trading near to the support area. So those who wants to buy and hold for next 2-3 trading session, they can buy with stop loss of 1225. So I think there is a possibility of breakout on the higher side for ICICI Bank, because if you look at the weekly chart, there was a strong buying action a couple of weeks back, and stock is consolidating post that strong buying action. So I think towards the monthly expiry, I think there could be some upward momentum we may witness in ICICI Bank. So 1225 is the stop loss, and on the breakout of 1265 really can extend to 1300 zone.
Okay, well, on that note, thanking all our experts for joining us here on our show and taking us through their views on, of course, markets right now. But with that, we take a look at how markets are in fact panning out. So for the benchmark indices, we are keeping an eye on the Nifty, which is once again flat. A very uneventful 2 days. Consolidation continues. And coming down to the Bank Nifty, we're seeing a 0.5% correction on the Bank Nifty too. So this is as far as your overall indices go. Let's move on and talk about even some of your other aspects with respect to the markets. Maybe I can bring out the heat map here and take a look at what's happening here in terms of the Nifty 50. So, well, the market breadth on the Nifty 50 is positive. We have gains in Shriram Finance, NTPC and M&M, along with Bharat Electronics, and there is weakness in HDFC Bank, Maruti Suzuki and Tech Mahindra, along with Tata Consumer Products to a certain extent. We do have a market breadth which remains stable as far as the Nifty 50 is concerned. But what about the broader markets? So let's pull up the overall advanced decline ratio and take a look at how things are panning out there as well. And this is your market breadth for the NSE. So you have about 1,700 advances, another 600 declines. The market breadth remains positive for the third straight day here. And moving on, we are also taking a look at some of your other aspects. So let's bring out the broader market movers and take a look at how things are faring this. The mid-cap index, of course, is up around 1.3%. The small-cap index also up around 1%. And in terms of some of your key movers, we have advances for Godrej Industries, Rajesh Exports, and Piramal Pharma, along with NHPC. All of them advancing in trade by quite substantially. And on the losing end, we have declines for Godfrey Phillips, JPM Auto, and VMart, along with Ajanta Pharma. So some amount of weakness there, but the market breadth, as I mentioned, remains positive. And all in all, it's also the fact that we are continuing to see consolidation in the benchmarks. That's another positive trigger, considering we are not seeing further weakness. But on that note, it's a wrap on this edition of India Market Close. Lots more lined up on the other side. Stay tuned in. You're watching NDTV Profit.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेजी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर AI इसके लिए सेंटर्स बनाए हैं।
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company.
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. Viewers, benchmarks end flat with a negative bias. The Nifty remains below the 23,000 mark, whereas the Sensex is below 75,750 levels. Broader markets continue to outperform. Sectoral indices end mixed. Nifty, bank, IT, pharma and private banks end with cuts. On the other hand, metals, media, auto, PSU, banks and realty strengthen. Speaking of the auto index reverses losses during the day to end higher. The index gains over 260 points with heavyweights M&M, Eicher gaining the most. The Nifty FMCG index is down for the 14th straight trading session, marking its longest losing streak on record. The 14-day fall has wiped out 2.7 lakh crore in investor wealth, indicating that the rally post the union budget announcements with regards to personal income tax was short-lived. The focus shifts back to weak demand and margin pressures, while the cigarette major ITC has witnessed the steepest fall of 77,600 crore in the last 14 sessions. Hindustan Unilever has seen its market capitalization decline by 64,500 crore during the same period to 5.2 lakh crore rupees. Other consumer companies like the Nestle India and Varun Beverages have lost 12,400 crore and 30,000 crore respectively. Maruti Suzuki's share price declines 2.25% after the company released its new mid-term management plan. The plan, which outlines growth targets and significant investments in electric vehicles and other alternative fuel technologies, appeared to have a mixed reception from the investors. The company's new 5-year plan aims to achieve sales of 25.4 lakh cars by fiscal 2030. A key component of this strategy is a significant shift towards environmental friendly vehicles, with the company projecting that EVs, hybrids and CNG vehicles will account for 75% of its total sales volume by FY30. Pet coke prices rise to 11-month high, up to 17% to $115 per ton. Some concerning factors point towards more pain towards the pain space. Factors like spike in Chinese demand for US pet coke, currency depreciation adds to the woes. The impact of higher pet coke would reflect from Q1 FY26, whereas the regional sensitivity to pet coke surge that generally forms 55% of fuel mix. NHPC stock jumps after CLSA upgrades the stock to high conviction outperform and hikes the target to 117 rupees. The company's decadal green growth is validated by FY24 to FY29 regulations. CLSA hails the gaining share in hydro and new faster growth avenues, says the clean energy green stock is set to deliver. CLSA believes that the stock could double in 4 years. In Bernstein's note on quick service restaurants, the brokerage firm says that 2025 will be a turnaround year against a tough 2024. Bernstein expects consumer demand to pick up gradually in the first half and materially in the second half of 2025. The gross margins are likely to be range-bound. Bernstein expects Domino's and KFC to continue aggressive growth. On the other hand, McDonald's performance will be relatively calibrated. Adani Group, in its Q3 FY25 portfolio performance, achieves highest ever trailing 12 months EBITDA of 86,789 crore rupees. The company's trailing 12-month EBITDA jumps 10.1% year-on-year. Adani Group's core infrastructure businesses account for 84% of total EBITDA. Remember, Adani Group's core infra business includes utility, transport, incubating infra businesses, Adani Enterprises. Jefferies is bullish on the capital goods space, expects L&T, BHEL to drive order flow growth. The Q3 order flow in the sector rises 34% year-on-year, powered by L&T and BHEL. Defense order flows fall 79% year-on-year on high base. Power and defense have the highest visibility ahead. Jefferies believes that double-digit growth should continue. Pick Siemens, Thermax, L&T and HAL as the top picks. JP Morgan maintains an overweight stance on Cyient with a target of 1,750 rupees. JP Morgan believes that the company's new external CEO announcement augurs well for the company. Sukamal Banerjee, the new external CEO, faces an viable turnaround task ahead. The CEO needs to upgrade Cyient's portfolio from project-based deals to longer-term annuity deals. JP Morgan believes Banerjee will need to rework the guidance process to prevent missing guidance again or avoid. HSBC upgrades Tata Power to hold from reduce, hikes the target to 345 rupees from 300 rupees. HSBC says that Tata Power is improving execution amidst weak macro. Weak power demand, the pace of both PPA signing and Discom privatization and project execution drives the stock correction. Morgan Stanley has mixed views on chemical space. The chemical sector witnesses contrasting trends in Q3. Fluorine and diversified chemicals outperformed commodity or agrochemical names. FY26 beckons with harder plant runs and expanded capacity and operating leverage versus FY25. BCL Industries bags orders for ethanol supply tender from oil marketing companies. The company will supply 23,054 kiloliter ethanol for 135 crore rupees. Ethanol to be produced from FCI rice. Vari Energies gains 4% on the back on order win from NG India arm. The order win is for the supply of solar modules for 362.5 megawatt power. The supply of the solar modules will commence in FY 2025 to 26. The company current order book is 26.5 gigawatt for 50,000 crore rupees. JBM Auto receives a tender of 5,500 crore rupees for the execution of 1,021 electric buses and civil infra. JBM's electric buses to be deployed in around 19 cities. The order will be executed in 12 to 18 months. Servotech Renewable enters new partnership with French company Watt & Well. The deal is to develop and make EV charger parts in India. The company will manufacture power modules in India, whereas Watt & Well will provide full technical support. Travel Software as a Service or SaaS company rate gains travel surges on announcing a partnership with Nok Air. Nok Air is a leading budget airline in Thailand. It offers services to bolster pricing strategies via its advanced AI-powered pricing intelligence platform AirGain. Jefferies maintains buy rating on IGL with a target price of 252 rupees. Low-cost LNG feedstock sourcing improves margins and volume outlook. The brokerage firm believes that the APM gas availability is manageable and 2 rupees per kilogram hike is enough to protect margins. The IT sector, one of the largest white-collar employers, brace for a tough appraisal session. IT sector is traditionally the most sought-after job provider in India. In the recent past, has not been able to provide competitive salary hikes as it sees slowdown in business growth. Since FY21, annual pay hikes given by the top IT companies that are Tata Consultancy Services, Infosys, HCL Tech and Wipro have largely remained in single digits and have further dipped after COVID. Data sourced from market intelligence firm Anand Insight shows that TCS is reportedly set to roll out annual pay hikes in the range of 4 to 8% for the year, which is less than its usual average hike rate of 8% every year. Similarly, Infosys too will be rolling out 6 to 8% salary hikes for Indian employees, while overseas employees will get even lower single-digit increases. Google Pay, one of India's dominant digital payment platforms, starts imposing a convenience fee on bill payments made with credit and debit cards. This marks a shift that ends the era of free transactions for millions of users paying for essential services like power and gas. According to Google Pay's website, the newly introduced fee ranges from 0.5% to 1% of the transaction value, in addition to the applicable goods and services tax. However, transactions made directly through UPI-linked bank accounts remain unaffected. The change follows Google Pay's earlier decision to impose a 3 rupees convenience fee on mobile recharges over a year ago. Apple Inc. Introduced a new low-end smartphone called the iPhone 16e, priced at $599, aiming to revive growth after a sluggish holiday season. This phone goes on sale on February 28 and will cost around $170 more than $429 iPhone SE that it replaces. The new iPhone 16e comes with more upgrades over its predecessor regards to the processor, display, build quality, security, and more. The government inks contracts are worth more than 10,000 crore rupees with defense entities for procurement of area denial munition type 1 and high explosive rockets with enhanced range for Pinaka multiple launch rocket systems, seeking to enhance India's army firepower capabilities. The cyclical slowdown in India is bringing significant uncertainty for investors. This is what Trin Nguyen, senior economist of the Natixis, had to say on the current market outlook. In an exclusive conversation, Nguyen adds that a healthy correction is expected if the government ensures that the slowdown is temporary. She highlights the opportunity for India to start diversifying exports and expect RBI to continue to support liquidity conditions. BJP MLA-elect Rekha Gupta, a first-time MLA from Shalimar Bagh, was sworn in as the fourth woman Chief Minister of Delhi at a mega event at Ramleela Maidan. The BJP formed the government in Delhi after 27 years. Party MLAs Parvesh Verma, Ashish Sood, Manjinder Singh Sirsa, Ravi Rajendra Singh, Kapil Mishra and Pankaj Kumar Singh also took oath as ministers. Speaking exclusively to NDTV Profit, MP Chief Minister Mohan Yadav said that the state's new industrial policy will pave the way for investment and there will be an industrial revolution in the state, adding that MP is among the fastest growing states, growing at a double-digit rate. He further urged investment in Madhya Pradesh because it has robust infrastructure and skilled people. The Supreme Court stays a Lokpal's order that said that it has jurisdiction to probe High Court judges, calling the development disturbing. It has also issued notice to the centre, the Lokpal office and the complainant before the Anti-Corruption Ombudsman. Ministry of Information and Broadcasting urges over-the-top platforms to strictly adhere to age-based classification of content on platforms and comply with it with the IT Rules 2021. This comes on the heels of controversy surrounding content creator Ranveer Alabadia. President Trump attacks Ukraine's President Volodymyr Zelensky, calling him a dictator and deepening the rift between the two leaders. The comments came after Zelensky's reaction to US-Russia talks in Saudi Arabia, from which Kiev was excluded. Speaking at an FII forum in Florida, Trump said that the only thing Zelensky was really good at was playing Joe Biden like a fiddle. US President Donald Trump once again questions the United States' decision to allocate $21 million for voter turnout efforts in India, alleging that the country was trying to get somebody else elected. Indian cricket team starts their Champions Trophy campaign today by playing against Bangladesh. Rohit Sharma leads the team, having 3 spinners playing in Dubai International Stadium. The Bengal Tigers have won the toss and decided to bat first. Well, with that, it's a wrap on Market Express. Stay tuned to NDTV Profit. There's more lined up ahead.
Let me throw a few numbers out there just to set the context for this. At the end of January, you had the mutual fund industry that had assets under management of over 67 lakh crore rupees. About 30 lakh crore rupees were under actively managed equity mutual fund schemes. If you add hybrids to that, that's another about 8 lakh crore rupees. If you add index funds and ETFs, that's another 10 lakh crore rupees. It's a very substantial amount of money. But if you think about it, there are about 5 crore unique investors that are putting money into equity mutual fund schemes. So, as I said at the start of the day today, the industry is just about scratching the surface. Where does it go from here, and what does that picture hold? Not just for the industry, but of course, for the individual investor and for the country at large. Joining me on this panel, a very august gathering, and I would go so far as to say that they control a very substantial portion of that 67 lakh crore rupees. We've got Mr. Navneet Munot, who is Managing Director and Chief Executive Officer of HDFC AMC and the Chairman of AMFI. We've got Radhika Gupta, who is Managing Director and Chief Executive Officer of Edelweiss Mutual Fund. We've got Swaroop Mohanty, who is Vice Chairman, Chief Executive Officer of Mirai Asset, and Nilesh Shah, who is the Managing Director of Kotak Mahindra AMC. I didn't really need to introduce you, but I had to, if you think about it. Let me start, Radhika, with you. Mutual Fund Sahi Hai is a campaign that was incredibly successful, and it's got us to this point. The question is, what next? Because you need that next fillip to add the next 5 crore and the next 20 crore.
So, thank you, Alex, for having us. I think, the fact that you're having a panel as NDTV Profit on Viksit Bharat, and you're talking to eminent leaders from corporate India about CapEx, about AI, about so many important things, and mutual fund is a part of that, and our role in Viksit Bharat itself is a sign of victory for this industry. So, I'm very happy that this agenda is there. And, I'm wearing a Mutual Fund Sahi Hai brooch right now, but I really do think Mutual Fund Sahi Hai doesn't get enough credit.